Okay, we are up and running and ready to go.
Good morning, everybody. Sorry for the delay. I'm Eric Blank. This is the public session in the Public Service Company of Colorado's Just Transition, proceeding number 24A-0442E. We just concluded a highly confidential session. And for those people who have signed the appropriate documents, the transcript will be available for that highly confidential session. With that, I think, Ms. Shields, let's see if there's any preliminary matters before we conclude redirect of Mr. Martz. Any preliminary matters from anybody? Ms. Shields, you're up. Redirect of Mr. Martz, public redirect.
All right, Mr. Martz, the first thing I'd like to start with relates to the May Valley Longhorn Extension, or MVLE. Last Friday, Chairman Blank specifically asked you about whether the company would agree to applying the Pathway Project PIM to the company's $304 million cost estimate provided as part of your rebuttal testimony. Do you recall that exchange?
Yes, I do.
Okay, and just to make sure we have a clear record on this, does the company stand by the MVLE cost estimate provided with your rebuttal testimony as being the appropriate basis on which to establish a PIM?
Yes, we do. And again, the estimates enumerated in my rebuttal testimony, that cost estimate's the $304 million. So the way that we think about this is if an unconditional CPCN is approved as part of this phase one proceeding, we absolutely stand by that cost estimate that's attached as part of my rebuttal testimony. However, if we were to receive, kind of call it a continuation of the conditional CPCN, we'd need to reserve the ability to update that cost estimate as part of our phase two filing, or whenever we would request to convert the CPCN into an unconditional CPCN.
Okay. Would you anticipate that the longer that CPCN remains conditional, the more that costs are likely to go up?
Yes, I would. I think that's extremely likely, given the level of supply chain turmoil that we're all seeing and experiencing. I think it's thematically impacting all utilities across the United States, and we would anticipate that would impact our cost estimate for May Valley Longhorn.
Thank you. And then turning to the actual PIM structure, if you could help clarify and elaborate on the PIM structure for the MVLE project that the company is open or agreeing to be bound by.
Sure. So like I said before, we're very committed to establishing a PIM for the MVLE project, or I should probably spell it out, the May Valley Longhorn project. And we would contemplate that as being very similar or tracking with the Pathway PIM. The only element that we feel could warrant modification relates to the timing aspect that is in the Pathway PIM, which is included for some of the segments, giving the timing component of those segments. Here for May Valley Longhorn, this is a single segment, and the timelines contemplated wouldn't be attainable. So that's something that, as I mentioned last week, we'd want to confer with staff on, so we can develop tangible documentation of what we think the PIM would look like. And then our intention from there would be to file that into the pathway proceeding docket, where the pathway PIM is already in place and being reported on. And that's how we think about, establishing this PIM. But we're very committed to making this very clear and consistent.
Thank you. Last question on MVLE. Commissioner Gilman asked a question about whether there's any diversity of resources that the MVLE will tap into as compared to some of the other resources that the Colorado Pathway Project is tapping into. Could you elaborate on any of the potential benefits from the renewable resources that MVLE will access?
Yes, I can. So I think we got into this a little bit last week, but providing a little more detail here, we're very optimistic that construction of the May Valley Longhorn transmission segment as part of Colorado Power Pathway would help us access some of the best wind resources in the state. I think that's evidenced by the fact that in the 2021 electric resource plan or clean energy plan, we saw that wind resources in that area, which is specifically, I think, electric resource zone 3, were actually some of the lowest cost resources that were bid into our portfolio. Additionally, as we've modeled these resources as part of our updated ELCC and PRM study that Mr. Landon represented, we expect these ELCC or essentially these accreditation values to be higher than other regions of the state. So that's what gives me confidence that constructing this transmission segment would allow us to access some of the best, lowest cost, higher capacity wind resources in the state on behalf of our customers.
Thank you. Turning subjects a little bit, Commissioner Gilman asked a couple of questions about how the company might keep the commission informed of the company's JTS transmission stakeholder engagement. Would the company be open to filing the JTS task force study report with the commission, either through this docket or a miscellaneous proceeding?
Sure. So first off, yes, I recall the line of discussion, and the quick answer, the simple answer is yes. So, we typically file these kinds of reports as part of our supporting documentation for any CPCNs that would be related to these transmission projects coming out of the process, and we can commit to filing that report with this commission as part of any of those proceedings. Additionally, and I think we performed a version of this analysis as part of our 2021 ERP generation and transmission evaluation work, but I would further anticipate that as part of what's our proposed 180-day report, we can provide an update on the stakeholder engagement that has occurred at that point in time through that report filing, so the commission can assess status and understanding of what's been evaluated.
Thank you. Commissioner Gilman also asked some questions about the voting process at CCPG. Do you recall that?
Yes, I do.
Do the CCPG bylaws, by your understanding, establish a voting process?
Yes, they do.
Thank you. And any stakeholder, the JTS task force will be governed by those bylaws, correct?
That's accurate.
Commissioner Plant asked a couple of questions about the role of the independent transmission analyst, or ITA. Do you recall that?
Yes, I do.
Okay, I believe he generally inquired about how the ITA may be engaged in the various stakeholder processes that the company is going to engage in. Could you just elaborate a little bit more on that?
Sure, and I apologize if anything I said last week came across as cagey. Certainly wasn't meant to be. Just I view it as it's a relationship that the commission staff kind of possesses first and foremost. That's the whole point in them being an independent transmission analyst. And so one to just represent it's really the commission staff's relationship, and so we as the company generally view the ITA as an extension of staff. So to date, we've had a very constructive start, and I think we have a very good process that's working well currently. They've been a part of our analysis to date, and we've worked through and we've set up various information sharing methods on a secure platform, and that allows us to share things like system models, data sets, and things like that. So the ITA can essentially have full access to what we're evaluating, and we can talk through that in detail with them as well as with the commission staff. So as I discussed and testified last week, we have no intent to exclude the ITA from any stakeholder process that commission staff participates in. So long as staff views ITA participation as appropriate, depending on the nature of the discussion.
Thank you. I'd like to change topics a little bit and turn to some dialogue that you had with Chairman Blank related to transmission and large loads. First, Chairman Blank asked several questions about the transmission assumptions contained in the company's long-range rate forecast or long-term rate forecast, LTRF. Within that line of questions, he started to inquire a little bit about the extent to which large load customers may contribute to the company's mid and long-term transmission range cost estimates, which I believe are about $13 to $38 billion, depending on how far out you go. Could you elaborate a little bit on the extent to which you see large loads driving future transmission costs, particularly from a capital perspective?
Sure. So, well, first off, yes, I can elaborate. And what I'd say, Michelle, is that for this case, this JTS phase one, we've already studied multiple forecasts, both a base and a low, and that range, is essentially between 1 gigawatt of load and 2 gigawatts of load for these large load customers, if you will. So, we've talked about it this morning already, of the 9 large load customers that are part of the updated base forecast that we presented in our rebuttal testimony. We're very confident that these interim customers do not constitute a major need for transmission upgrades at this point in time, given that we've studied these loads. They'll absolutely drive new generation, and other forms of load growth on the system might drive additional transmission, but at this point in time, based on that updated base, we don't see them driving significant projects. I also would say that through our existing system impact study process and our facility studies process, we have a way of identifying and capturing and assigning the appropriate transmission costs that are associated with these large loads. And that's reflected in our base forecast as well. So I'd say, we have an existing process to perform the proper cost assignment until we have a large load tariff in effect. And, again, we can direct assign these costs, through those agreements. We also have the ability to exercise and utilize either upfront capital payments, like a kayak construction and native construction, or we can assess a separate service and facilities charge. And you can actually already see that in our existing tariff. You can see the service and facility charges that are already paid. And so we have a number of tools that we can use to assign the appropriate costs to those customers. And that's really, what's of primary focus for me on this phase one proceeding, is creating a path for the large loads that are represented in our updated base forecast, given their level, what I view as their high level of maturity and, very high likelihood of proceeding forward. So that's kind of the shorter term. In the longer term, I anticipate that, we will continue to have large load interest. I mean, our queue, and I think this is in my testimony in various places already. I mean, our queue is in excess of 6 gigawatts of load, even beyond what we're talking about in this base forecast. And that's load that we're already actively studying through our data center row cluster study, which we've talked about here before. But those are loads that we would anticipate would drive the need for some holistic system upgrades and uprates. It's a little bit too soon to say with precision what we think that those would be. But again, we are running multiple cluster studies to assess that system impact. And, that would be looking at things like, upgrading or reconductoring our parts of our 230 system to 345, or, looking for other ways to otherwise expand our capacity. And I do think too, that there's a possibility of identifying advantageous projects that can potentially increase capacity to service those customers, while also providing additional capacity across the Denver metro import-export constraint. And so, again, I think there's a lot of opportunity for us. That said, even though we anticipate those costs could be substantial, I think by studying them as a cluster, we have the opportunity to optimize those customers. Like we've talked about already. I think there was a line of questioning from Chairman Blank around, what that would look like. I think he was referring to some more southern substations on our system. However, we're already kind of optimizing off of that Smoky Hill, Harvest Mile area, that area immediately south of the airport, as a way to evaluate what those network upgrades can be. So, the way I kind of think about this is there's kind of the short term, right? We need to create a path to bring the approximately 950 megawatts of large load to service. I think the JTS phase 1 proceeding is a very good way to do that. Longer term, as we contemplate, this more prospective large load, our intention would be to study those loads and then bring that forward, that analysis forward as part of a large load tariff filing, where we'd be better positioned to understand the magnitude of the system costs, both generation and transmission together, and proceed with those.
Okay, and you mentioned an ongoing system impact cluster study around data center row. Is it your intent that is an analysis that can help inform a large load tariff filing and rate design structure?
Yes. Again, given how that's situated, it's kind of on the frontier of our system. It sits, on our Denver Metro import-export constraint specifically, and so we have an ability to kind of look at that in a unique fashion. I think that's different than a customer that come into like a highly networked area. And so, yes, Ms. Shields, that would be our intention, is to evaluate the economics of what that would look like. We could also, certainly appreciate the chairman's suggestions. So I think we could actually look at a couple different transmission system topologies and assess, what we think incremental or marginal costs could be for generation and transmission for those large load customers at a few different spots on our system. So yes, our intention would be to file that as part of our large load tariff filing.
Okay, I think that's a nice segue. The chairman had asked you a number of questions about some additional modeling that the company might be willing to conduct in support of its large load tariff filing. I think that you conceptually agreed, but you've started to identify a handful of other considerations that the company would be interested in modeling. Do you generally recall that dialogue last Friday with Chairman Blank?
Yes, I do. Okay.
Could you spell out for us kind of the type of study and the scope of study that the company would propose to this commission to conduct in conjunction with its large load filing?
Sure. So, again, I think a lot of what we're talking about is pretty consistent with what the chairman's suggesting. I think by looking at a couple different topologies, we could look at the area of interest that he suggested. I think there's other areas of interest as well, though. I don't think it would be limited to that area. There's other system challenges with those exact substations, but we're absolutely willing to look at it. I think data center row is important just because from the customers that we've already heard from, those customers already have some level of maturity around their siting assessment, and I think they've chosen those sites for specific reasons. And so given where it sits on our system, it represents a very good prospect for us to optimize for those customers, both generation and transmission costs. So I think overall, this is something that we're contemplating, or we would contemplate as part of our proposed transmission analysis. And so the way that I would think about that working would be, kind of in multi-parts. So the first thing that we'd seek to do is, based on the outcome of this case, the phase 1 proceeding, we'd update our generation modeling, specifically Encompass, based on the updated base forecast that we presented in rebuttal, and then also with our updated generic pricing assumptions. And then again, like we already kind of covered, we could include several, sub topologies, if you will, within Encompass to see if there's any specific benefit to solving for like a certain corridor, within our system that, could maybe relieve congestion as a concept. I'm still admittedly a little skeptical of the efficacy of that, but, something along those lines, looking at multiple topologies and sensitivities. And again, we can insert a specific load bubble that Encompass could solve for to see that delta in cost. The second part would be to basically import over those results from Encompass over to our transmission study, as I've already testified here previously, and it's part of my written testimony as well. Due to the timing challenges of JTS, we admittedly did not use the exact portfolios because we wanted to run those analyses in parallel to do a more fulsome analysis of the transmission system impacts. And so what we do for this analysis to further evolve it is we take the direct outputs from Encompass and then use those for the updated generation portfolio and dispatch assumptions, along with the updated load forecast. And we'd run a new power flow analysis to assess the transmission impacts from those customers. And so The last part I'll kind of talk about is like how I would see the forecast, tranches. So I think what we do to really be able to see clear delineation of like, how these customers can drive load and how we can further optimize. I think we contemplate like 3 sensitivities of 3 load scenarios, I should say. So probably one with no large load, just predicated like on the base forecast. One with the rebuttal large load added on top of, right? So we should probably get more precise, but this 950 megawatts to a gigawatt of load. I think we all know what we're talking about with that, though. It's right in that little zone. We went through that. It's part of Mr. Bailey's testimony, and we talked through it this morning as well as last week. So we'd add on top of the base model, the rebuttal large load forecast. But then I think what's of interest to me primarily is I think we need to assess a high large load based on several different data points. Our queue being a very significant one. Again, we have a queue that's 6 gigawatts and growing. And so, I would want to marry up, some composite assumption to create a large load for scenario using our queue as well as our data center row cluster study results to determine what that large load forecast would be. And we'd seek to do that here in early third quarter to maintain progress on that. And again, our intention would be to file our large load tariff by, I think, the end of January 2026. So call it January 31st, 2026. So given the amount of generation modeling and transmission modeling that we'd have to do, as well as the engineering analysis on system mitigations, we'd kick off that work as soon as we possibly could, pending the decision from this. And we'd parallel track, or I shouldn't say we'd conduct the Encompass modeling, the transmission modeling, then we'd file that into our large load tariff filing.
Thank you. Does this transmission study fit into any broader JTS process refinements that the company is contemplating or otherwise proposing in this case?
Yes, it does. So I think, we've essentially iterated on and further evolved, our multi-party framework. And I think when Mr. Eiley takes the stand later today, he's prepared to walk you through what that evolution looks like. So I think that the way that we're thinking about the updates to the generation modeling, so the Encompass modeling, as well as the transmission modeling and engineering analysis fits well within that framework and shows, a necessary evolution of how we're thinking about this case.
Thank you very much, Mr. Martz. I have no further redirect questions for you.
Thank you, Mr. Martz. You can be excused. Thank you, sir. I think we're gonna bring back Mr. Eiley, hopefully for not too long. Mr. Eiley, do you understand you're still under oath?
I do.
Commissioner Goman, did you have some questions for Mr. Eiley?
I think I just have 3 questions. Good morning again,
Good
Mr.
morning.
Riley. Just wanted to get quickly kind of a policy perspective from the company with regard to kind of the company's role as a bidder and the company's arguments for conforming bid policy and some of the PPA terms. So I was just wondering, at kind of a high policy level, is the company open to the commission endeavoring to create kind of corollary treatments for company bids in order to bind you all as a bidder to similar types of restrictions, especially with regard to future changes in price on your bids as you all are trying to add for other bidders?
I mean, initially, I think that's primarily a matter for the CPCN proceeding to grapple with. We bring you CPCNs for all the generation that comes out of the phase 1 and phase 2 process under 3617D, I believe. So I don't know if have a specific commitment to offer here, or did you have a specific item in mind from the conforming bid?
Well, I'm not going to get back into each of those different provisions, but wouldn't it be beneficial for the company to understand ahead of time if that was the company's intention rather than wait to CPCN to introduce that concept?
Again, I guess I'm struggling with the generality of the question a little bit. Maybe you can help me with that.
Okay, the company's looking to restrict the ability of IPPs to increase prices for things like supply chain risk, changes in law, tariffs, all sorts of things that the company themselves have even looked potentially to increase prices for in previous ERP. So I was just wondering if the company would be open to similar restrictions that you're attempting to put on IPPs with regard to future changes in price of your bids.
I don't know if I can commit to that here. We worked with the IPP community in the CEP delivery filing. I think we've shown an ability to work with the IPP community. They're one of the parties to the what we called the three-party framework. I think I understand the question and sort of the symmetry here. Every time we kind of compare IPP and utility-owned generation, there are similarities and there are also differences between those types of generation. I firmly believe that the hybrid model of both utility-owned and IPP generation has served Colorado's customers. They both offer unique things, and this is somewhat case-specific.
Okay. I've got a question on the CFFD. Just very broad regarding governance, and I'm not sure if you know this. Since I believe you're recommending a CFFD advisory board, and given that in the company's rebuttal you recommend no budgetary limit to the CFFD, I was just wondering if you could tell me anything about how you're envisioning the governance of that advisory board. Does it have to operate on a consensus basis? Is there a kind of simple majority rule? How should we view how that advisory board will be set up?
That's a good question. I don't know if we've set up the strict governance. We certainly discussed the members of the advisory board, but I don't know if we established the governance process, sort of voting rights on that. We did take the budget limit off as we saw this mechanism extending into a second supplemental RFP and sort of having a longer resource acquisition period. That was the reason for that. I don't know if we had testimony around or really a specific position around the governance piece of this beyond the composition of the board. I'm sorry, I can't be more helpful on that right now.
Okay. And then changing subjects again onto forecast changes with regard to each of the RFPs.
Yes.
So Mr. Goodenough and I went through, he expects to update the forecast prior to the issuance of the base RFP. So we'll start with the base RFP and changes that might take place there. I think we saw even from the direct to rebuttal cases, some significant changes in the company's forecast. So I think it's at least feasible. We could consider there could be significant changes again before the base RFP. And so I was just curious, what, if any, transparency does the company anticipate around how that forecast would be shared with the commission or other parties here prior to all of the modeling occurring?
Yes.
First, sticking to the base RFP.
Yeah. Thank you for that clarification and the question. Historically, we have provided an update on this forecast as we move from the phase 2 decision and the actual RFP. I'm sorry, the phase 1. Sorry, the phase 1 decision into the actual RFP. It's a relatively short time frame. It's typically 60 to 90 days between the phase 1 decision and the RFP, and we've usually provided that update in advance. I don't believe there's a specific rule provision on it, but we are certainly willing to commit here to providing that updated load forecast, say 30 days before the issuance of the RFP to the commission. So it'd be submitted in this docket. We are willing to do that here.
Okay. And would that be detailed to such an extent that especially around, I mean, I think what we're seeing is a lot of the complications here are around very different forecasts than we've seen in the past, especially around BE, especially around large loads. Will it be detailed enough to the extent that people, the commission parties can really understand the differences in the forecast of those components?
Yes, I think that's certainly the intent. As Mr. Goodenough testified, and I did discuss this with him a little bit as well, that it's basically a full refresh of the load forecast, inclusive of some elements. We've discussed those a bit with refinement on EV and PHEV forecast. So the intent is to provide a good amount of detail on the drivers in that load forecast 30 days before the RFP.
Okay. In talking about EVs and PHEVs,
Yeah.
is it your intent that this forecast refresh would segment and separate the forecasts for full battery EVs and PHEVs?
Yes. Also, I don't know if this came on the record or not. I'm sorry, I can't remember. In 2024, I think there was a question on the split, and our data suggested that it's 70% EVs and 30% plug-in hybrid electric vehicles. So historic data, but yes, the EV forecasting is looking at some new load shapes that have been updated since the last ones were, I think, in a 2019, 2020 type vintage, creating additional granularity to encompass forecasting of both EVs and plug-in hybrid electric vehicles. Also looking at the new time of use structure and how they affect those electric vehicles.
Okay, and that split you're talking about, 70-30, is in registrations or in like energy sales?
I believe it's registrations. I think it's vehicles rather than.
Okay, got it.
Yeah.
Do you plan as of now to incorporate in that forecast refresh for the base RFP differentiation? It sounds like 70 battery EV, 30% plug-in hybrid EV, and provide those with different charging and usage patterns more accurate to their types.
Yes, and that 70-30, again, that's a historic value. It was a question from one. I apologize. One of you commissioners asked that question. I wanted to provide an answer here. That's a historic snapshot of 2024. That 70-30 can be independently forecasted going forward, and the energy and demand forecasting on each of those two major different classes can be incorporated into that forecast.
Okay. And so understandably, with kind of their different needs, that would represent like a different charging duration for the plug-in hybrids versus standard EVs.
Yes.
And then will the company also presume a higher level of flexibility for plug-in hybrid EVs, given that they have an entirely redundant fuel source?
I certainly acknowledge they have a different and redundant fuel source. Whether or not we have enough data or the programmatic assumptions to differentiate on flexibility, I don't know that with 100% certainty.
Would you agree with me that it is a significantly more flexible charging need?
Potentially. I mean, these cars are on the similar types of charging equipment, whether it's a plug-in or an electric or pure electric vehicle. I don't know if the technological capability of the charging equipment and the current maturity of the programs will distinguish between those two. Certainly can take the question back to consider.
Okay, thank you. And then now same question for the supplemental RFP, and what are your expectations around disclosure of the forecast, changes in assumption, etc. before the supplemental RFP?
Right. So I would say that there would be a progression of information. And what I mean by that, going into that second RFP, what we should know, and you should know by that time, is whether and how many times and at what megawatts we activated the incremental need pool. So that would be new information. That would be fully known to the commission through such things as the ERP annual report process. I would expect that you would have full knowledge of any failed bids and replacement bids that again triggered the activation of the incremental need pool. So you'd know those things, and then we would provide a similar and detailed update on the sales and demand forecast going into the second RFP. So in other words, you should have a good look at the general load and resource situation heading into that second RFP. And certainly willing to commit to that being at least 30 days in advance of that second RFP beginning.
Okay. this is probably my last question. Given the potential that we've already seen for significant swings, especially in large load customers, but potentially in BE forecasting as well, you know, after the litigation of several of those crucial kind of
Yeah.
these application filings that could inform BE. What if any opportunity you see, especially if there are major changes in those forecasts for some intervention or response to those forecasts before they go and get modeled? I think acknowledging the very different situation we're in here than in previous ERPs with the potential for large swings in forecast.
Yeah, good question. And thank you for reminding me about the potential programmatic changes as well. I forgot to mention that on my list of updates we'd be looking at. So that would incorporate any evolving knowledge, both from the market and from policy or regulatory decisions, and that would be across clean heat aspects, demand side management, potentially EVs. It just depends on the maturity of that information. But certainly we'll have more information on markets going forward, especially, for instance, the beneficial electrification market. That's still pretty nascent in terms of our increased level of rebate offerings and programmatic offerings there. To your question, I mean, at this point, like our view is that this is structured following the phase 1, phase 2. As we've discussed in this case, we've built this, what we think is a pretty flexible framework going forward in the initial RFP, the base RFP and the supplemental RFP. And again, with all that additional information, there should be really a lot of transparency going forward. At this point, we weren't planning to offer sort of a comment or review process necessarily. If there's a significant concern, there are always tools in the regulatory rule toolbox to kind of address that. But if we need to offer it slightly earlier, that could be a possibility. I hesitate to do that too much because I think we're running straight into the ability to incorporate some of the policy-driven or regulatory-driven information. So my gut is telling me 30 days is about right for that updated forecast review, if you will. We weren't at this point, we weren't offering sort of a comment and review step.
Yeah. I'm just trying to think through in advance, really the unique situation we're in this ERP that we have not been in others where we could see some very large swing that garners more attention than it has in the past. And I don't want us to get caught flat-footed on what a process could or should be if there are big surprises in those forecasts.
Yeah. I genuinely appreciate the question, and that's why I was trying to offer sort of a kind of a refresher and what that, in my view, overlooking many of these cases, what that set of information that would be updating our forecast and when we could provide it. So I was kind of focusing more on the transparency, but I do understand the question. We're leery of delaying the process through a review process here at this point, I would say. I think that's the dilemma.
Yeah, I'm just worried if we think about it not at all, that it could be a big change. It could be controversial, especially given what we've seen thus far in load forecast that varies from the past. That could delay even more if we're not at all ready for the potential that people take some attention to the increase, improved forecast.
Yeah, I don't want to debate you. I'm hoping that what we see as a really significant evolution of this phase 1, phase 2 process was effectively 2 phase 2s, and then the adjustments in between can really put us in a different position for that type of a question going forward. So,
okay, thanks, Mr. Riley. Those are my only questions, Chairman.
Thank you.
Thank you, Commissioner Goen. Commissioner Plant.
Yeah, hi, Mr. Riley. Good to see you this morning.
Good morning. Good to see you.
I just had a couple of quick follow-up questions around the tri-party process, and spoke about this a little bit with Mr. Martz. I'm trying to understand in the establishment of the 80% is kind of triggered off of negotiations for the IA and the ESA, and the 90% is signing the IA and the ESA. But what we've heard is that for projects that are interconnected on the distribution system, there is more of a construction agreement and not an IA and an ESA. So I'm wondering, what is the process that the company contemplates for evaluating the status of the projects that are on the distribution system?
Well, it's similar but parallel. Similar but parallel, I guess. I mean, we're flowing through those processes. Some of that metric doesn't work quite as well for those, because as we've discussed, it's, the PG customers are really practically the same as what we've called the strategic economic development customers. And one of the characteristics of those customers is that they're here, they're local. So is it a land purchase? That's not necessarily, they already have the land. They have control of the land in a lot of ways. So that's an example of how it's a little bit different. With the difference between an ESA and a construction agreement, that's something that we could contemplate well, the PG tariff has some of the guidelines already, I guess. And then whether there's a specific contract like an ESA and PG, I think is a little bit beyond me commercially. That's certainly true in the TGs, but they are local, they're regional. They are in active discussions with us on developing those loads. We believe they're real, as Mr. Martz discussed a bit. There are some timing adjustments. We're in real-time conversations in terms of what is actually possible on the timing of serving them. And also, I'd say we're moving a little bit away from this nomenclature of the percentage, and we may talk about that shortly. But
we were just getting used to it.
Well, we're not changing it completely, but I think it had sort of lent, in my personal opinion, it had lent a little bit of a artificial precision on those probabilities. It's really about what's really true about is that the stage of maturity of that commercial project is increasing and evolving over time, and usually to a higher maturity level, unless there is a back out. So we're trying to employ similar processes for the regional, locally strategic economic development loads. And really those loads are much more what we would have done for decades for these types of loads. We would contemplate a new energy demand or a new service demand or requests, I should say, from the customer. And we're trying to plan to that and have those active conversations. I think what has changed this conversation is the new large data center loads. And they're so large that we've had to sort of improvise new process. And frankly, we're doing it in real time. I mean, you and I we're literally discussing that. That's what's changed that conversation.
Yeah.
These regional ones are a bit smaller. They're PG. It's in our history. It's in our culture. It's in our duty really to serve these customers. And that's how we've handled them. The creation of this new kind of levels or probabilities was driven by the larger data centers and the need to assess those with the uncertainties that those are embedding a little bit more. So it's just a different process, but it operates in parallel, and I think it's more consistent with standard or historic business practices in these areas.
All right. Thanks. I don't have any further questions.
Thank you, Commissioner Plant. Welcome, Mr. Riley.
Thank you.
Mr. Martz outlined a process to study the impacts of large new loads on transmission needs and suggested that the company might file it as part of the January 2026 advice letter filing. Given the rate and other issues in that case, could the company look at maybe filing it earlier in some notice and comment process that could later be included in the advice letter filing? And I'm not trying to pin you down to answer now, just maybe in your statement of position, if you could help us see if we could simplify that advice letter filing. I think it's going to be a very complicated case. So if you could take a look, would you be willing to take a look at that?
Yeah, absolutely. And I think, Mr. Martz and our legal team and I, and, Mr. Martz overseeing his planning team is trying to assess what's possible and when through those, through the actual analytical work, right? Totally fair question and something we're willing to look at. Again, we're a little bit conservative as far as offering deadlines and dates to make sure we can hit them typically. And we can certainly look at that question. And I believe there's some stakeholder process in front of that large load tariff that we're contemplating as well. So I think that that is a place to discuss some of that information, even if it's not completely final. But even if it's directional, we can start to have those discussions with parties, with trial staff and the energy office, UCA, et cetera, et cetera.
I appreciate that. Just one that a few questions on that exhibit you filed. Based on the Public Service Company SEC 10K filing in 2024, Mr. Goodenough acknowledged that the average Public Service Company residential rate in 2024 was 13.82 cents a kilowatt hour. Subject to later check, would you accept that, or would it be useful to pull up the 10K? I think it's in this record.
I think that's exactly right. The last time I looked at the 10K.
Thank you. Can we pull up hearing exhibit 132 and go to the class allocation sheet? And I want to go to line 113, cell L13. If you could go scroll down and take a look at that. And if you could, yeah, it's in green. And if you can get a little closer so we can all see it. Do you see how in cell L113, the average residential rate in 2031 at the end of the wrap is 20.33 cents per kilowatt hour, or $0.2033 per kilowatt hour? Is that right?
May I ask just one navigation question here?
Yes.
I just want to make sure. So we are looking at our base forecast, which was originally in the distribution system plan. We brought it into the record here in the JTS. So this is still the base forecast for rates, right?
Correct.
But added the class cost breakout within DSP. Okay. And I do see that, sir.
Yeah, thanks for laying a better foundation. Appreciate that. So if we just subtract the 2024 from that number, the 20.33 minus 13.82, then the rate increase during the wrap is 6.51 cents per kilowatt hour. Subject to later check, would you accept that math? And
that's just the subtraction from the 2031 estimate here and the what's reported on the 10K.
Yes.
Well, then the 10K was 2024 vintage.
Correct.
Yeah.
Yeah.
I accept that. Thank you.
Okay. And if we divide through the 6.51 cents per kilowatt hour by 13.82, the 2024 rate, that results in an average residential rate increase of over 47% during the wrap. Again, would you accept that math? I'm just dividing 6.51 divide 13.82.
I'm accepting the math. I think I'll add to my testimony that this relies on all these investments coming in per those years. I mean, that is our current estimate in the sales forecast. But yes, I can accept your math on that.
Okay. And I think, and this is based on your direct case assumptions. And I think as we discussed earlier, there's 70, I think you testified there's a 74% cost increase in wind, 84% for solar, over 40% for CTs. So if we increase the resource pricing assumptions in this spreadsheet by those percentage increases, then this average residential rate increase would be higher, assuming all other inputs were the same. Is that fair?
It's fair.
Okay. And then can we go down 2 lines, line 15, and I think this is the average rate for C&I customers at transmission voltage. Do you see that?
I do. Yes, thank you.
And in cell E15, the average rate is 7.87 cents per kilowatt hour in 2024. Do you see that?
Yes, I do.
And then I think the box Ms. Federico on is, do you see it's 7.89 cents per kilowatt hour?
Yes.
So C&I transmission rates are basically flat over the wrap. Would you accept that?
I would, and I would elaborate that the pricing team and you can see it on this tab. We don't have to move here, but they endeavored to apply current cost allocation policy, including as decided by this commission in recent cases, to project that the application of those policies going forward by class in a reasonable way. So there was no effort to try to estimate or evolve the policy, which I think is exactly where the large load tariff proceeding might consider directions going forward. But yes, I would acknowledge the numbers there.
Okay. And I mean, I guess my last question on this is just sort of exactly where you went, which is you can see the commission's concerned with this larger residential rate increase while the CNI transmission rates are declining in real terms. And maybe that just highlights the need for that January filing, but
I mean,
any comments on on this, other comments on this trend where, you know, residential rates are very likely to go up greater than 50%, while CNI transmission rates are declining in real terms?
Sure. A couple of comments. Again, we're following the cost allocation methodologies as we have decided them now, as the tariffs and relevant rate cases set them in place. And the phase two was the electric phase two, the last electric phase two was the most recent place we did that. These are assigned out based on fairly logical cost allocation principles. For instance, one of the things that's certainly affecting the residential class that would not touch the transmission class, the CNI transmission class, is the increased investment in the distribution system. So that will flow proportionally more onto the residential class as we increase that. And it's to provide a variety of services that are benefiting a lot of residential customers. We have something like 140,000 electric vehicles. We're hopeful of moving the beneficial electrification market, you know, taking a big leap forward under this and future clean heat plans. And that's the distribution system investment that's implied by that, which we brought forward in the DSP. And so you see some of that on there. But to your question, I acknowledge sort of the optical concern and would certainly offer to work with the commission in communicating what that means and why it's so, because certainly our customers may start to ask these types of questions more directly than perhaps they have as between classes.
And one last question on this line. And as average residential rates go above 20 cents a kilowatt hour, is it possible that some residential customers will increase their investments in efficiency, distributed generation, or decline to pursue beneficial electrification in ways that could further reduce sales and maybe further reduce residential rates? So it's well more than an optical concern. And you know, what's we've seen in California is, you know, rates have more than, you know, more than doubled, tripled over the last 12 years. So any comments on that?
I hear the question. I don't agree that energy efficiency is likely to reduce residential sales. I've monitored that for over 20 years. And it just hasn't happened. I think it has slowed the growth of residential sales.
Right.
So could it increase investment in DG? Potentially, yes. I mean, all else equal, that's what theory might lead you to think. But all else is not equal. We have federal legislation that seems to be poised to shorten the availability of critical tax credits for customer-sited DG, for instance, both potentially solar and batteries, I believe. Nobody knows the answer on that yet. So other factors are in play here. I share your worry about making these rates higher and discouraging the things that we want to occur, such as electric vehicles. I think that's absolutely a great solution for carbon, for the economy, and for customers. I think beneficial electrification could be really, really valuable in the same way. So I think it's, you know, again, this is a pretty static, high-level look. I do appreciate how you're thinking about the general trends and wanting to manage those trends. And I think we have some of the tools in place that this, annual sort of annual snapshot doesn't reflect. So we have time of use rates that we're trying to help customers with affordability if they can, use those rates and shift their usage. We have a number of programs on low, not income qualified programs. We've expanded our assistance programs. Since I've been in regulatory for the last 7 years, we've greatly increased the number of income qualified programs across efficiency, across res programming, across electric vehicles, across beneficial electrification. Those are now appreciable parts of each of those budgets, and that's the general expectation. So I think we're managing this more than perhaps that spread and that increase might show you when distilled down to this annual average type of number. And to your point, I think there's some room for consideration of some of these ratios, and I agree it's more than optical. I didn't mean to diminish that or sort of underweight that. But we have some rate tools that we could consider here going forward.
All right. You can take this down. The last question I had for you is if the PUC chose to move toward a conforming model offtake contract, how would we get to a PUC approved contract on this record, given that we haven't seen model language from the company's rebuttal case? Do we need some follow-up notice and comment process? I'm concerned that the gap between the company and the IPPs is still pretty large. We don't have actual language, and for me, I'm going to struggle with how to resolve this on this record. So any thoughts on process? And I'll ask Mr. Pierce and Mr. Monson the same question.
I hadn't prepared kind of a concession.
Just so you know, Mr. Bornhoff,
I hear the question and I hear the concern you're voicing, and we'll certainly reflect that. We'll take that into consideration. We have before us the statement of position process step here. Obviously, we've had dialogue with CIEA that's represented in the framework. Notably not included, and I don't want to overrepresent that, notably not included in the framework and critical to CIEA's alignment on the framework is we did not resolve the conforming bid piece. I think we could continue a dialogue there to see what process step may increase your ability to make a decision confidently on that. I don't know if I can commit to that right now. I don't know exactly how that would flow into either pre-SOP or post-SOP matters. But we're marking the question diligently.
Appreciate that. Mr. Larson, redirect.
Yeah, thank you, Mr. Chair. Good morning again, Ms. Riley.
Good morning, Mr. Larson.
I want to start with actually with conforming bid, the conversation you were just having with the chair, and you also had with Commissioner Gilman earlier this morning. So starting with Commissioner Gilman's questions, conforming bid requires bidders to bid to the terms of the RFP and the terms of the model PPA. Is that your understanding?
It is my understanding, but it's also my understanding that it's not 100%. Here's the document and sign it with no changes. To me, the discussion is sort of in the realm of what should be changeable and what shouldn't be.
And with respect to company bids, company bids do not sign a PPA. Is that your understanding?
They do not.
But company bids still have to bid to the terms of the RFP in submitting their bids. Is that right?
Yes.
And there was also a discussion about pricing flexibility or pricing adjustment with Commissioner Gilman. You recall that?
Yes.
And during your prior time with us in redirect, we put in hearing exhibit 131, which was the company's response to the staff tariff adjustment proposal. Do you recall that?
Yes, at a high level.
And in terms of adjusting for tariff impacts, that would apply to both business models, whether it was IPP or company owned, and operate sort of on top of the conforming bid policy. Is that how you understand it?
I do. I think our response, and it was in my rebuttal, was to sort of reflect an openness to having that conversation concerning a tariff driven adjustment process, and on a consistent, in a consistent basis between utility owned and IPPs, which is, in my view, how we've conducted the CEP delivery process.
And with respect to the discussion with Chair Blank just now, is the company committed to trying to file a red lines model PPA, starting from the as filed version, but then incorporating the comments that Mr. Bornhofen had provided as part of his rebuttal testimony with its statement of position?
My understanding is yes.
And we'll ask COSA and CIA witnesses, preview of cross-examination, but we'll ask them if they're willing to do the same thing. And if they were, then the commission would have multiple versions of the contract to kind of select from or review in establishing a conforming bid policy. Does that sound right to you?
Yes, if those parties are willing to do that, that would be true. And certainly the company's willing to do that with the SOP.
Thank you. One question on carbon-free future development. You had an exchange with Commissioner Gilman this morning about the governance associated with CFFD. Do you recall that?
Yes.
And I'll represent to you that Mr. Tomjanovic addresses the governance in his rebuttal testimony. And it's a simple majority to approve a proposal to come out of CFFD from the advisory board. Do you have any reason to disagree with that?
No.
And then is it your understanding that the commission would have a window to review any proposal advanced by the advisory board prior to the funding actually occurring?
Yes, my understanding is the commission would review those.
Thank you. Just 4 other brief areas responsive to discussion this morning. And Ms. Federico, could we pull out this series of demonstratives to work through in order to ask these questions? Could we call up what I believe has been marked as hearing exhibit 146 in Piesco's box? Thank you. And Mr. Eiley, you have before you what's been marked as hearing exhibit 146. 4 areas from discussion this morning that we're going to talk through, and I'm just going to preview to you what they are, and then we can go into the questions. So first, we're going to discuss generation price sensitivity, following on your discussion with Chair Blank here on the first demonstrative. And we don't have to step through them, Ms. Federico, as we go through quite yet. Second, we're going to discuss the difference between the updated base forecast and the low forecast. Third, we're going to talk about some of the commitments that Piesco has made over the course of this proceeding and how they fit into the framework. And then finally, we're going to talk about an update to the JTS Phase 2 framework, responsive to questions and sort of the evolution of the case to this point. Okay.
Thank you.
So let's start here on slide 1. And I think this builds on the discussion you had with Chair Blank this morning. Could you describe what's represented here on this first page of hearing exhibit 146?
Yes, so there are a few things, and what is new is that after I had an initial discussion with Chairman Blank concerning the price increases on generators, which was originally brought forward in Mr. Landrum's rebuttal testimony. We flowed those through and made an effort to flow those through a long-term rate forecast model, which is otherwise actually identical to the ones that I was just discussing with Chairman Blank a few minutes ago. And so what that really showed over in the left two data columns here is, I was curious to understand how this would work. And I don't know, this isn't necessarily addressing some of the, the rate change ratios, if you will, that Chairman Blank is looking at, and maybe the capital cost pieces that Chairman Blank and everyone is looking at. But it does address the question of whether there remains a value to having large load customers enter the system under current cost allocation policy. And the answer is yes. What this shows is that the difference between the base and the low originally was about 3% on a CAGR basis for 5 years, about 0.8 on a 20-year basis. And with the updated gen costs, which are higher, significantly higher, and holding those in the model, which is over, even over a 20-year time frame, you have fairly similar differences between the CAGR results of these two models. In other words, adding large loads provides a value to customers through that process, and then the rest of it is kind of showing that on a rate basis. So the left two columns are class averages. The right two columns look at the residential customers, and the value there is somewhere between 1 and 2 cents of value to the residential customer of bringing more large loads in. Noting that this is the low load forecast in our original base forecast. That's how we constructed the LTRFs. Where we are today is that updated base with the potential to add things through the incremental need pool and the supplemental RFP. And then showing sort of the value on a bill basis to the residential customer. It's $7 or $8. It's roughly equivalent to what the customers are paying in an SNF charge today.
And that's what's reflected in the bottom blue box below the four, the two CAGRs and the two rates. Is that right?
Yes.
If we could flip to the second demonstrative, please, on page 2 of Hearing Exhibit 146. So, Mr. Eiley, I'll represent to you that this is a public version of Hearing Exhibit 141 with both a load forecast identification as well as some color-coded bins. So could we just start by describing the color coding that exists within the table that's on the left side of the graphic?
Sure, and this is consistent with how we've testified over the past few days as well. We see this 944 megawatts of updated base larger loads, if you will, in 3 bins. One is the strategic economic development bin, local customers, not data centers. The second is existing loads that are increasing their load. Those are data centers, but they're existing customers. And then there's a third one, which is really one customer, which is a new customer, not on our system currently. It is a data center, and it is viewed as highly probable, but not having the ESA at this point. So really, it's kind of demystifying the difference between the low load forecast and the updated base forecast.
Yeah, and in the interest of continuing to demystify this, I want to just talk about what the differences are between the low forecast today if the RFP were to start and the updated base forecast today if the RFP were to start. Okay.
Yeah, the difference is really the strategic economic development loads. Again, those local customers that are existing, and then the one data center, customer G, which is a newer customer, but with a strong interest in being served here.
And that's because today, based on customer S's progression, it would make it into the low forecast. Is that your understanding?
It is my understanding that it is moving in that way. Yes.
So is it fair to characterize the difference between the updated base forecast and the low forecast as being one new data center, which is customer G, and then the strategic economic development opportunities with the exception of customer H, who is also in the low forecast?
Yes.
Thank you. Ms. Federico, if we could move to the third graphic in this series of graphics. So, Mr. Eiley, before you is the company has made a series of commitments over the course of this proceeding. And what this graphic attempts to do is put those commitments into context, but then also put them into swim lanes, with the base RFP process going there across the top, the supplemental RFP process going through the middle, and then the transmission process, which has not changed in any material way, going across the bottom. Do you see all of that?
Yes.
And the three commitments specifically that I want to talk about are, first off, the filing of the model IA ESAs that incorporate large load principles. That was a commitment made by Mr. Bailey. Do you recall that?
Yes.
And then the second one is the generation transmission study that would inform the large load tariff, the one you were discussing with Chair Blank, and that was also discussed by Mr. Martz. Do you recall those questions and discussion?
I do. Mr. Martz discussed the details on that better than I would be able to. And then Chairman Blank and I had a conversation about the timing of it.
And the third one goes all the way back to when Mr. Landrum was testifying, where he discussed the ability to provide a re-optimized preferred plan or re-optimized approved plan after the phase 2 decision on a JTS base RFP, where you would re-optimize around a lower load scenario, and that would come in as a compliance filing. Do you recall that discussion with Mr. Landrum?
I do recall that, and that is our commitment in that upper right green box. And our hope is that that can address these questions of marginal or incremental cost driven by these customers, if we can make that contrasting showing. And hopefully the long-term rate forecast models and how we discuss them also provide some of that insight to guide those decisions.
So thank you. So starting with the JTS base RFP, I'm going to direct you to the blue box that says filing of model IA ESAs incorporating large load principles. That would occur here in the near term. Is that right?
Yes.
And then from there, we would go into the JTS base RFP process, phase 2 decision, and then that load differentiation reoptimization that we were just discussing would occur. And that's kind of the extent of that swim lane. Is that your understanding?
Yes. Yes.
And then as we start looking towards the red box from the JTS phase 2 framework, which exists there on the far right, which is the JTS supplemental RFP, the large load tariff would be filed, well in advance of the JTS supplemental RFP. Does that sound right to you?
It does.
And then the study is contemplated in the far left box in the second row that you were discussing with Chair Blank and that Mr. Martz also discussed with the commission this morning.
Yes, it is.
And that kind of constructs that swim lane going across the middle there. Is that right?
Right. It really kind of increases again, a little bit consistent with how I was discussing the updated load forecast with Commissioner Gilman a few minutes ago. This is another illustration of additional information, additional insight that will be flowing into that second supplemental RFP.
And one of the key things in the middle swim lane is that the large load tariff would be applying to large loads taking service via generation acquired through the JTS supplemental RFP. Do you see that?
Yes.
And is that consistent with your understanding?
Yes, it is. Certainly to move through that process with that information that Mr. Martz discussed. Agree with Chairman Blank that it's going to be a fulsome discussion around these issues. And the intent is to complete that such that we can conduct that second RFP with the customers, the large load customers, the commission stakeholders and the company all having kind of a higher confidence understanding of what these large loads mean to the system as we go into that supplemental RFP.
And then the JTS two-step transmission process is going across the bottom, and we have the purple box and then the call out box from Mr. Martz's rebuttal testimony. And that there's no adjustment to that based on the commitments we've discussed. Is that right?
That's right. We've shown it here for really chronological context. It's, there's a fair amount of complexity here. I'll acknowledge that. And we're trying to just illustrate how these things will occur over time and how they appropriately inform each other across these three channels of leading to major filings and processes.
Thank you. If we could go now to the fourth graphic in this series of demonstratives. Thank you. If we could just center it a little bit, I think the bottom might be a little cut off.
This is
Sorry.
all there is. I can make it bigger if you want.
Only if Mr. Eiley needs it bigger.
No, I can see it just fine. I don't have anything cut off, actually. Thank you.
And you alluded to this in your discussion this morning with Commissioner Plant, but there've been a couple of adjustments to the tri-party framework over the course of this case. Is that your understanding?
Yes.
And the first one is changing the probabilities to steps, which is reflected in the first bullet and then shown in the call out box to the right. Do you see that?
I do.
And can you just briefly describe what's happening there?
Sure. The steps themselves remain the same. It's really the labeling, and as I was hinting at earlier, sort of moving away from this implied probability and just identifying it for what it is more directly, which is a level or a step of commercial maturity on a particular large load moving through that multi-step process. I think that just represents more accurately what we're discussing here.
Thank you. And then with respect to the second adjustment, which is the second bullet, this puts in place an additional layer of process or a new process for incremental need pool projects that are activated to serve large loads in aggregate over 500 megawatts ramp within the relevant wrap. You see that?
Yes.
And can you describe that addition to the framework?
Sure. Well, stepping back slightly, so the first two boxes of that framework are really the same. It's just that the second box didn't have a top end, if you will, in terms of megawatts. So the first box and the second box are the same. In further discussions with parties, we added this third piece in case we had a very large load, for lack of better phrasing, of 500 megawatts size or greater. We acknowledge that that's a pretty big thing to accommodate in this process. We want the ability to meet that timing need if we can, and this is all through the incremental need pool process. And so we agreed to add in more review here, in effect, to contemplate such a large load through the use of an application process, which I guess we would encourage that to move through 120-day timing on an application type process here, but it would have all the steps of an application. So you have your discovery, answer, rebuttal, et cetera, steps there. So in the event that we have a load that large seeking service through the incremental need pool, this would be subject to a full application process.
So given this adjustment, is it fair to say that there's three different processes that could come out of incremental need pool activation? The first being under 100 megawatts or a bid failure replacement. There's a notice with a 14-day comment period. You see that?
Yes.
And then there's 100 megawatts to 499 megawatts. That would be a notice, 45-day comment period, 10-day reply. You see that?
Yes.
And then over 500 megawatts would be this application on the 120-day statutory clock.
Yes.
Is that kind of describe the universe?
It does describe the universe. And the critical piece is the commission gets a vote on each one of these three.
Yeah. And in terms of activation, it'll be based on loads in the aggregate for that activation. Is that correct?
Yes. Loads could be aggregated to trigger those threshold levels.
So, Mr. Chair, at this point, I would move the admission of hearing exhibit 146, and then I just have a couple of additional questions for Mr. Eiley.
Can you take this exhibit down? Do parties have concerns? Hearing on Ms. Chong? Nope, hearing none, so moved.
Thank you. And could we call up hearing exhibit 144 out of Piesco's box? And Mr. Eiley, I'll represent to you that this is hearing exhibit 144, which has been pre-marked in Public Services box. What this document does in red line format is adds in the change to the probabilities to steps, and then also the 500 megawatt plus process in a red line form. And have you seen this document before?
Yes.
And I'll ask Mr. Hay this question on cross-examination, but is it your understanding that with these changes, the Colorado Energy Office is prepared to join this framework, making it a quad-party framework as opposed to a tri-party framework?
That's my understanding, and I will welcome Mr. Hay's confirmation if appropriate.
So, Mr. Chair, we have hearing exhibit 144, which is a red line version. We have hearing exhibit 145, which is a clean version, and they're modified SJD 9s, which was hearing exhibit 2606. I would move the admission of both hearing exhibit 144 and 145 at this time.
If you could, any concerns from the parties, and if you could take it down so I can see the boxes, Ms. Federico. Mr. Bunker.
Yes, one concern, and that is that this is filed at this late date as we are 8 days into a hearing. But the second is, were there changes besides the addition of CEO on the first page in this red line document? In other words, are there changes later in the 4-page document?
Mr. Larson and Mr. Barroso.
Yeah, I can respond to Mr. Bunker, Mr. Chair. So the only changes are red line changes to effectuate the steps as opposed to the probability. So 10% becomes step 1, 20% becomes step 2, and then a brief paragraph to add an application filing if there is an update or if there is a incremental need pool activation for large loads over 500 megawatts. Those are the only 2 changes to the document.
Mr. Bunker, anything else?
Still continue my concern that this is brought in on literally day 8 of this hearing, and that we frankly we learned about the original tri-party document the day before the hearing, and now it's changed to this quad party document on day 8 of the hearing. So I'll continue to voice that concern. In addition to, obviously, some of the other concerns that parties have cross-examined regarding this document in general.
Mr. Barroso?
Yes, thank you, Chair. I think just echoing the concerns raised by Mr. Bunker and requesting the same clarification as we did with attachment SJD 9, that this framework is neither a settlement nor a stipulation.
And I can respond to that, Mr. Chair, if it's helpful. It is neither a settlement nor a stipulation. And to respond to Mr. Bunker, these changes are relatively minor in the context of the framework. These are not substantial changes. They are a change to a process on the incremental need pool when the incremental need pool activation is associated with a very, very large aggregated large loads, and that is it.
Ms. Kutzer?
Yeah, Mr. Chair and Mr. Larson, I'm wondering if it would be possible to just walk through these minor changes, especially with staff witness Dalkey and Mr. Hay coming up. Some of us intend to ask those witnesses questions about this framework, and having an understanding going into that cross-examination may save us some time. So could we spend just a couple minutes walking that through? That's my request. Thank you.
I'm happy to do that with Mr. Eiley right now, Mr. Chair, if that's helpful.
Yeah. Ms. Federico, did you have something?
Yes, 144 does not have a header. I was going to ask Mr. Larson if it was all right if I just put it on after we're done talking about it.
Yeah, yes, it is. And when you called it up, I realized it didn't have a header and had a moment of anxiety.
Okay, I'll do that as soon as we're done talking about it. Thanks.
Thank you.
Yeah, does the court reporter need a break, or are you still good for another 10 minutes?
10 minute break.
I didn't hear that. Can you?
I didn't have my microphone up. 10 minutes and then a break.
Okay. All right, Mr. Larson, if you and Mr. Ali can put up hearing exhibit 144 again,
Yes,
and quickly go through it, that'd be great.
Absolutely. So Mr. Eiley, on the screen before you is hearing exhibit 144, which is a red line version of attachment SJD9. You see that?
Yes, with no header.
With no header. Thank you for reinforcing that. So on this first page here, the changes are just to add the Colorado Energy Office to the document in red. Do you see that?
Yes, exactly.
And is that the only changes that occur here on page 1?
Yes.
Can we go to page 2, please, Ms. Federico? So on page 2, in the 1, 2, 3, 4, 5th bullet, there is a textual change to clarify the fact that the updated base forecast for the JTS base RFP includes strategic economic development opportunities. See that?
Yes.
And then there is a reference to the steps in the table below on that same bullet. Do you see that?
Yes.
And then it provides the actual table with steps as opposed to probabilities. Do you see that?
Yes.
Thank you. I believe that is the only other changes on page 2 are to add CEO to the document. If
Can
we
you
could go to
keep
page 3. Mr. Barroso, do you have?
Oh, sorry, Mr. Barossa.
Yeah, thank you, Chair. I'm not sure if this is appropriate, but I just wanted to confirm back on that prior page that the step or the percentage 8 and 9, or yes, 8 and 9, that now also says ESA and IA, and on 9 says IA or ESA, which I believe confirms what we've talked through during the hearing, but that appeared to be a change to me as well.
Mr. Larson.
I can confirm that that is a clarification based on this table, based on the testimony that's occurred in this case to this point.
If you could keep going, Mr. Larson.
Yes, thank you. Page 3, I believe the only changes are to add CEO. If we could scroll to page 4, please. So down here in the activation triggers, it changes 80% probability to step 8, 90% probability to step 9. Also clarifies with that stricken backslash that it's a IA or ESA.
I agree.
I don't believe there are other changes on this page. There is one, I apologize. Mr. Ali, do you see that to make clear that it's an aggregated ramp? So if there was multiple large loads to our conversation earlier, the loads are considered in the aggregate?
Yes.
And you agree with that change?
I fully agree with that change.
Right. If we could go to page 5.
If I could interrupt for 1 second and we go back to page 3 where there's the change towards the bottom there of, or was it on page 4? I think it might be on page 4. The 80, 90, the ISA/ESA, and the essentially following up on what Mr. Barrasso asked. We have an or in the very last full line instead of 90%, but up above on the second line, we still have the slash, but that is an and. In other words, the party should and the commission should take that slash between IA, ESA as an and, but take the slash out of the fourth line down, and now we have the word or. Is that a correct interpretation?
That's correct.
Thank you.
And then the last set of changes here, number one is adding CEO and also clarifying a CIA reservation of rights in paragraph 7. But then, Mr. Eiley, do you see the red text in the middle of the page?
I do.
And is that red text designed to implement the 500 megawatt and above process that you discussed during your examination earlier?
It is exactly to do that. And one quick elaboration, in my view, if it helps parties comfort, this simply adds more review to the potential activations of the incremental need pool. It does nothing but add more review and more party rights.
Thank you, Mr. Eiley. And Mr. Chair, this is the extent of the changes. So that completes the walkthrough. And I would re-up my motion to admit hearing exhibit 144 and 145, which is simply a clean version of this document.
If you could take this down, and I'd admit it, subject to the concerns raised by Mr. Bunker and Mr. Barrasso as context that it's late in the hearing and it's not a stipulation and settlement agreement. So with that, 145 and 144 are admitted.
Thank you.
Anything else on redirect, Mr. Larson?
No, that's the extent of the redirect. Nothing further. Thank you, Mr. Eiley.
Ms.
Thank you.
Kinseya.
I'm assuming that you are going to take a break soon, and I wanted to advise you that Mr. Hyatt and I have worked out, and we're giving you 35 minutes back of your life. Mr. Hyatt contacted me this morning. He is going to waive cross-examination of Commissioner Zach Swearingen, and I'm going to waive cross-examination of EJC's witness Schlissel.
Okay, hold on. Swearingen, 10 minutes. And events. Sure. Okay. Thank you, Ms. Kinseya.
Can I tell Mr. Swearingen he is excused, that there is no commissioner questions?
I do not have questions. Commissioner Goman, do you?
I don't either, and you might want to check on that EJC witness too, because I don't think they have any cross left.
Commissioner Plant?
Yeah, I have no questions for either.
So, nor do I, so both witnesses can be excused. Thank you, Ms. Kinseya. Mr. Hyatt, I guess we shouldn't rely on, we'd like you to confirm Ms. Kinseya's representation.
Yes, I can confirm, and thank you, Ms. Corsilia.
Anything else, Mr. Hyatt?
Oh, thank you.
All right, let's take a break till 10, and we'll come back with Dr. Dalkey. Thanks all. Mr. Bonas, if you have a preliminary matter.
I do. Chair, CEO is going to waive its cross of Mr. Ducky.
Thank you. Ms. Kutzer.
Yeah, thank you, Mr. Chair. I do have a preliminary item. COSACIA AEU would like to object to the notion of submitting new redline contract language as a part of the company's statement of position. The reason we object to that is on due process grounds. We're concerned that we're not going to have an opportunity to respond to that new language on the record. In addition, going through that process is really going to require significant additional resources, quite frankly, that we are not able to have at this time. And so for those reasons, we do object to that pathway forward, and I believe Mr. Detsky is going to chime in on behalf of CIA as well.
Yeah, I mean, Mr. Detsky.
Yes, thank you, Mr. Chair. I was going to add that, from a due process perspective, the company chose not to submit new language in rebuttal or any other point in this case. If, to Ms. Kutzer's point, if they were to want to submit additional red lines, then we would ask for additional discovery, testimony, and hearing on those red lines if they were to be subject to a conforming bid PPA approved by the commission. That would add a lot of delay to a process where we have an RA need now and the need to get the RFP on the street as soon as possible. And we are not sure, as we are standing here, what the company would actually put in red lines. A lot of their rebuttal testimony, Mr. Bornhoff, they have claimed is rescinded under the condition where the model PPA is not approved. And so I think the record would have a lot of confusion. There would need to be a lot of extra due process, and that it wouldn't be appropriate for the company to come out with a redlined model PPA 110-page document after the record closed.
Is there, I'll just, this is for your witness, not for you necessarily, but is there a notice and comment process we could do after this hearing that would address this?
Was that question?
Mr. Chair, speaking, I don't know, Mark, if you want me to go, since we do have a witness on these issues specifically, but a concern that he will talk about is that, as a trade association, we're not actually representing a single off-taker. So it'd be quite difficult for us to land on singular positions in response. I think I'd renew my resource concern that I understand where you're coming from and wanting to smooth the process along, but I think it's not only additional resources, but significant delay at a time when the industry really can't afford to have it. So I'm gravely concerned about having a lot of additional process here, and quite frankly, moving forward with some red line changes from the company that we are fearful will very much chill the industry. So, Mark, please continue if you have other points.
I was just going to, for CIA's part, our witness is not able to testify on what process, ERP, and regulatory legal process would be appropriate from here to satisfy the concerns of the industry. But Mr. Monson did testify in his answer testimony that if the commission wished to explore these issues further, one vehicle could be opening a miscellaneous proceeding, taking comment from parties, and working through a PPA provisions in more of a workshop setting that could potentially be in place for the next ERP.
That is not a very happy answer.
Mr. Chair, can I respond to that briefly?
Yeah.
Thank you. And sorry to jump ahead of you, Mr. Barroso. So in terms of what we just set forth with Mr. Eiley, that was a potential process to try to, get enough information in front of the commission to make an up or down decision, right, on the conforming bid policy. the model PPA that we would file would be incorporating the JLB2, positional changes into that PPA. So that's what that would look like. Could we handle that with a responsive SOP that the trades would have an opportunity to respond solely on that topic? Yeah, we're open to that. We're open to any process that gets you all the record that you need to decide whether or not to approve a conforming bid policy. My concern with the arguments that I'm hearing right now from COSA and from CIEA is that, number one, they seem to say we're not the right entity to negotiate a conforming bid policy. And number two, there's no policy and there's no process in this case that can result in a conforming bid policy being approved, which by both of them by their nature kill the ability to do a conforming bid policy at all. So that's concerning to us. What I want to communicate here is we're flexible. If it's notice and comment, if it's a responsive SOP, we're willing to do either one of those things, because what we want is certainty as we head into the RFPs as to whether we're doing a conforming bid policy or not. And we have already laid out the reasons why we think a conforming bid policy is appropriate.
Mr. Leger.
Yeah, I think from the perspective of our witness and the testimony that we provided, we're in the same position as Ms. Kutzer and COSA. We believe that any changes that are in addition to what is already on the record is a significant problem if it were put forth in an SOP in terms of being able to appropriately respond. In terms of Interwest's ability to redline, as Mr. Detsky said, 110-page document and put our information that's already on the record, we don't have the resources to do that either. So I think there's a situation where we're at the end of the hearing and what's on the record is on the record. And I think that's the position that the company and the parties have put the commission in. So unless there's another process that extends this timeline that the commission is comfortable with, I think that's where we're at.
Mr. Chair, if I might respond just very briefly, that there's not, all we're doing is adding the changes from JLB2, which have been on the record since we filed our rebuttal testimony, in that attachment. And so the model, it would be a compliance filing that's essentially incorporating those changes from JLB2 into the model PPA. So parties are on notice of what positions the company's willing to take, because they're all spelled out in that document.
Mr. Detsky.
Yes. In the situation, first of all, I want to respond to something Mr. Larson said, and that is that what CIEA, COSA, and Interwest have all been united in saying is that we are not the appropriate parties to be negotiating a PPA with the company. And that's the primary reason why the conforming bid policy should not be accepted. We are doing our best to amalgamate industry concerns in response to a very one-sided, heavy-handed document, as the record has shown, and trying to show what those problems are to the commission. But we have not been engaged in a contract negotiation because we're not the contracting parties. But to the last point, I don't think it's accurate what Mr. Larson said about attachment JLB2. Also in Mr. Bornhoffen's testimony, he talks about the need for a change in law provision, but that's not named attachment JLB2. During the hearing, Mr. Bornhoffen said the company withdrew its compensable curtailment PTC provision, which CIA supports that outcome, but also that does changes. So in the situation where the PPA is not a take it or leave it document, and they want to file red lines that are that is what is going to be part of the RFP for bidders to comment upon, we could live with that. The part that we can't live with is what I think is being put on the table here, which is that the proposal would still be, it's a take it or leave it document that can't be redlined, and public service is putting forward after the record is closed what they believe that take it or leave it document now should say.
I don't know that I can go any further. I got to talk to counsel and advisors, and Commissioner Plant and Commissioner Gilman may need to do the same thing. So I'll have some questions for your witnesses that you may or may not be able to answer, and well, I guess more to follow. Mr. Barrasso, did you have something on something different or on this issue?
Thank you, Chair. Separate issue on witness availability.
Okay.
Yes, I just wanted to confirm for WRA sweep witness, Mr. Iden, that the commission is still able to accommodate his availability to appear on the stand today out of order.
Yeah, let's take him first thing after lunch.
Perfect. Thank you, Chair.
Mr. Dalkey, Dr. Dalkey, Mr. Cox, Dr. Dalkey, can you hold up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
You can put your hand down. Is anybody with you or communicating with you in any way?
No.
If that changes, will you let us know?
I will.
Mr. Detsky, before we get to Mr. Cox, did you have something?
No, Your Honor.
Oh, you're getting ready to cross. Mr. Cox, go ahead.
Thank you, Chair. Good morning, Dr. Dalkey. Can you please state and spell your name for the record?
Good morning, Mr. Cox. My name is Stephen, Steven. Last name Dalkey, Dahlke.
By whom are you employed, and what is your title?
I'm employed by the Colorado Public Utilities Commission on trial staff as an economist.
And did you cause to be filed in this proceeding answer testimony that's been marked as hearing exhibit 2600, cross answer testimony marked as hearing exhibit 2605, and rebuttal testimony marked as hearing exhibit 2606, including attachments?
Yes.
If I asked you the questions that are contained in the pre-file testimony, would your answers be the same?
Yes.
Thank you. Dr. Dalkey is available for cross-examination.
And I just want to confirm the company has waived cross of Dr. Dalkey. Is that right, Mr. Larson?
No, Your Honor. We have a few questions for Dr. Dalkey.
20 minutes.
Company wants to go last, right?
Yeah,
Chair?
if we could go last. Yeah, sorry about that. That goes all the way back to last Tuesday.
All right. Mr. Detsky, I knew there was a reason you were there.
Sorry for jumping the gun on my camera there.
15 minutes.
Good morning, Dr. Dalkey.
Good morning, Mr. Detsky. How are you?
Good, thank you. We've met before, but for the record, Mark Detsky on behalf of CIA. I'm going to be asking you about the tariffs proposal today. I'm going to be looking maybe at your cross-answer testimony. You agreed in that testimony with CIA witness Mr. Monson at a high level regarding the challenge that tariffs pose for project developers, correct?
We did agree at a high level as to the challenge.
And so your testimony concludes that some tariff pass-through mechanism is appropriate for the JTS RFPs. Is that correct?
Subject to the terms and conditions outlined throughout that cross-answer testimony, we agree that a pass-through mechanism is appropriate.
And have you had the chance to review Public Service's responses to your proposal in hearing exhibit 131?
Yes.
And at a high level, again, do you agree that although Public Service seeks to modify parts of staff's proposal on tariff pass-throughs, there is a high level of agreement between Public Service and staff on that mechanism?
I don't know if the testimony to date has established that, but if you're asking me to relay at a very high level kind of our thoughts to their their response, I think at a high level there's broad agreement, and that's subject to certain kind of clarifications and modifications, and I may even have a few that I may add if given the opportunity on the record. But I think at a high level, it supports agreement to the challenge of tariffs uncertainty and to some high level aspects of a potential path forward to adapt the process for that challenge.
Thank you. And I do want to hear those responses, but I'm limited in my own time, so I'm going to let that happen elsewhere, if I may.
No problem.
This alignment that CIA and public service and staff have at a high level regarding the tariff pass-through mechanism, that's a pretty notable agreement in this proceeding. Wouldn't you agree?
Well, I would say that there's significant disagreement between staff and CIEA's answer testimony regarding some significant aspects of the pass-through proposal, but I agree with you that both of us have proposed different versions of tariff cost pass-throughs in our testimony in this case.
Okay, let's try and dig in a little bit into those. Your testimony has a great sort of play-by-play summary of the tariffs that this administration has put in place. Is it correct that the tariffs that the administration has put in place have changed multiple times already this year?
Yeah, even since we filed cross-answer as well.
And if the United States Constitution is any guide, there should be a new administration as of January 2029. Is that correct?
I'm not a constitutional scholar, but I certainly hope so.
Okay. I took from your answers to CIA's discovery that your understanding is that tariffs are generally assessed when goods arrive at a port of entry to the United States. Is that your understanding?
Yes, that's my understanding. Did you say that was in response to discovery, Mr. Rudetsky? Could you clarify that part of the question?
Yes, that's where I got your response.
That's correct.
And arrival at a port of entry in the United States, that means that the equipment has been shipped and it's on its way to a project site. Is that correct?
If equipment for a project in Colorado is assessed tariffs at the port of entry, that means that it's at the port of entry in the United States. Maybe it'll probably go beyond that. But again, timing and specific strategies of sourcing can vary.
Right. So some public service witnesses insinuated that it's possible that a bidder may be stockpiling equipment as opposed to shipping equipment to a project site. Do you think that an IPP would generally take the risk of stockpiling equipment at this time versus shipping equipment to a project site?
I really don't know, Mr. Rudetsky. I haven't worked for an IPP in project development, so I can't even give you informed speculation.
Okay.
The economic landscape before us currently and going forward is pretty new. So even if history may not be the best guide on top of my uncertainty with how IPPs may respond in terms of their sourcing strategies.
Fair enough. Staff's proposal of the CKTE, you call it. You write in your testimony, I'll paraphrase, that removing tariff risk altogether from IPP bids could result in poor decisions. Is that correct, from IPP bidders?
I think that was in response to the stated goal of Mr. Monson's pass-through proposal. And I quote, to remove tariff risk from bids. And I think our response in largely in opposition to that sentiment is really around how that path forward would not give commission staff and the company and other necessary stakeholders useful information regarding the current state of tariffs as it applies to potential projects that may or may not be the case in the future. But I think there was an informational shortfall with CIA's proposal that was the major concern to staff.
Okay, and when you have the CKT, which stands for current known tariff estimate, correct?
Correct.
And so I understand that proposal, please correct me if I'm wrong, that bidders would submit their bids utilizing the tariff rates that are effective at the time of bidding for their given project. Is that correct?
That's correct.
Okay.
And they would separate out the portion of those costs from the base project costs in their pricing.
Okay.
So 2 steps there. Yep.
And as public service nuanced in their hearing exhibit 131, public service argues that should be for critical equipment, as they say, only, as opposed to all aspects of a project. Do you recall that?
I don't. I'm looking at the exhibit right now, Mr. Gretzky, not asking you to pull it up to help you with time. I recall the word major equipment. If they also use the word critical, you'll have to clarify that for me. And I'm not seeing it, but I'm
No,
just
major could be my mistake. I'm sorry, major equipment.
I believe they propose to limit it to major equipment only.
And do you agree with that change?
I think it's a reasonable sentiment to make this, implementable. I think they're thinking through, that this could kind of be a informational rabbit hole because these projects are very complex and have a lot of components. So I'm sympathetic to that sentiment as long as it's clear enough what we're asking for and every individual project doesn't kind of interpret the proposal to be different and what's most convenient for them. So given those qualifications, yeah, I think we're sympathetic to that sentiment.
And so putting these concepts together, then, would you agree that the RFP documents should be revised to state that they're what the CKTE is? In other words, bid as accurately as possible and separate out your calculation of the impact of tariffs today to major equipment should be communicated in the RFP.
Yeah, if the commission accepts our tariff proposal, I would agree with that.
Okay. And in that case, if a bidder had stockpiled equipment, they might not need to do that, right? They could just say, this is our tariffs are not applicable at this point.
Yes.
Okay. And would that be a narrative discussion in your view in a bid, providing like the sourcing plan and CKT?
I think it could be a narrative discussion. I think it should identify to the best extent possible the sourcing strategy that the bidder can will take, or strategic options, understanding that things could change in the future. Under your example, if a bidder had equipment within the United States already and was committing to use that equipment for this project, they should indicate that, perhaps in narrative form, and I would expect that to be a binding commitment in the bid if it's known with that much certainty.
Great. And you also have a sourcing plan component of your proposal, correct?
Correct.
And so does that also mean that whatever IE is selected for phase 2 should have the qualifications to evaluate a sourcing plan?
I think at a high level, yes.
Okay. You also propose in the CKT that bidders, selected bidders, I'm assuming, we should please clarify that in your response, but selected bidders would have to give an update to public service every 6 months as to the status of their sourcing plan and their CKTE calculation. Is that correct?
Yes, in part. They would only be required to provide updates if the tariff rates, if the U.S. tariff rates changed. If there was no change and no need to update the tariff estimate component of their pricing, then they wouldn't need to file an update. And the 6 months was just a minimum. If tariff rates change, once a week for a period of time, they could, after 6 months, then file an update on where we're at.
Okay. Did you hear my cross-examination with Mr. Bornhofen the other day, by any chance?
Yes.
Mr. Bornhofen admitted that there could be effects, indirect effects from tariffs. And the example we used is that if there were new tariffs on imported steel, that could in turn affect the price of domestic steel. Did you hear that testimony?
Yes.
Do you agree that that could be the case, that there could be indirect pricing increases due to tariffs on imported goods?
Yes.
Would staff agree that those could be valid components of a CKTE?
I don't know if I can agree. I'm not sure if I'm ready to strongly disagree with that component, Mr. Detsky. I think there needs to be, I'm tempted to suggest that we limit the tariff pricing component to direct effects only, because in secondary, tertiary, and so on, effects can kind of just be unmanageable and hard to distinguish from broader supply chain and inflation issues. I am certainly sympathetic that indirect effects, along with these other realities, can pose challenges. So I haven't fully thought through this yet, and we could staff can think through and clarify further if needed later in the when we have a chance to, perhaps an SOP. But I'm at this time I'm leaning towards ring fencing this to direct tariff assessments on the major equipment that the IPPs are sourcing directly, and let the other risks kind of be handled in the rest of the project bid, combined with all those other factors.
Just one point of clarification. You said IPPs, but it would also apply to company projects, correct?
Thank you. Yes, that's correct.
Okay. And you also propose a 20% cap on the increase of an as-bid price due to tariffs in the CKTE. Is that correct?
We did propose that. Yep.
And so that's the last topic I want to talk to you about, because in discovery, you explained that staff's position is that if a project submits an update on the tariff CKTE and that crosses the 20% threshold, your proposal is that project is terminated. Correct?
I believe, yeah, we used that language. Yep.
And so that's what I want to discuss with you a little bit here. That could be, if the tariff changes and the IPP is required to file an update of the CKTE, that could still be well before the tariff is actually paid, correct?
Could be, yeah.
And in the instance where a project fails because its tariff update has increased that 20% bid price threshold, do you agree that in the case of a IPP that is signed a PPA, that they should not be forced to lose a portion of their security in the contract for that event?
I'm not prepared to agree or disagree with that this time, Mr. Detsky. We can give it some thought.
Okay, because that would be a consequence, right? If it faces an automatic termination and it has to terminate its PPA, those PPAs can have losses of security in the event of an early withdrawal, correct?
Correct.
Okay.
Can I clarify if you're about to move on, or maybe add a few thoughts?
Please clarify. Yes.
Yeah. So we just on this general piece, a couple thoughts from staff's perspective. One is simply to acknowledge that a 20% increase in total project cost due to tariff is a pretty major thing. And we, whether it's 20% or whatever the commission approves, we understood and appreciated that when picking a number for our proposal. This would be a very significant change to project costs. I'm not. I'll leave it at that. Second, there in that part of our cross-answer testimony, we explored and included discussion on possible alternatives to contract termination if such a threshold was passed for a particular project because of swings in tariff policy. If the project was needed for critical reliability need, and so on, acknowledging that if tariff regime changes swings again, after a bid is selected, it's likely not just impacting one project, it's impacting a lot of projects. So I think our primary sentiment there is just to have a check. If things are going really, if something happens, that's just really, really significant, that we have an automatic check-in, and that we don't have an automatic, mechanistic pass-through without the ability for the commission and other stakeholders to retake a look at what this means for the projects in the portfolio.
And I had some of those questions on my list, and I'm going to try and get through the last page of my questions here, Mr. Chairman, on that. Because it's possible that tariffs come down, especially after 2028. Isn't that true?
That's possible.
And so might it be wise for a project with a 2029 in-service date to wait to take delivery of equipment until after January 2029?
Tariffs could come down or go up at any point. I certainly hope they come down. Maybe you're contemplating that they'll go down once there's a change in federal administration.
Correct.
Yeah, it's possible. I mean, there's a lot of uncertainty here. Even if there's a new president, if and when they move, there's some uncertainty with that too.
But if there's an automatic termination, wouldn't that, in the case of a CKT update, wouldn't that foreclose the possibility that tariffs would again come down, especially after the current administration?
I mean, it would foreclose the possibility of that project being saved by reduced tariffs if there was an automatic termination. As we're talking about, I think if we wanted to refine the language away from automatic termination to automatic pause and check-in, I don't know the right legal term, we may be open to exploring that with you, Mr. Detsky.
Thank you. That's exactly what I'm... Sorry to talk over you there. That's what I'm getting at, is the effects of an automatic termination could be hard to undo. For example, if there had been a CKT update in April of this year when there's 140% some odd tariff on goods from China, and there was a slew of automatic terminations from battery projects then, and then the tariff rate was reduced to 30% the following month, you could have had a slew of battery terminations in April that would have been rescued, so to speak, in May, correct?
Possible, yeah.
Okay. So I want to take you up on your offer and maybe end this cross then earlier than I needed to, which is that would staff be open to a check-in with some flexibility as opposed to an automatic cutoff if that tariff rises during the CKT and check-in?
Yeah, I don't know if check-in's the right word. I think we'd be open to the concept, Mr. Detsky, and assuming it addresses our concern that we're not automatically letting this project get delivered with pass-through costs to Colorado customers without further review and consideration. And frankly, project termination should be one of the possibilities, among others, that I think should be seriously considered in such a check-in if costs go to that level. But I'll stop there because I think the answer is at a high level, yes.
Thank you for that. And then my final questions are, you mentioned it earlier, this system reliability carve out. Does that ring a bell, what you discussed earlier?
I think we said the project should be terminated and had a few qualifications, like unless it's critical for reliability or something like that.
So my question is defining that critical reliability a little bit with you. Is that in talking about a resource capacity need, meaning like any project that is like significant in size to affect the resource adequacy need? Is that the kind of project you're talking about?
That's most likely what we're talking about in the context of this solicitation with large generation projects. Yep, resource adequacy, if you will.
What about from an emissions perspective? For example, if a large project termination would affect the emissions profile of the portfolio, would that also fall under your exception?
I don't think we proposed that in cross answer, Mr. Detsky, it certainly could be something that is part of the consideration if there's a check-in, for lack thereof a better term.
Okay. And the last question. So given that, as you said, if one project is facing these tariff considerations in the CKTE, it's likely, I should say, it's likely that other projects, for example, in the INP, are facing similar constraints or challenges, correct?
It's possible. Different technologies and different projects could have varying levels of exposure.
So there's a compelling incentive to keep projects around, as well as to perhaps get rid of projects that made bad choices in sourcing and should be terminated, correct? There's a balance there.
I agree with that, yeah.
Great. Thank you, Dr. Ducky. That's all the questions I have, Mr. Chairman.
Thank you, Mr. Detsky. I have 15 minutes for Kostasia, and it's 10:36. Ms. Kutzer.
Thank you, Mr. Chair. I expect that I'll be able to give quite a bit of that back, as Mr. Detsky covered a lot of the terrain I intended to. Good morning, Dr. Dalkey. How are you?
Good morning, Ms. Kutzer. I'm well. Thank you very much.
It's nice to see you. Could we please
Likewise.
pull up hearing exhibit 131? And you were just going over this with Mr. Detsky, correct?
Yes.
Okay. While we're waiting for that to get pulled up, I'm just curious as to staff's position in general on the company comments to your recommendations. Have you agreed to those? Are you still reviewing them and potentially addressing them in your post-hearing statements of position? Where is staff at on these?
Yeah, we've reviewed it. We're certainly going to reserve the right to respond in more detail in SOP. And we're at a point where we can kind of respond at a very high level to what's kind of on this 2-page document if asked, subject to the qualification that we can, clarify those as needed in our written SOP.
Okay, great. Thanks for that clarification. Ms. Federico, would you mind blowing it up just a little bit? And Dr. Dalkey, I'm just going to ask you about one of these terms. Here, number 4, you have a recommendation that as part of the CKTE proposal, bidders should be supplying any executed contracts or letters of intent from suppliers that substantiate the component sourcing and pricing, correct? You see that?
Yep.
And then here over on the right column, the company says they'd support that recommendation with further modification. And apologies, I'm just going to read here, but a few of the things that they recommend is that bidders need to establish commitments from their EPCs and suppliers and provide documentation, including master supply agreements, memorandums of understanding, capacity reservation agreements, term sheets, supply contracts, letters of intent, etc. I won't read the whole list. Do you see that?
Yes.
Okay. I want to dig into this a little bit. Do you and I agree that the company and independent power producers are competitors when it comes to owning renewable energy projects? Let me
Perhaps.
rephrase. Let me
Okay,
rephrase that.
thanks.
Sometimes would you say that the company and IPPs are competing for the same resource pool to serve that capacity that's needed?
At one level, yes, and I think perhaps at another level, there's possibilities of collaborations on bids that then could compete with other bids. So
okay,
yes,
fair enough.
A couple levels to that, but yes.
Fair enough. And providing your competitor with the prices of the supplies and the prices you're paying for those supplies could give the company an advantage over IPPs in some situations. Would you agree?
There's laws and rules that I'm not super privy to around establishing firewalls between the company's bidding team and the evaluation team. So to some extent, I can understand the sentiment behind your question. and I'm not disagreeing with it. I think there's safeguards in place to try and mitigate those concerns to the extent possible.
Let me restate it another way. So if we're asking here in this modified term from the company to provide materials such as master supply agreements or other documents that contain pricing, do you see a need to affirm that those guardrails are in place so there is not an anti-competitive concern about providing those materials?
I mean, I don't know if I would see, I would agree that those guardrails should be robust. I would also say a little more broadly on this one, Ms. Kutzer, that from my perspective, I think some of these types of documents can help provide useful information with respect to tariff costs. And the primary pieces of information are sourcing strategies and frankly, which countries are available to provide, major equipment. And then beyond that, which tariffs potentially could apply to goods and services that come from those countries. So those are the primary pieces of information that I think would be helpful to a bid. The language here on the right is from the company, not specifically from staff, but to the extent that there's ways that documentation like this could support and provide confidence in a project's sourcing strategy and potential tariffs that could apply, that's helpful. That may or may not, it might not require, disclosing a lot of other detailed confidential information beyond the location and the type of equipment and so on.
Let me cut to the chase and just get to the bottom of this. Would staff be open to narrowing the information that is provided to the company to just that information that's necessary to provide sourcing information and any associated tariffs associated with that sourcing?
Yeah, at a high level, that's our intent. I think the language here is the company has taken the initiative to propose more detailed examples of what that could be, and also it appears to propose a minimum documentation. I'm not sure. I haven't had a chance to think through if staff, to what extent staff agrees with that. To another extent, a strongly supported tariff estimate can help provide us confidence, that we fully understand the risks of going forward with that project.
Okay.
That's just a long way of kind of agreeing with the high level principle behind your statement, Ms. Kutzer.
That's helpful, Dr. Dalkey. Let's move on to just one last line of questions. So we could take this down, Ms. Federico, thank you. This is really a genuine clarifying question. In your rebuttal testimony, you briefly addressed the CFFD proposal. Do you recall that?
Yes.
And one thing you state is that you don't support the removal of the $100 million cap on the CFFD proposal, correct?
Correct.
What is staff's position on the CFFD after this hearing? Do you support that proposal? Have you refined your thinking? Any clarity that you can provide to your rebuttal testimony?
It's a big question, Ms. Kutzer. I mean, there's a lot of components of our position on the CFFD that are spelled out in my answer testimony. And we further clarified in my rebuttal that we would support implementing a budget, oppose the company's proposal in rebuttal testimony, I believe it was, to remove the budget, and want that reinstated perhaps at the $100 million level.
Okay, fair enough. That's all the questions I have. Thank you very much.
Thank you.
Thank you, Ms. Kutzer. Mr. Larson, I have 20 minutes and 10:44.
Thank you, Mr. Chair. Good morning, Dr. Dalkey.
Good morning, Mr. Larson.
I've met before, but for the record, I'm Matt Larson. I represent Public Service. I want to start with what was entered into the record this morning as hearing exhibit 144, if we could call that up. And Dr. Dalkey, do you see this on the screen, which is hearing exhibit 144, which is a red line version of your attachment SJD9, which is hearing exhibit 2606?
I see it.
And have you reviewed the changes that are in this document?
Yes,
And do you agree to the changes that are in this document?
I do.
And do you support CEO joining the tri-party framework?
I do. Might not be the tri-party framework anymore, but I welcome CEO joining the framework.
Would you object to calling it the quad-party framework?
No.
All right. Thank you. We can take that down. I want to go back to actually hearing exhibit 131, which you've already taken a series of questions on this morning. But I just want to kind of step through it perhaps a little bit more systematically and really in the interest of understanding where there's still space between public service and staff. Okay.
Okay.
So first, the company at the top of this document has a couple of general statements. And would you agree that any kind of tariff pass-through approach should be simple and transparent?
I agree. That's one of a few key objectives we should look for.
And would you agree that simplicity and transparency benefit bidders in submission and the company and the independent evaluator in evaluating the materials provided?
If we're getting the information we need, the simpler the better.
So just kind of starting on that first line and the way that this document is structured is your recommendation is on the left, PSCO's position is in the middle, and then there's comments on the side. You see that?
I do.
So with respect to the first line there, the company supports your proposal with clarification. Do you have any objection to the company's clarifications there?
I would probably offer a clarification on top of the company's clarification in this box, Mr. Larson. Specifically, in response to the last sentence, I believe it's the second sentence in that cell, the size of the CKTE portion compared to the overall bid cost must be reasonable. And it's from our perspective, perhaps desired clarification around the word reasonable. If I were allowed to redline this document, I would probably propose crossing out the word reasonable, replacing it with the word accurate, based on current known rates. If a tariff rate is really, really high, to the extent some might call unreasonable, and a project comes in and it's exposed to that tariff based on everything we know today, I'd want to know that. I wouldn't want that to be behind the scenes, especially if we're going to allow full pass-through of those costs. That's the one clarification I would propose from staff's perspective on that on that one.
So essentially what you're saying is that it needs to be accurate with respect to the CKTE component of the bid that comes in, with the CKTE component being discrete from the bid component. Is that correct?
Correct.
So moving to the second line, the company supports that. Did any concerns with the company's comment in the far right box?
No. We want to be supportive and not further delay the evaluation process. So I can understand the company's sentiment on this and others along this line. And
then in the third box, the way that this is set up is that's a recommendation. It's a subset of the piece that's in the second line. Do you see that?
Yes.
And the company supports this particular piece with clarification. And do you have any concerns with the company's major equipment clarification that's provided in the comment?
No major concerns. I'm wondering if there's a definition that can be established of major equipment. I don't know if how easy that is, but the idea, we don't have major concerns with that response, though, Mr. Larson.
And from an implementation perspective, that definition could be loaded into the RFP that's ultimately provided ahead of the phase two, the JTS base phase two competitive solicitation, correct?
It could, yeah.
With respect to number two, which relates to countries of origin, which is the fourth line down, in hearing exhibit 131. The company supports this piece with modification. Have you had an opportunity to review that modification?
Yes.
Do you have concerns with limiting the number of countries for a country of origin for components?
If it aligns with the major equipment definition here, I wouldn't have major concerns with that, a limit like that.
And you would agree that the comment does draw a line between the number of countries and major equipment, correct?
Can you repeat or clarify a line between? What do you mean?
Yeah, I apologize. I can rephrase. In the company's comment with respect to item 2, fourth line down, it discusses both the number of countries and limits it to only major equipment, correct?
Correct. It says that, yeah.
The fifth line down is a support, so I want to move to the sixth line down, which relates to executed contracts or letters of intent. Do you see that?
Yeah.
And if you had an opportunity to review the company's modification that's provided in the far right column.
Yes.
Do you have concerns with that modification? I believe you discussed this a little bit with Ms. Kutzer as well as Mr. Detsky, but just for clarity of the record.
Yeah, I kind of see this as a bit of a new sub proposal from the company building on what we proposed. And I would just qualify that I understand the IPP concern about disclosing commercially sensitive data that may not be needed to substantiate a known tariff estimate on the project. And I would be supportive of crafting a solution that respects that to the extent as possible without, diving too deep into the weeds at this time.
Yeah, and I want to get to that here in a couple of questions. Before we do that, however, looking at, if we could scroll down just a little bit, Ms. Federico. There's this discussion here of strategies for tariff mitigation, which is now, I believe, line 7 of the table. You see that?
Yeah.
And the company supports that with clarification. Do you have a concern with the clarification provided by the company on the far right column?
I don't have a major concern with that clarification.
So this next piece, which is the last line in the table on this page of hearing exhibit 131, this is one that the company opposes. Do you see that?
I see that.
And in particular, your statement is that the independent evaluator and public service need to flag any questionable or incomplete CKTEs and sourcing plans and initial screening. Do you see that?
I see it.
And the company proposes that it be a completeness review only and to have an outside consultant conduct that work, which I think circles back to some of the questions you received from both COSA and CIA. You see that?
I see the company comments on that.
Does staff have an objection to utilizing an outside consultant for this purpose?
We don't oppose the concept. I may be interested to learn more about if it's just a completeness review, I want to understand the need for needing, whether it's just additional staffing or additional expertise behind needing a consultant and how that motivates the search and selection of such consultant. And if, for example, perhaps if some of the other things that the company clarified above this kind of make a completeness review more robust. For example, you proposed some minimum requirements that were not proposed by staff. Then I could kind of see how those work together, right? To give to give us more confidence in the things that we really want. So I think subject to kind of those open questions in my mind, I think we could look at, potentially this being the right path forward on this proposal.
Yeah, because to this point, you would agree with me, would you not, that this puts, could potentially chill the information that bidders provide out of concern that the company is going to see more detailed information about their bids than they might otherwise see. Would you agree with that?
Yeah, I see where you're going now too, and I didn't connect those dots honestly yet, but that could help alleviate competitiveness concerns. I agree with that.
If we could go down to the next page, Ms. Federico. On both the top line of this page and then the bottom line of this page, the company supports your recommendations on both of these items. You see that?
Both items? Are you looking at?
Yeah, so the
which two?
Requiring advanced or selected projects to file updates on CKTEs, and then the actual tariff cost documentation. The company supports that, correct?
Yeah, the first and the third on this page, correct.
And then on the second item on this page, the company supports with modification. And do you see that?
Yeah.
And do you have concerns or objections with the company's proposed modification?
I don't have major concerns. It's a slightly different approach, but if we're getting to the same kind of need that staff had in proposing ours, I wouldn't have major concerns. With a tweak like this, I'd maybe be interested in learning more about why the company thinks a modification like this is preferable to what we proposed. So I'm open-minded to it. Maybe I'm not going to agree or disagree to it at this time.
The company and staff are relatively close on this proposal. Would you agree with that characterization?
Yes.
Ms. Federico, we can take this down. I want to move to two other items, one quickly and then one in just a little bit more detail. And they both relate to your SIR rebuttal testimony, which is hearing exhibit 2606. I don't think we need to pull it up, but if we do, just let me know. Okay.
Sure.
In attachment SJD 10 of hearing exhibit 2606, you provide new solution sets, scenarios for phase 2 portfolio development, correct?
Yes.
And Ms. O'Neill is the correct staff witness to question on that particular attachment. Is that right?
Yes.
So with respect to CFFD, have you had an opportunity to review Mr. Tomjanovic's rebuttal testimony, which is hearing exhibit 119?
Yes.
Would you agree with me that PSCO has essentially adopted staff's rolling approach to the CFFD in Mr. Tomjanovic's rebuttal testimony, with the exception of the removal of the budget?
Yes.
And your position is that you want to retain the $100 million budget cap that was initially proposed when CFFD was a one-shot deal, correct?
That's correct.
And have you had an opportunity to review the review process that Mr. Tomjanovic lays out in hearing exhibit 119?
Yes.
And I'll represent to you that the first step is that the advisory board would file a project selection report coming out of each semi-annual meeting with projects selected for funding, along with the duration of that funding. Do you have any reason to disagree with that?
Could you quickly repeat that? Sorry, I don't want to slow you down too much.
Okay. So the advisory board is convened as part of the CFFD, correct?
Under the proposal, yes.
And it would meet on a semi-annual basis, correct?
Correct.
And after each meeting, the advisory board would provide a project selection report that would show the projects selected for funding and the duration of that funding, correct?
Yeah, this is all Tomjanovic's rebuttal proposal. Correct.
And then at that point, the commission would have 30 days to review the report and weigh in if it doesn't support funding one of the projects, correct?
Correct.
And then if the commission does not affirmatively act on project recommendations, the proposals would move forward and be funded, correct?
Correct.
So the modified version of CFFD in response to your answer testimony has quite a bit more process than the original approach. Would you agree?
Certainly the process is spelled out further. I don't know if his direct case proposal foreclosed this additional process, but it's definitely described in more detail. Yes, this process is described in more detail as you just laid out in the rebuttal case.
Yeah, and there's more opportunities and more disclosure of CFFD projects under the rolling approach than under a one-time approach, correct?
Yeah, I would agree with that.
And a rolling approach is different than a one-time approach, right?
It is.
So isn't it true that a budget built for a one-time approach might not be appropriate for one that's on a rolling basis over a series of years?
One of the primary concerns we had with the initial proposal was that all of this would have to be done in one shot by the phase 2 deadline in parallel to a lot of other really important things, perhaps straining staffing resources among the company and other stakeholders. And in response, frankly, to the original case, we felt that stretching that out would be potentially prudent and that was behind some of our rolling approach. And also a rolling approach that has a budget cap, as we kind of countered in our SIR rebuttal, doesn't foreclose the possibility of spending it all in one go if there's enough projects that the advisory group thinks should be funded right away, and then proposed to the commission. This is just another kind of check-in guardrail that once the initial budget is exhausted, depending on, regardless of how many meetings and proposals it takes, then it just requires another request, if you will, to the commission to extend it if the company and others feel like doing so would be beneficial for the public.
But under the rolling approach, even in the absence of a budget cap, the commission has the opportunity after every semi-annual report to step in and not fund a project if they start getting concerned about the overall level of spending that's going on in CFFD. Isn't that true?
Yeah, I believe in your proposal, they would have 30 days to respond. And if they didn't do that, then it would be effectuated. So that, I think that's the opportunity you're referring to.
So just one final question, talking about hearing exhibit 144, which is a modified SJD9 showing the quad party framework. Given the interrelationship with that framework to your answer testimony, why does staff support the quad party framework?
We think this is an important evolution in the resource procurement planning process here in Colorado. It gives us more flexibility, more checkpoints as we move forward in response to frankly, the difficult macroeconomic environment around us. It's not a silver bullet to those concerns, but we think that it does change things that are under our control to put us in a position to be better adaptable to things that are changing fast in a very uncertain manner on both the load and the resources side. So at its highest level, that's why we support it. And I'm not going to go into details on each part, but I could if you wanted to ask me about that. But I'll stop at that high level.
I'm almost out of time, Dr. Dalkey. I appreciate your time, and thank you. Nothing further.
Thanks, Mr. Larson.
Thanks, Mr. Larson. Commissioner Gilman, questions for Dr. Dalkey?
Hi, good morning, Dr. Dalkey.
Morning, Commissioner Gilman.
I just have a couple for you. Picking up on the CFFD that you were talking about with Mr. Larson, and I understand from your SIR rebuttal comments that you still recommend having a budget cap, which you were talking about with him. So if that program is instituted and goes to a rolling idea, do you foresee $100 million as still being the appropriate budget cap? And if so, how would that be applied? Like the max that's committed at any one time, the max that's actually expended, how do you apply a budget cap to the rolling concept?
Yeah, the way I understand the money moving mechanics in response to that question, Commissioner Gilman, is the budget cap would apply to basically to have us stop once once that cap has been cumulatively spent over time. So in the first roll, first 6 months, if you fund 10 million, then or whatever it is, I don't even need to put numbers, right? Each time you spend the money, it's a cumulative accounting that then would stop or require another request once the cap has been reached, and it applies as the projects are funded. After the commission approves each portfolio under the proposal.
Okay, and is there a possibility that one project gets a few tranches of funding, or you see it as like a one-time per project?
It's a good question. It could be worth having the company clarify how they think about that. My understanding is that it would be it didn't contemplate having projects coming back for more under this proposal. The way the concepts around the applications were described and proposed by the company was really around getting a milestone payment schedule towards commercial development, getting them to the point where they could competitively bid in a future RFP. And my understanding is, frankly, that milestone schedule is proposed up front. And to your point, I believe if there are multiple milestones, then committing funding to a project basically commits the aggregate of the funds requested for each of those milestones, but the payments would go out, at once each milestone is achieved. So it's a bit complex there, and that would all apply under the budget cap, but that's kind of how I envisioned it working. But I acknowledge that perhaps some of those details weren't fully spelled out in the record yet.
Okay, that helps me understand. So you would see it as the committed funds, even if you haven't hit those milestones and paid out the money, whatever money is committed would be going toward the budget cap that you propose.
That's my assumption. Assumptions can be dangerous, but that's kind of how I was envisioning this working. And I acknowledge that perhaps that wasn't fully spelled out in the record.
Okay. Just a couple questions for you on the tariff pass-through concepts that you went over with a few of the different councils you were with. And that was hearing Exhibit 131, but I don't think we actually need to look at it for the purposes of this discussion. So to my understanding, like this kind of general concept, I would imagine is to provide some better transparency and process about the very real possibility that like dramatic tariff changes could really impact the prices needed for projects, but to have kind of better transparency about that up front so that if that comes to pass, we'll have better information to act upon than, perhaps we did in the CEP delivery motion or things like that. Is that a fair understanding of the basis of kind of what led to this?
Yeah, it's one of maybe two kind of key motivations behind it. So, but yeah, I would agree with that.
Okay. And so maybe first question, would you expect the company as a bidder will be providing the same sort of disclosures in their bids as the IPPs?
Yes.
Okay. And then probably my last question. Since it seems like the main utility of the information would be if this comes to pass and we're getting requests for changes in price due to changes in tariffs or, whatever, either the tariff changed or we had to switch country of, one of the products, whatever it may be. So it seems like the hope is this information nothing has to be done with it if that doesn't come to pass and we don't actually have to have cost changes as a result. So I'm just trying to figure out, given some of the competitive concerns that we're hearing from the IPPs and disclosure of some of this information, Is it possible that this information actually just goes to the IE or just goes to the IEN staff in the interim, unless or until it's like needed to be acted upon? Or I don't know. Do you get my question? And trying to figure out how we address some of the IPP's concerns with maybe limiting this unless it actually becomes like something needs to be done with the information.
Yeah, I understand the question. My one possible problem with that is I think a lot of this information is something that we want to have in pocket when we select projects. And I don't think it's really up to staff in the IE to select projects. I don't think we would want to be the ones to do that in any case. But it's more than just knowing it if costs change later. It's understanding the uncertain, to the best extent we can, the uncertain risk profile with respect to tariffs for the suite of proposed projects that we have before us, and making informed selection decisions to the best extent we can based on that information. So I think the information is valuable when the portfolios are selected, and not just valuable later, when a change in project costs occurs if tariffs change.
Okay, so to take that a little further, then let's say we have two, say they're both IPP bids, whatever, two IPP bids that look similar. It would be in someone's discretion, like the company's discretion, to say, we believe this one, based on this information, has a higher tariff risk and therefore would like downgrade it in the of like putting the portfolios together. You know how I'm a little worried about the transparency of how this information will be used. If it's used before any actual request to increase price because of whatever's going on, how can we better understand in a transparent way how it would be used, even qualitatively?
Yeah, I think there's certainly a lot of qualitative aspects to sourcing risk, to get to your point. I under what we've proposed in this tariff structure, bidding structure, if you will, in concert with my colleague, staff witness Aaron O'Neill's proposed scenarios, we would basically propose taking the tariff, including the tariff component of bid costs in the scenarios, and offer an additional scenario that explores a change in the tariff regime, to get some quantitative insight into what that risk profile looks like. And so you get, under the framework, you get the cost attributed to tariffs in a bid. It very likely could be $1 per megawatt hour number. And our phase 2 scenarios proposal kind of allows the ability to, if we feel like these tariffs still are pretty high when we get the bids, and we hope they go down, we can explore a scenario where tariff rates go down, and see how that impacts the project selections. And if there's projects that show up that have lower tariff costs and show up in both scenarios, we know that that's pretty robust. If there's projects that look really good if the tariffs go away, but aren't so good with current tariffs, it's hard to mechanistically, decide that, but that's when we maybe take a closer look at. And the whole kind of motivation behind our proposal is we get the ability to think about those kinds of trade-offs and hopefully do the best we can in this tough environment. And all of that's kind of just some more detail around how the cost components attributed to tariffs can be useful in the selection phase of the process, and not just later, if tariffs change and projects need to update their costs.
No, that's helpful. And maybe I'll try to fill in some of the color with Ms. O'Neill with regard to how that portfolio might be structured and what sort of assumptions would have to be made to do that. So I'll save some of that detail for her, but in keeping with just what goes on even in the bidding, do you anticipate there is anything the company is doing to kind of qualitatively rank or view or discount certain bids based on this information? I'm a little confused if that might happen, and if so, how do we have transparency around what happens there?
Yeah, from that perspective, I think some of the company's, frankly, comments on that Exhibit 131 could be viewed as helpful, frankly, to that extent, because they kind of there were some pieces of our proposal that frankly were qualitative and to some of the, perhaps undefined, which can raise some of the concerns you're attributing. And they're moving certain aspects of that towards kind of minimum pieces of information we want to designate this bid as complete from a tariff checking the box perspective. And then subjecting that complete list review to a third party, frankly, gives me a little more confidence, as long as this minimum set of requirements are get us what we need and aren't overly burdensome or unlevel the playing field in a way that we're not anticipating.
Okay, thanks. Those are my only questions, Dr. Dalkey.
Thank you, Commissioner.
Thank you, Commissioner Gilman, Commissioner Plant.
Thank you. Good morning, Dr. Dalkey.
Good morning.
I just had one real quick question as it relates to the SRRF. And I think that, the company's position was, committing a certain amount of money, hundreds of millions of dollars, to the acquisition of these various different resources in anticipation of development. I think that staff's position was a little bit more of, well, if you're going to do that, don't base it on a certain amount of money, but base it on a certain amount of capacity, is kind of the sense I got. We've also heard from some other interveners and also at public comment, that those are the kinds of expenses that really should fall with the investors in terms of, as they're preparing plans for, development, they would make certain investments before those resources were useful, and that when they are useful, then they become a part of the rate base. And I just wanted to get sort of your perspective on, those three different approaches and how you see that.
Yeah, thanks, Commissioner Plant. I appreciate the question, the opportunity to respond. I think at a high level, staff is frankly in a similar place to where we were in our answer testimony on the SRF proposal, which can be briefly described as some significant concerns, not sure exactly what the need is in a very defined, specific way. Sympathetic to the challenges around sourcing key equipment and the lead times that are in front of us, but the record that has developed since then on this proposal hasn't fundamentally changed that. So if I can unpack that just a little bit, there's the flexibility that the company wants with that budget cap gives them a lot of leeway to do anything that they deem needed to kind of get, I'm not really sure what. I think it's a combination of things like manufacturing slot reservations. It could be, we heard one from one of the witnesses, it could just be paying cash if they decide they need to for a whole turbine. And to expand on that in terms of the need, we also heard one of the company witnesses mention that they have that they recently scooped up a few other reservation slots that I think it was GE contacted them and said were available, and they took it. all those things just kind of raise questions in my mind regarding the need. You know, those new slots, does that cover that the company has? Does that cover the need that we have here in Colorado for this JTS? Potentially, who and where are those new slots for? Really, what would be nice to see to kind of evaluate, you know, the in a more helpful way, the need behind this proposal is, frankly, the company's estimate of capacity need, which we have, right, in this case, some thoughts around what equipment may or may not be needed to meet that need, and the timing of getting that, and relate that to the slots that they have right now. To your point, perhaps, to one of the points you raised, perhaps the company, as part of its normal course of business, just perhaps at a corporate level, I don't really know, reserve slots, and maybe that's kind of behind what they were talking about. I don't really know the answer to all these, but I think there's some significant pieces that haven't been tied together or provided that gives me confidence that this is helpful versus just kind of, you know, adding some money to things that they already will be doing anyways in response to projects that they expect to be needed. So those are, I think, at a high level, our major concerns. And I do want to qualify that it's a tough environment, you know, right now to get a lot of equipment. And so I'm sympathetic to that. And that's kind of, you know, the driving need that started this conversation in the first place. I just don't think we're at a point with this proposal that gives me confidence that it helps, you know, relative to just doing what we otherwise did. And frankly, there's tools under the PUC rules to bring projects out of cycle or start developing projects out of cycle if the company believes that there's a discrete need that can't be met in time, you know, for the phase 2 we have in front of us. Standalone CPCN, amendment to the prior ERP, all those things are options on the table for needs kind of in this realm. So it's just a lot of questions from staff, frankly, Commissioner Plant, and not a great answer. And that's kind of behind why we're still kind of like in the opposed camp on the proposal as we have in front of us.
I understand. Thank you. I appreciate that clarification. That's all the questions I had. Thanks, Mr. Chairman.
Thanks, Commissioner Plant. Hey, Dr. Dalkey.
Chairman.
Several parties have raised concerns that current rates may not result in outcomes that are in the public interest in terms of calculating and fairly allocating the costs and benefits of integrating large new loads into the system. Given that the company has agreed to submit an advice letter filing by January 2026, would you have any advice or guidance about what model runs or other analysis should occur between now and that advice letter filing to ensure that there's an adequate record to address those concerns?
Yeah, I've listened to a variety of these conversations throughout the hearing. What I've heard is discussion, you know, subject to check and further details around doing additional generic modeling, Encompass modeling runs that explore resource needs under the existing Encompass model design with and without various new loads to get a sense of the incremental cost of those load additions. Correct me if you're talking about other things. And
I know that was the most specific.
Yeah, and that's not. I mean, and frankly, there's things around that. So, but yeah, I mean, one reaction I had is the Encompass model. I think, you know, and these are generics, right? They're not real projects, but it can give some insights. It's designed in a decent way to give good insight into incremental generation costs, and it's not as currently constructed a great tool on its own to give you a sense of incremental transmission costs. And I know you've had a lot of discussion, you know, trying to get at this question, and frankly, there was some. I'll pause. I can't remember if this was public or not session, but there was discussion around how we can link and get some more insights around transmission. And frankly, that discussion goes towards linking different types of tools together, which could help you with that, but it's still a kind of a clunky thing. So Encompass alone can give you good insight into incremental generation costs. Those scenarios on their own, you know, can in the model can be limited for the other incremental costs that may or may not come from transmission or other needs from large loads.
No, I appreciate that. If to the extent current tariffs may not fairly allocate costs and benefits of large new loads, are you concerned about the company signing 15-year contracts with no PUC review that may lock in existing customer class structures prior to the resolution of the January 1st, 2026 advice letter filing?
I do have concerns with that. The principles that we've discussed hopefully provide protections in those contracts, but again, we've heard, there's commercial flexibility around the implementation of those contracts, so it's not a full stop thing. And I'll agree with you at a high level, and frankly, would encourage you to punt some of that discussion to my colleague, Miss O'Neill, who frankly has done a lot of work over the years and knows more than I about rate allocation and that sort of stuff.
Just one follow-up on the transmission question. Mr. Eiley testified that transmission investment in the original direct testimony base case was $13.5 billion through 2031, while the low case transmission spending was $12.8 billion, suggesting that almost 95% of the transmission capital spending was independent of large new load growth. At the same time, a series of public service company witnesses acknowledged that there was no detailed line-by-line capital spending plan that outlined the basis for the size of these transmission investments in either the base or low case scenarios. Given the lack of detail, I'm not sure. Do you understand the basis for the company's assertion that it might expect a low case without 1895 megawatts of large new load to require basically the same transmission as the base case? Just any thoughts or comments on that concern that transmission spending seems to be largely independent of these large new loads, even though there's really no detail on a decent part of what that spending is.
Yeah, I understand the lack of detail. I would observe also that kind of outcome you're describing is roughly consistent with what we've seen kind of in a microcosm. It's not micro, it's still pretty big, related to the near term potential transmission needs outlined in the JTS transmission portfolio that was submitted in this case. Frankly, that Mr. Martz testified in those transmission studies looking at a wide range of bookends, and the output of the study, frankly, is very similar levels of transmission needs and costs across all of the different portfolios. That one has some specific projects, and I think you know that from the record we have. And but I can't even tell you that I fully understand why that's the case, beyond some of the comments we've heard that, attributing this more to generation. But I certainly think there's potentially a need and opportunity to dig further into those studies and understand the needs and what's driving them, and look at some things perhaps related to load. And I would also, Ms. O'Neill is our witness on the transmission study and related recommendations, so she can provide even more details than me.
All right. Just one last question on tariff language. In the CEP delivery plan, this commission declined to permit project-specific contract modifications and decided to adjust price across all projects on a technology-specific basis to avoid delay, ensure fairness, and to simplify the process. Do you recall that? I forgot when you came back, but I think you might be familiar with that.
At a very high level. I actually wasn't around or involved in that case in detail, but I understand the outcome as you described it.
All right. And I guess my question to you is, should we do something similar with these contracts? And more specifically, what would you think about general model contract language that allowed an LD adjustment or a price increase for tariff, supply chain, change of law, or tax credit issues that impacted all projects subject to a cap and PUC approval like we did with stage 2 of the CEP delivery, both stage 1 and stage 2 of the CEP delivery plan. As such, this would allow for PUC approved price and LD waiver flexibility across all projects, maybe by technology, but not project by project, in response to certain events that were outside of all developers' control, both UOG and IPP. And I guess, what do you think about that approach? Again, it would avoid delay, ensure fairness, and simplify the process. So just any thoughts on that approach?
Yeah, it's certainly useful to think about this stuff ahead of time, so that we're not caught flat-footed if and when things happen. We've proposed kind of a more detailed mechanism as it applies to tariffs. We submitted our cross-answer testimony, frankly, when tariffs on things from China were 135%, kind of with the possibility in mind. These things are highly uncertain. They're very impactful. We don't want to roll the dice, but we want to be able to adapt if and when they come down, and frankly hope they don't, increase further. So the targeted pass-through mechanism that we propose on tariffs allow those benefits to flow through. If it removes it from the base, it removes that risk from the base costs of the project, so it lowers the project costs, not considering tariffs lower than what they otherwise would be. And if tariffs go down, we have a mechanism to pass those savings on to customers. That was an important component. There's a lot. I mean, frankly, tax credits was starting to get on our radar when we finalized cross answer, and now it's more in a real way. I think at a high level, Chair, I hear the benefits, and specifically the delay, risk that you're articulating is important. I also am concerned about deciding this in a way, as you describe up front, allows bidders to take that into account when they provide their bids. So to the extent you could minimize the gaming of the bids, that's a concern, right? If they know right now that they're going to get a blanket possible increase, and to some extent, some of that is built in, but doing that at a large scale is going to increase that problem, that we're getting bids kind of writ large that know that they can, activate this relief later, so they are a little bit less upfront, in the hopes that they can get selected and then use that relief later to get what they need.
Isn't that a lot more likely in a project-specific approach? What I'm suggesting is that we put contract language into a form contract, and the only way there's a price increase is if the commission approves it for all bidders going forward. It seems like that risk of gaming is a lot more likely if you allow project by project adjustments based on whatever country somebody sourced equipment from. So it seems to me we should be treating pretty much everybody the same. So just curious your thoughts on that thinking.
So if we in a credible way articulate now before the RFP that projects can get relief up to 10% from a variety of things. This is just a hypothetical number. Maybe you said the number. I forgot if you said a number or not.
I didn't.
Okay, so let's say it's a number. Whether that's applied to specific technologies or blanket across all the bids, it wouldn't surprise me if that gets baked into the bid. Maybe there's a bit of a sharing, but such risk sharing that depending on the appetites. But I would expect all the bids to come in. Maybe not if we signal 10%, maybe not all the way to 10%, but some of them certainly could, knowing that they can get that later by coming up with some reason of the list that you described.
But it would only apply to all bids, and it would have to be PUC approval.
I wouldn't be surprised if all the bids, applied that coming in. So that's still my concern. You may see a way out that I'm not seeing, Chair, on this, but I also would want to be. I also would want our process to be able to accept and reflect the fact that different technologies and different projects and sourcing strategies have different levels of risk exposure to these possibilities, and reward those that, all else equal, are hedged better. And your proposal doesn't obviate that, but if it's too blanket and too general, and I'm not saying what you said is too blanket, but if you go to that end, then I would also maybe be sad if it didn't, contemplate that some projects might be better bets in this current risk environment than others, based on where they come from and what the equipment is.
That's all I have. Mr. Cox, redirect.
Thank you, Chairman.
Thank you, Dr. Dalkey.
Thank you, Chair. Just a few questions for you, Dr. Dalkey. Spent a lot of time on hearing Exhibit 131 and discussion of the tariff proposal, and we were just discussing it here as well. But back to hearing Exhibit 131, did you participate in the preparation of that document?
No.
Did the company confer with you about that document before submitting it in the hearing?
No.
Mr. Detsky, Ms. Kutzer asked you about your response to the company's response to your tariff proposal. You mentioned the need for further clarification or modification. Do you recall that?
Yeah, I think there was a few categories of things in that vein. Yeah, I recall.
And you went through the document with Mr. Larson, but are there any additional clarifications or modifications regarding hearing Exhibit 131 that you'd like to share?
I think maybe just take the opportunity to re-articulate. I think it's probably two key things that I see at this point that staff probably would want further clarification on before accepting. And all of this is subject to further kind of clarification when we write up our SOP. Leaning on the point you made, Mr. Cox, that we, this is still a pretty new document that we didn't co-develop. But I do want to stress the importance of, when the company proposes that the bid cost must be reasonable. Reasonable in our mind doesn't mean low, it means accurate. If a battery project, for example, is subject to 135% tariffs when it's bid in under current known rates, if it were delivered under the plans provided, we would want to know that. I think we don't have those tariffs right now, as far as I understand, but many people could reasonably say that 135% tariff on a piece of equipment is unreasonable. But that's not in our control, right? So we want to know what we're signing up for. So if reasonable means accurate, we're on board. If reasonable means inaccurately low, then we oppose. The other one is, I think we just want to think a little bit through more about what the minimum documentation could and should be in line with the competitive concerns. And I do want to extract the key pieces of information related to sourcing and applicable tariffs from it that can be verified in that documentation to the extent possible, while acknowledging that some projects, frankly, may be at different stages of development and firmness of their sourcing agreements. And that doesn't necessarily, in the past, I don't know if that would automatically disqualify a project or not, right? So I'm not, but we can take that into consideration. So I think those are kind of the two key categories of things that we want to clarify and frankly, maybe reflect a little bit further on before writing them up in our statement of position.
And you talked with Commissioner Gilman about her concerns about what the company would do with the tariff related information up front in potentially selecting projects or she used the word discount projects. Do you recall that?
Yes.
And you discussed the modeling scenarios, but are there multiple factors that would go into the determination of the portfolio that the commission would eventually choose?
There definitely are.
And so they may consider other things, emissions reductions, for example, geographic diversity, risk profile, etc.
Yeah, all of that through the modeling in phase 2 and related selection decisions.
And so is it your view that the tariff proposal here, including the modeling scenarios, that would be one additional factor for the commission to consider?
Yeah, that's right.
Then moving to the CFFD proposal, there was some discussion regarding the $100 million budget cap. Do you recall that?
Yes.
If you could expand a little more, provide a little more clarification about why you believe the budget cap is still needed.
Yeah, thanks, Mr. Cox. In addition, kind of to the motives and reasons I gave in the response to some other questions, we thought through and had a concern, frankly, related to the makeup of the advisory group. We're not opposed to the proposal of the advisory group. We're not recommending specific changes, but as currently proposed, I believe there's 8 members, staff, UCA, CEO, an environmental perspective, 2 community perspectives, one from Pueblo and Hayden, I believe, subject to check, and the Office of Just Transition in the company. That leaves 8. There's some coalitions of simple majorities within that could occur on projects that aren't necessarily bad, but would motivate me to have a cap in addition to the other checks, so that it doesn't hurt. I don't think it'll slow down or take away the need of the or the value of the program, but just looking at it from a simple customer perspective, there's majorities within that advisory group that aren't solely focused on representing Fiasco electricity consumers and so on. And I'm not even suggesting that it'll go one way or another. It's just, given the makeup, we thought a cap would be a prudent additional guardrail.
Thank you, Dr. Dockey. That's all the questions I have for you.
Thank you.
Dr. Dockey, thanks for joining us. You can be excused.
My pleasure.
Mr. Larson.
Apologies coming in out of order, Mr. Chair. The company prepared to waive Mr. Iden, who's going to come on after lunch. I believe we're the only cross-examination for him, so sorry to step in. I just wanted to, we reviewed our notes and don't have any questions for him.
Mr. Barrasso, well, hold on, let me check. Ms. Concelia. Well, let me finish this. Commissioner Gilman, do you have any questions for Mr. Iden?
I may well. I'll let you know after lunch, but not prepared to let him go just yet.
All right. So we will not excuse Mr. Iden quite yet. Ms. Concelia.
Your Honor, I was wondering if you could share with us whom you think will be called this afternoon. I'm hoping it's not Jeff Shaw, because he's got some business commitments. He is available tomorrow morning after 11.
We will not call Mr. Shaw until tomorrow morning and work around his schedule.
Thank you.
Ms. O'Neill, are you out there?
This is Harriet. Given that we started at 7:30, do you think we could take an early lunch and then maybe like it's almost
Yeah.
it's 11:45. We're pretty close. And
Uh,
it's been a long 4.5 hours. Whatever.
For all of us, Ms. Weisenthal.
I bet.
Yeah, with that, let's take a 45-minute break till 12:30. Thanks all.
Appreciate it.
Yeah, Mr. Barrasso. Well, Mr. Barrasso.
Yeah, sorry, Chair. Just confirming, will we be coming back with Mr. Iden at 12:30, or are we taking Ms. O'Neill first?
Let's do Ms. O'Neill first, finish the staff case, and then we'll go to Mr. Iden next, and then we'll know by then Commissioner Gilman will let us know if she has any questions for Mr. Iden and Commissioner Planto. I do not.
Sorry, were you saying you would have Mr. Iden on the stand after Ms. O'Neill, or we would just answer the question on if he's off the hook?
We'd answer the question if he's off the hook first. We'll go through Ms. O'Neill, and then we'll go to Mr. Iden. If that works for you.
Yeah, I didn't understand he was going out of order. Is that the plan?
Yeah, he's only available today. So we talked about taking him first thing after lunch. The company's now waived their cross of him. So we're trying to decide if we can excuse him or not.
Thank you. Sorry.
Commissioner Plant. All right. See everybody at 12:30. Thanks. Maybe I'll swear you in, Ms. O'Neill, while we're waiting for your counsel.
Sure.
Can you hold up your right hand? You swear to tell the truth, the whole truth, and nothing but the truth?
I do.
Put your hand down. Is anybody with you or communicating with you in any way?
No.
That changes. Will you let us know?
I will.
Back to you, Mr. Cox.
Thank you, Chair. Good afternoon, Ms. O'Neill.
Good afternoon.
If you could please state and spell your name for the record.
My name is Erin O'Neill. First name is Erin, E-R-I-N. Last name O'Neill, O''N-E-I-L-L.
By whom are you employed and what is your title?
I am employed by the Colorado Public Utilities Commission as a Deputy Director of Fixed Utilities.
Did you cause to be filed in this proceeding answer testimony, including attachments marked as hearing exhibit 2601?
Yes.
If I asked you the questions contained in your answer testimony, would your answers be the same?
Yes, with one minor edit.
Ms. Federico, if we could pull up what's been marked as hearing exhibit 2601, Rev 1, staff's box. Thank you. Ms. O'Neill, is this your answer testimony?
It is.
We can go down to page 71. Can you briefly summarize the changes that are proposed here in the red lines?
Yes, in reviewing my testimony, I realized that for both tables ETO 9 and ETO 10, the label is indicated that it was total accredited capacity in that third row, and that's inaccurate. It is that those are actually reflecting the total nameplate capacity, and it's a similar edit to table ETO 10, which I believe is on the next page, 72.
I think it's on page 74. You can scroll down. There we go. And those are the only two changes that you had to your testimony?
Correct.
Staff would move to admit the public and highly confidential versions of hearing exhibit 2601, Rev 1.
Any objections?
No objection.
Hearing none, so moved.
And we can take that exhibit down. Thank you. Ms. O'Neill is available for cross-examination.
And I forget, is the company going first or is Cosa Sia going first?
I believe Cosa Sia is going to go first, Mr. Chair.
And are you going last on all witnesses or just staff witnesses?
Yes, sir. That would be our preference, to go last on all witnesses.
And all right, Ms. Kitzer, 5 minutes.
Thank you, Mr. Chair. This will be relatively quick and painless. Ms. O'Neill, it's nice to see you.
Nice to see you too, Ms. Kitzer.
I have a few questions for you regarding the now quad party settlement. If we could maybe have that available, I think the most recent version is now hearing exhibit 145. And Ms. O'Neill, were you present when company witness Mr. Martz was being cross-examined?
For most of it, yes.
Okay, great. I have a few clarifying questions as to staff's position on the new settlement agreement on hearing exhibit 145. It's that term 7 where we're going to be conducting a small stakeholder group on transmission cost assumptions. Do you generally remember that provision in the framework?
I do.
Okay. Do you need it to be pulled up, or are you okay answering some quick questions without it being on the screen?
I think I'm okay answering questions without it being pulled up.
Okay, great. So it was unclear to me after cross of Mr. Martz as to what that small subcommittee is planning to focus on. More specifically, if that small group is making adjustments to the company's transmission adder as well as its transmission credit. And so I just love your perspective on what you expect to come out of that stakeholder process.
Yeah, so I think part of why it's vague is that the exact scope of that there be a stakeholder process is what we agree to. Exactly all of the things that will be covered in there, I think, is still somewhat open to discussion. On the transmission adders, it's staff's position that we haven't changed our recommendation from our answer testimony, which is that we think it would be appropriate to treat the approximately $1.9 billion line that is the New Harvest Mile double circuit line as a fixed cost and have a much smaller variable cost. I believe it is still the company's position that the entirety of those transmission costs be treated as a variable cost. Staff did have a backup position that if the commission wanted, it could try to have the stakeholder group address that, but that is not staff's primary recommendation. Our primary recommendation is to have that transmission adder decided here as part of the phase 2 process. On the transmission credits, it's slightly more nuanced. Staff's position is that that the analytical support for the calculation of the transmission credit was not robust enough, that we're supportive of the process of comparing transmission portfolios to try to understand the benefits of distributed resources located in the Denver metro area, but that the actual analytics that had been performed by the company was insufficient, and that the commission should adopt kind of the basic methodology of comparing transmission outcomes, but that the company should do additional transmission modeling to fix some of the deficiencies that staff identified in our answer testimony. So that slightly different perspectives on adders versus credits. And then the rest of the scope of that stakeholder group, I think, is fairly well agreed upon, that the intent is to move towards identification and hopefully having CPCN applications come out of that process that would support the portfolios in this proceeding. I think staff is also interested in some additional modeling of transmission drivers and insights, similar to what I think the chairman was actually asking Dr. Dockley about earlier, in sort of a lacking of understanding of some of the longer term drivers of transmission costs, and that being a potential venue to explore some of those ideas.
Ms. O'Meal, one last question. To the extent that that small group, and that was a very helpful answer, to the extent that that small group comes up with any recommendations as to adjustments to the transmission adder or the transmission credit, how do you envision that to be introduced into the record? And do you expect that there would be an opportunity for written feedback on those findings?
Yeah, that's a great question. I think that what we had envisioned is those updates occurring sort of similar to the way that the company updates its load forecasts or updated its generic resource pricing, that there are certain things that get updated as right before the RFPs go out or as part of phase 2, and that the intent was to do something similar here, would be to provide a notification of here's the final methodology or decisions, and that there would be some ability for folks to comment if they had concerns with those updates.
Thank you, Ms. O'Neil. All the questions I have for you. Thank you, Mr. Chair.
Thank you.
Thank you. Thank you, Ms. Kitzer. Mr. Larson, I have 20 minutes.
Thank you, Mr. Chair. Good afternoon, Ms. O'Neil.
Good afternoon, Mr. Larson.
For the record, Matt Larson on behalf of Public Service. I just have two areas wanted to discuss with you today. First is the transmission adder very briefly, and then I want to talk about attachment SJD9. Dr. Dalkey said you're the appropriate witness SJD10. You're the appropriate witness to discuss the portfolio presentation. Okay.
Correct.
So if we could start actually, and maybe it's helpful to pull up the document. If we go to the document that was just submitted into evidence, hearing exhibit 2601, Rev 1, and go to page 72. Thank you, Ms. Kunkel. And I'm focused here on lines 1 through 8 of your answer here at the top of page 72. And my question based on that is this, which is, all else being equal, a higher transmission adder is going to produce a smaller portfolio. Isn't that true?
It is going to produce a higher transmission adder will increase the costs and therefore the model will be less likely to. Sorry, I'm making that more complicated than it needs to be. Sorry. All else equal, a higher transmission adder will likely result in a smaller portfolio by nameplate capacity.
And part of what a higher transmission adder could do is deter the model from selecting higher amounts of energy-only resources that are not needed to meet capacity needs. Isn't that true?
I think you're imputing a lot of information to the transmission adder. The transmission adder will tend to favor portfolios that have higher nameplate capacity, higher ELCC projects, but in staff's view is not an accurate reflection of the actual transmission costs associated with such resources.
Yeah, and I understand we have a disagreement about the value of that adder. I'm just talking about the functionality of that adder. And my question is that it could deter the model from loading and stacking on energy-only resources as we've seen in the past. Isn't that true?
I think the flip side of that, Mr. Larson, is that it could encourage the model to pick high ELCC gas and storage resources in order to avoid a fictitious variable cost. So yes, it could do what you're saying it would do. And the flip side of that is the opposite, that it will pick high ELCC gas resources based on faulty economics.
But part of it could be managing the size of the number of energy-only resources that are put within a portfolio, correct?
So I think there's a distinction between what the modeling will report and what actually occurs in terms of costs. So having a higher variable cost associated with the transmission adder will tend to have the model select smaller portfolios and portfolios that are heavier on high ELCC resources. But that's different than actually saying that you will have avoided transmission costs when you do that.
So if we could we can take this down. Thank you, Ms. Kunkel. If we go to attachment SJD 10, hearing exhibit 2606. Ms. O'Neill, can you see that okay?
I can.
All right, so just a few questions, and I'm focused on the far right here, which is, so as I understand it, as part of the SIR rebuttal case, staff has now proposed 14 different portfolio presentations and then the 4 alternatives at the very bottom. Is that right?
That's correct.
And 2 of those are checkpoint cases reflected number 1, number 2, right?
Yeah, I think staff doesn't love the term checkpoint, but yes, I think we are aligned on what those cases are structurally, maybe not as aligned on exactly what they're for.
Nomenclature notwithstanding, they have no constraints within them for purposes of modeling from an emissions perspective, correct?
Correct.
And then you have 2 informational LCPs, which are 3 and 4, correct?
Correct.
And then 4 ownership cases, which are 5 through 8, right?
Correct.
And so these 8 generally match PSCo's proposal, correct?
Yeah, with one minor difference, which is sort of long-term emission reduction assumption. I think we kind of reverted a little bit back to what you all had, our understanding of what you had proposed in direct testimony in terms of having an assumption of a linear decline in emissions until you get to 2050, as opposed to having no constraint after 2030. But otherwise, those scenarios are all, essentially constructed the same way that the company had proposed for their solution set.
Yeah, I saw that. That's actually one of the questions that I had was, and this is a genuine clarification, why for portfolios 5 and 6, which are the ownership 80% by 2030, 100% by 50, why are both of those linear, but then the 90 cases are not linear? We were curious about the logic behind that, if you could provide any additional information.
Yeah, happy to. So I think our logic there is that it is difficult for us to imagine a world where for 20 years between 2030 and 2050, Colorado makes no incremental commitments on further reductions in CO2 emissions. So it is clear that nobody knows, right? We don't know what new statutes or requirements will be put in place, but it seemed sort of unrealistic to assume that there would be nothing after 2030. And so that sort of was our preference for the sort of 80 by 30 cases to have a continued linear reduction after that. And then for the other two cases, there is an incremental reduction, but which is the 90 by 2033. And that felt like, again, I don't know I'm not going to predict what happens after 2033 or even after 2030. But that seemed like at least that's an acknowledgement that there is an expectation of additional emission reduction requirements for the state after the sort of the imminent 2030 goal. So that sort of satisfied that condition of like, there is something that happens after 2030. It's either the linear reduction or the 2033 requirement.
And then with respect to portfolios 9 and 10, if I understand these correctly, these are variations on the accelerated emissions reduction cases, and they have an 86% target in 2030. Is that right?
That's correct.
And the social cost of carbon would be utilized in both of those cases. Is that right?
Yeah, I mean, and if I may
I was going to ask why.
Yeah.
So please.
So I think those cases in our minds were intended to provide a bookend of sort of a more, I hate to use the word aggressive, but a more like, more pressure being put on CO2 emissions. And if that's the intent of those cases, to understand sort of how much we might be able to do and what the cost of that would be, those cases are constructed to put sort of maximum downward pressure on CO2 emissions. So it just seemed appropriate that both of those would include the social cost of carbon, that as they're planning and dispatching the system, that would be, planning the system, not dispatching, that would be part of the decision making in those cases. They're intended to be bookends, applying as much downward pressure on CO2 emissions as we can and understanding the costs of those pathways.
And the 86 comes from the value of the approved clean energy plan, correct?
Correct.
And I'll represent to you that public service would agree to that 86% in select cases like this one. And given that across portfolios 1 through 10, staff and the company relatively close in terms of the content of these portfolios, correct?
Good to hear, Mr. Larson. I think the intent was to have a great deal of alignment between portfolios that you had recommended and ones that we think have value.
And we're also recommending the same number of portfolios. I want to talk about 11 to 14 in a moment, but we have 14 portfolios on the Piesco side. Staff has 14 portfolios on the staff side. Isn't that true?
That is true.
So on 11 to 14, there's this notion of match PP, which I assume means match preferred plan. And we looked at the note associated with this, but can you describe the process that you're envisioning for match preferred plan, but then testing these 4 futures?
Yeah. So, I mean, it's our assumption and understanding that the portfolio that the company will ultimately sort of identify as its preferred portfolio will be one of the company ownership cases, right? But we do not know which one, whether that would be numbers 5, 6, 7, or 8 under sort of staff's listing, right? And so it's unclear at this point in time, again, which one of those 4 would ultimately be brought forward by the company as its preferred plan. And in the interest of trying to get more insight and understanding of that preferred plan, but also to be, careful not over using just the right amount of analytical support, the idea behind portfolios 11 to 14 would that they would be based on whatever the company actually brings forward as the preferred plan. So say the company's preferred plan is the number 8. You're assuming modeling with social cost of carbon and assuming an emissions constraint of 90 at 90 by 2033, that would form the base, like that's kind of the base plan. And then scenarios 11 to 14 would be variants of that. And so there would be a now test of having slightly less company ownership constraint around that specific portfolio, having a lower gas requirement or constraint around that portfolio, so that we're testing the company's preferred plan. So we're trying to get more insight into that specific plan and how much different variants change the cost and dispatch of that system, of that portfolio, but also not to create solution sets which are 4 times of everything, right? We're trying to be circumspect with our analytical time and energy.
So let's take low company ownership as an example. And let's say, to use your hypothetical, we're in portfolio number 8 is Public Services Preferred Plan. I want to see if I got these steps right, and you can confirm that or not. We would lower the ownership constraint, but then it would be a full reoptimization based on all the bids that are eligible for computer-based modeling, not some subset of the bids. Is that the correct way to think about it from your perspective?
That's correct. But again, that scenario constructed the same way as the preferred plan. So with the social cost of carbon on a 90 by 2033 emissions path, just one variant off of that. It wouldn't trigger 4 variants off. Just, yes, reoptimize that constructed case with lower company ownership constraint instead of the 50%.
And then can you just briefly describe how the no tariff cost case or the alternative tariff case would be run? Let's use the same example where portfolio number 8 is the company's preferred plan. But if you could address that.
Sure. So the intent there is that, assuming that staff's recommendation is adopted where bidders are identifying the tariff costs, included in their bids as specific separate costs, a no tariff case would be, intended to try to understand how much a portfolio cost would change and what bids might change if you re-optimized, assuming that there were no tariff costs. So rerun the bids, take out the tariff costs that were included as a separate line item, and re-optimize that portfolio to understand, again, how much costs are being associated with the tariffs and whether different resources would be selected if those tariff costs were to go away. And then the second tariff alternative, number 14, is sort of intended to be a similar test, but maybe a little dependent on the starting point of it's a little unclear sitting here today if we're going to be in sort of a high tariff or low tariff regime when you come to actually doing the phase 2 modeling. We've seen tariffs range pretty widely in the last couple months. So the intent there was to sort of have some discretion that says if the sort of background tariff rate is relatively low, 10% kind of level, then maybe you run a case that doubles that so that you can sort of understand the risk of an increase in the tariff cost after the time of bidding. And again, just take whatever was identified as tariff costs, double those costs, re-optimize, see what difference that makes, and vice versa. If you're in a high tariff regime and want to understand what the impact of having a somewhat lower regime would look like, you would have those tariff costs and rerun it. It's just it was an attempt to try to be able to quantify and understand how much difference it makes to the resources selected and the overall cost of the portfolios.
And in terms of thank you, that's helpful. And in terms of implementation of this, so in the no tariff cost run, is it your view that we would simply take the CKTE component of each bid, pull that off, and then re-optimize without that CKTE component in there? Is that how this interrelates with Dr. Dalkey's staff or the tariff pass-through?
Yes, that's correct.
And then same thing for the alternative. Either take the CKTE value, cut it in half, or 2x the CKTE, re-optimize again?
Correct.
Thank you. That's all the questions that we have. Appreciate your time.
Thank you.
Thank you, Mr. Larson. Commissioner Gelman.
Hi, good afternoon, Ms. O'Neill.
Good afternoon.
Okay, I have a few questions. Hopefully they're in some order that makes sense, but
all good.
Few weeks. Okay. Some questions about portfolios. And you know what, we might as well just look at that exhibit we just had up anyway, that shows staff's portfolios, attachment 10. You can bring it back up. It helps me to glance back at it. Okay, so I talked with Dr. Dalkey about staff's recommendation to use the tariff information to run a portfolio, which I think here is like kind of 13 and 14 and some variation. Is that fair?
That's fair.
Okay. So help me understand what I'm looking at. So the no tariff costs would there's already some tariffs probably going to be baked into the bids, right? Like there are tariffs today.
Right. That's our expectation.
But who knows?
Yeah. No, that would be the expectation, right?
So with the no tariffs, is that no new tariffs or that's no tariffs?
The intent there was to be no tariffs. So again, taking the portion, like putting this in context with all of staff's recommendations, right? We're recommending that bidders provide information specifically about what tariff costs are included in their bids. And so this would be take those costs out and re-optimize and say, there's uncertainty around the tariff costs, whether they go up or down, and also just trying to get a better understanding of how much of the costs of the portfolios is being driven by those tariffs. So again, do a run, take off those costs entirely. So it's not just a no new tariff assumption, as you said. That's kind of would be the base. The tariffs will be whatever they are when those portfolios are being run. This would be take all those costs out and re-optimize.
Okay. As opposed to, like all the prior portfolios listed on here in the staff's rebuttal would include whatever tariffs were disclosed as part of the total pricing at the time they were bid, right?
Correct.
Okay. And then 14 would somehow alter the tariffs to test a case where tariffs change.
That's right. So again, whether a few months ago when we had 140% tariffs on China, I would have argued that we should look at a case that's sort of maybe a half the tariffs case. As we sit here today, those Chinese tariffs have come down a fair amount. So, maybe there's more value added in rerunning a sort of high tariff case where we're doubling the existing tariff costs. And again, the point here is to understand how much difference it makes, understand whether there are portfolio or whether there are projects that show up in all of those cases, which ones get traded out for which other ones. And so, it provides information to the company and to parties such as staff to look at that and say, is there some project here that looks to be less or more sensitive to tariffs that would be included or excluded from portfolios across the sort of range of tariff looks, so that we have some sense of which ones of these projects have more inherent cost risk associated with them. And again, looking at this holistically with all of staff's case, we're arguing that there should be some process for price relief associated with tariffs as something beyond the control of bidders. But if there are projects that are less sensitive to those tariff costs and represent less risk to ratepayers, it would be nice to understand that. And so that's part of what we're trying to do here, is understand, given this moment in time, tariffs are a potentially big price driver and big determinant of these portfolios. So feel like it would be helpful to have some analytics to understand the order of magnitude and relative risk across projects from those tariffs.
Okay. And is it your understanding that kind of these variations that go into portfolios 13 and 14 are more or less the universe of what the company is doing with that information, or are they doing some other undefined ranking, exclusion, promotion that we don't have information about?
Yeah, so it is not my expectation that they would be doing that. I mean, I think the analytics, this is the point of phase one, is to establish these analytics. It's why they report on things like generic pricing and their loads, so we can all understand sort of in as robust a way as possible the underpinnings to the quantitative analysis. would it be helpful, similar to maybe a BBEM metric or something, to have information that ranks, the proportion of a bid that is, a result of tariff costs? I think that would be helpful information for the commission and for interveners to have. But in terms of the analytical process of modeling and Encompass, it is not my expectation that information is being used elsewhere. That's kind of the point of these cases, is to have that analytical look at it. But just like the reputation of a bidder or something like that, parties, including the commission, has discretion to look at these things holistically and try not just to do least cost planning, but to take into other, non-quantitative factors as well. So short answer, companies should model quantitatively, like they need to have that. And this is kind of the point of the phase one, is to set out all that quantitative analysis. Commission and other parties and the company have some discretion to argue that certain things make sense based on qualitative factors if they can carry their burden to demonstrate why that's better in the public interest.
Okay, thank you for that. I hope this is my last question on tariffs, but since tariffs are set potentially on a per country basis, presumably goods are coming from a number of countries. There may be predominant suppliers, but how do you go about testing the assumption on the maybe it doubles, maybe it halves, whatever that ends up being, when really the exposure could be very different depending on what country? Like, the details matter. And so just testing every portfolio by the same multiplier might be a very rough way to do this.
Yeah, I agree with that. So I guess, I think that's true. I think there's still information content in doing it that way to sort of understand which one seems to be most sensitive to it. But I'm just trying to think if there's another way to do that, if there's some way to have bidders identify where things are coming from. But that also gets to be very complicated. The intent here was to have it something that was relatively straightforward from an analytics standpoint, so the company knew exactly what it was supposed to do, and that there was no sort of discretion or bias that was sneaking into that process. So I agree with the concern, and frankly, it's a little of the concern I have with the chairman's question of Dr. Dockley about sort of a process for giving across the board tariff relief. If we should need to go down there, that there is, or potentially could be, a lot of variation across projects, depending on where they're sourcing equipment and whether they have equipment on hand in warehouses or whatever. I'm not a developer. I don't know what all their options are, but agree that I think that there's different projects would face different risks. I think we still felt like it was valuable information to get an understanding of how much risk the ratepayers might be facing looking at tariff cases, but agree, it is not perfect.
Okay. Just trying to figure out from that table, has staff kind of dropped its request to have different forecasts modeled in phase two?
Yes. I mean, I think largely we felt like the quad party stake framework, sorry, it doesn't quite roll off this tongue the same way, that kind of addressed staff's concerns about load uncertainty, and that the point of having the incremental need pool and second RFP was to do some of what staff was hoping to in those sort of different load forecast requests, of planning for the load that we're pretty darn sure is going to show up, and have some flexible process to be able to address other load as it becomes more firm, and that sort of alleviated the need for a lot of analytics around a base and high load forecast in the phase two scenario modeling.
Okay. And you proposed 2 accelerated emissions cases, number 9 and 10, right?
Mm-hmm. Correct.
Although I guess I'll note, accelerated in this sense would hit 86% carbon reduction by 2030, which essentially was the result of the 2021 ERP CEP, right?
That was the projection from the last ERP, correct?
Okay. And then, so both of those 9 and 10 cases, as I understand it, you would have also be bound by the 90% by 2033 additional requirement, and then they would kind of move differently from there. And I was kind of wondering why, and if that's an appropriate kind of additional, you know, if we just want to test the what happens if we stay on the same track we were supposed to be on before, really, should we or do we need to saddle both of those test runs with an additional emissions requirement?
Yeah, that's a good question. I mean, I think it was, we definitely wanted to have one case in there that was kind of the bookend. So sort of kind of throwing everything at the emissions reductions that you could. So yes, social cost of carbon, 86% by 2030, 90% by 2033, linear reduction after that, just really saying like, this is the outer bounds. So the commission can understand sort of what that cost looks like. And then sort of felt like this was an important enough issue in terms of what we're doing here from a planning perspective to have a second case that was a accelerated emissions case. I can totally see the logic of what you're suggesting of having a somewhat different sort of intermediate accelerated emission case. These cases clearly are intending to try to understand the full range of outcomes. And again, I think a lot of testing the company's preferred plan. You know, I'm not sure staff would have a preference between what we suggested and your recommendation of sort of doing something similar, but backing off the 2033 goal. I can see that as a sort of intermediate, but still accelerated case, that also makes sense.
Okay. And then with regard to the use of the linear increase in emissions reduction, sorry, moving forward, a kind of similar concern, is that kind of an unnecessarily stringent boundary to put on, since resource acquisition is in no way linear? You know, would that potentially lead to more costs or lumpier acquisitions than would be natural and kind of just give a bizarre or skewed outcome as a potential?
So let me talk about this in terms of the non-accelerated emission reduction cases first, and then the other one. So I think the answer is no, that again, most of those cases sort of that have a 80 by 30 reduction, you know, the company's phase one modeling, I think, projected an 84% reduction was their current expectation for 2030. I think we expect to sort of start in a position of still being somewhat over complying with the current statute. So you kind of have some wiggle room there. And then the linear reduction is from the 80 by 30. So you're just, it's, what does the model need to do to make sure it stays ahead of a linear constraint going forward? One that it's going to sort of have started by being a little bit over complying with. And I think that's analytically not, I'm not the model, so I'm not doing the heavy lifting, but I don't think a linear programming model like Encompass would have a problem instituting that constraint. It's just another constraint as you go, through the end of the planning period in 2050. What do you need to do to add resources to make sure you stay ahead of that constraint? Obviously, that playing a little bit more catch up in the accelerated cases where you're starting with 86 by 30, so it's going to be harder and it's going to be pushing for more additions sooner, but it's still the case that it's just a constraint that the model sees, that it knows that it's just going to need to add resources to make sure it stays ahead of that constraint over that period. So I don't see that as being particularly problematic for the model.
Okay. And in your testimony, you note that Public Service needs a phase 2 portfolio that identifies incremental clean energy plan activities for the purpose of the CEP rider. In rebuttal, the company introduced these, I understand, not your favorite language, checkpoint portfolios that would have basically no emissions reduction requirements. So I'm curious, do you think that those portfolios kind of provide that lens of the contrary, I guess, situation upon which to calculate a CEP rider, or do you see something else as being necessary to serve that purpose?
No, I think that is, in my mind, that is the purpose of those, is to determine whether there is any incremental CEP resource that needs to be added to the SEPR rider and to identify what that resource is. I'm not saying it's a great use of analytical firepower, but I do think it's required to have that understanding of whether there are incremental CEP resources.
I think there were 2 of those checkpoint portfolios. I don't want to change my page or I will lose where I am. But
no,
is there one in particular you see as the baseline? I remember in the 2021, we called it the baseline ERP. Here we're calling it checkpoints. But is there one in particular you see as the appropriate one for that use?
So we were a little unsure about that, which is why we left them both in. I could kind of probably make an argument either way. I think that the statutory requirement around this says that the baseline portfolio is supposed to be modeled with the social cost of carbon. But I think that logically the sort of unconstrained case is kind of the baseline for the calculation of the SEPR, which is why we left both of them in there, is to make sure we're checking the statutory requirements to model the baseline case with and without social cost of carbon. They're both there. And then I think staff would argue that it's probably the without social cost of carbon that is the better basis to determine the SEPR.
Okay, thank you. And then you also listed at the bottom of your portfolio table, you had alternative other cases. So are those like if we elect to run more portfolios, if we have time, in what circumstance do those come in?
Yeah, so I think that was our intent to say, like, here's some other things we think if we were commissioners, we might be interested in. I do think you heard the company say there was a little bit of wiggle room on the 14 portfolios. I think not a lot, and I think staff would support that. We don't want to be in as delayed a situation as we were in the last ERP. So I think it is very important to keep those to a constrained number. But I think there are other things that could be helpful to the commission to understand. Modeling of the just transition credits. I know there's other folks that were interested in that. The last time we did an ERP, we modeled a high project labor agreement portfolio. So I think there are other things that the commission could be interested in. And I think our scenarios was a reflection of what we thought that staff thought were the highest priorities, but also recognizing that you might not agree with us. And so if there's a scenario or 2 of our suggestions that you don't feel like has a lot of value added, maybe there's another case like a high project labor agreement or something case that you think would be more interesting. This was our attempt to suggest things that you could replace as things of interest. And then if you'll permit me, I think through the course of the hearing, I might add one to that list of things you could be potentially interested in, which would be a no PTC extension portfolio of understanding what this would look like if the production tax credits and investment tax credits were not continued, or there was a change in federal law around the PTCs and ITCs. That might be also a scenario that the commission could be interested in understanding.
Okay. Thank you for that. A question on portfolio 16. It was one of your, if we feel like it, alternative cases. It was titled Just Transition Credits. And I just wanted to understand the basis of that. So in your other portfolios, like I was trying to understand, is that akin to Just Transition adders? So do your other portfolios not have Just Transition adders, and this would just be one portfolio that has those? Help me understand the variation there on the treatment of Just Transition adders across your portfolios.
Yeah, thank you for the question. It's helpful to clarify. I think generally speaking that the staff did not take issue with the recommendations of the company to essentially model all of the portfolios, including the transmission credit, just transition credits. So it's our assumption that sort of the other scenarios would include those just transition credits. And then, there have been a number of parties in this proceeding that have recommended running a case without them so that the commission can understand the cost and changes in portfolios if those just transition credits were not included. And so that was the intent of that, is to assume that basically their base set of scenarios would all be sort of as the company had recommended, including the just transition credits. But if the commission were interested, run a case where there were not just transition credits.
Understood. Okay, cool. Question about gas price sensitivities. I know staff recommends not including gas price sensitivity. Given really the significant demand we're seeing around gas ETs, export of LNG, as well as projections across other proceedings on decreases in retail sales, which potentially could impact cost allocation, especially for these firm customers. I just wanted to understand if you didn't think that would meaningfully change any of the models, or why we wouldn't want to kind of understand a variation under a higher gas price scenario.
Yeah. So I think it's our expectation that the amount of impact of a change in gas prices is going to be pretty minimal. You know, the gas CTs are driven by the need for dispatchable resources and don't run very much. And so I think our expectation was that they will be a smaller and smaller portion of the portfolio as we go forward, as we get to deeper and deeper levels of renewable penetration, and they will run less and less. So the need for the CTs is driven by the sort of capacity need to have them on the system to be able to call them, and that, you know, a little, you know, a change in the gas price is, you know, slightly more efficient, you know, better heat rate isn't going to be the driver of the need of those resources. And so again, it felt like from in trying to be circumspect about what makes sense to poke at from an analytical perspective, the gas price sensitivity didn't seem like the thing that was the most important to test. The need for those resources and the cost of the portfolios isn't really about the fuel price. It's about having the dispatchable capacity that runs as little as possible.
Okay, thanks. Another question about portfolios. I noticed staff doesn't have a ISO or RTO portfolio, at least doesn't show that as a variation recommended to be modeled. And I'm curious, with the statutory requirement that the company join an organized wholesale market within the wrap, you know far more than I do, because I know you participated in the study at the commission as to potential savings associated with, especially full RTO participation. Just curious in your perspective on that, and what, if anything, you think would change as far as modeled characteristics, and why we wouldn't be including that if that's a statutory requirement.
Yeah, so I guess I haven't actually thought too much about this one, but I'll say a couple things, and then I might need to clean it up later. So I think the level of detail that the model can get to in terms of sort of intra-hour treatment of curtailments and things like that is limited. And so it's a model, it's doing a decent job. Hopefully we get to do better and better over time, but a lot of the benefits of things like the, you know, the imbalance market and even the day ahead market is about very, very detailed dispatching of the system and intra-hour dynamics and curtailments. And I'm not sure that the planning model is going to be the best model to try to capture.
And I want to focus specifically on full RTO.
Yeah, I agree. So that's just sort of to start with. So, and then in terms of full RTO, I mean, I think you heard the company themselves say, right, they are still going to have a resource adequacy requirement. They need to show up to an RTO able to meet their own resource adequacy requirements. That it's unclear, you know, how I don't know what planning reserve margin or whatever I would back off of or change as a result of the RTO. I don't think we know that today, and I don't think it's going to, you know, again, change the company's resource adequacy requirements. It potentially, you know, once you're in a full RTO and doing joint long-term transmission modeling, hopefully we see some benefits to that and some, you know, economies of scope, at least in doing a better job with regional transmission planning. But that's not primarily what this model is intended to capture. So I don't think within sort of the error bars of the modeling, it doesn't feel like you're going to get enough sort of robust analytical information from trying to create an RTO scenario here that you could really rely on or use for any decision making in that way. So again, did not meet the list of scenarios we felt were worth the analytical effort.
Okay. And then I asked you, because you did write about PIMs to some degree, maybe not these PIMs, but given the company's suggestions on conforming bid policy and PPA terms, many of which would significantly restrict future price adjustments, things of that nature. I was curious if you thought PIMs were a mechanism, or we had some other more appropriate mechanism by which the company, as you know, potentially the single largest bidder, would also live by the same means as the other bidders.
So I guess I'm not sure. So in terms of the actual, like the details of the bid policy pieces, I guess I'm not sure which. We do know have an approved PIM sort of structure. I think for the resources that came out of the last ERP, it's staff's current position, and I talked about this in testimony, and I don't think we've changed our mind that, you know, we want to continue with those PIM structures that we sort of just approved with the projects that come out of this ERP. But we are interested in having the company do some reporting on what a PIM that looked more like a PPA structure would do. The company is opposed to that, but I think, you know, to get a more fulsome understanding of sort of how the PPAs versus company-owned projects differ, it could be helpful to have that reporting around those kinds of PPA versus company-owned sort of PIM structures. But in terms of actual PIMs, operational cost to construct PIMs coming out of this proceeding, I think believe it makes sense to sort of keep on the path we're going, you know, implementing the same kinds of structures that were just approved for the projects in the last ERP.
And would it make sense to align the potential cost to construct price modifications from bid to CPCN with whatever the same kind of bid modification pricing allowances are contained within PPA?
I see what you're saying. Yes, I think that would make sense.
Okay. One other question on forecasting. You've heard me ask this question too, but I mean, given the significant swings we've seen already in forecasting within this proceeding, are you concerned? Do you think we need a different process than in the past, more heads up? You know, if we see any sort of major deviation in forecasting, especially if, say, the commission orders any modifications that then need to be followed up upon. Yeah, do you have any concerns both for the base RFP and supplemental RFP on what, if any, process would occur to kind of vet or review that forecast before we go straight into bidding?
And by forecast, you're speaking specifically about the load forecast.
Load forecast, yeah, sorry.
Yeah, no, it's all right. Yeah, I agree with you. I mean, I think in some ways this is one of the central questions in this ERP is sort of what is the load forecast? What are we doing? How are we reacting as it changes over time? And so having a process where the commission is made aware of significant changes. I think there's obviously a balance because every time something changes, you don't want to be informed of it, but you know, periodic reasonable updates. I think Mr. Eiley said this morning that the company could commit to providing information 30 days before, 30 days before the RFP went out. I don't remember exactly what the trigger was, but that seemed like a reasonable process. And I think having some ability for parties to comment on that could also make sense without creating more process that we can't actually keep up with.
Okay, those are all the questions. Thank you for coming.
Before we go to Commissioner Plant, Commissioner Gilman, did you have questions for Mr. Iden, the WRA witness? I forgot to ask you after the break.
I do, yes, sorry.
Okay. Commissioner Plant?
Thank you. Good afternoon, Ms. O'Neill.
Good afternoon, Commissioner.
I don't have much to add to what Commissioner Gilman asked, except I did want to kind of come back to one of the points as it relates to the various models. And I had a similar conversation with Mr. Landrum. But in your view, and I didn't quite understand this in your discussion with Commissioner Gilman, what is the value of the checkpoint cases?
Yeah, so the statutory structure of the clean energy planning, right, creates a rate mechanism, the Clean Energy Plan Rider, the CEPR, which is up to a 1% adder for recovering the costs of incremental resources. So it's resources that are needed to comply with the Clean Energy Plan, but that would not have otherwise been needed but for that CEP planning. And so there has to be some mechanism to identify what are those incremental resources. And unfortunately, because I'm not saying this commission is particularly interested in that but-for case, to do that, you need to understand what the base is. Like, what would we have approved as resources in the absence of the Clean Energy Plan? So the last ERP was most of that clean energy planning, right? But this resource acquisition period does cover those last 2 years, 2029 and 2030, of that clean energy planning sort of time frame. So the commission, I believe, already, we have a CEPR in place that approves what we identified as incremental resources from the last resource plan. But it's possible that there are resources that are showing up in 2029, 2030 that are also incremental CEP resources. And the only way to identify them is to have a comparison case. And so as part of that CEPR rate making process, we need to have a comparison case to identify those resources. I'm not saying it's the best use of our collective analytical time. It is just kind of the structure of the rate making that was put in place to recover the incremental costs for the CEPR.
So if we were to apply the transmission adder in the way the company's proposed, do you feel the same?
The transmission adder, yeah, I think, see, those are two, those are being very distinct issues, right? The checkpoint cases, again, don't love that framing. That sort of unconstrained cases really are about the rate making CEPR rider. The transmission adder,
though, is used in the modeling, right?
Mm-hmm.
And it's applied to all the resources. You know that it's, as I think you said earlier, it's going to emphasize the high capacity, high ELCC resources. So we're going to be overemphasizing the savings. None of this is going to be actually realistic, we understand, but we're going to be overemphasizing the savings in the high emissions, high gas portfolio, and underestimating the savings in the portfolio that we're ultimately going to select. So is it giving us anything that is truly useful, even to calculate the rider?
I think the transmission adder piece is not giving you anything useful to calculate the rider. The transmission costs are not recovered through the CEPR. The CEPR specifically only recovers incremental generating assets. I think to your point that, largely we expect those transmission costs to be constant across portfolios, which isn't to say that we agree with the list of portfolio upgrades identified by the company. I think there's still a lot more work to do to understand what transmission we really need and get into the details of those specific projects. But just sort of as indicative pricing goes, the company's modeling suggests that that's pretty static. And so I mean, I think that sort of, again, supports staff's recommendation to go ahead and treat most of those transmission costs not as a variable or adder that varies with the nameplate capacity, but as a fixed cost to support the entire, whatever portfolio we ultimately is approved by the commission. It's going to need a fair amount of transmission to support delivering that energy, regardless of kind of exactly which portfolio we end up with. So if you're asking me if the specific identification of the sort of clean energy plan resources I don't think the transmission adder is going to be enough of a driver to make a huge difference there. I think the case is, you know, I think it's a legal question as to whether or not there's some way around doing those scenarios, and whether there's something the commission can determine is unnecessary in order to look at that rider in a different way.
I guess the point being, I think Mr. Landrum had, you know, a couple of different scenarios, one without any sort of emissions objectives that was somewhere around 7,900 megawatts, and another one that was 14,000 megawatts. And if we're attaching a per megawatt cost to these two portfolios, there's going to be a significant difference. And I don't know if that gives us an accurate representation of what that gap is for the CPR that you're trying to achieve through the checkpoint cases, I guess is my point.
Yeah, so I think that those cases weren't checkpoint cases, right? That difference in 7,000 megawatts versus 14,000 megawatts, those were both clean energy plan portfolios. They were just different potential portfolios that could get you to the same, they had effectively the same accredited capacity. So they sort of checked the box on the loads and resources planning. They were sufficient to meet the 80 by 30 clean energy planning goals. They weren't unconstrained cases. They were all, those were still a range of clean energy plan scenarios. The other CPR cases are literally unconstrained. We don't even have to get to 80 by 30. We just add the resources from the last ERP and kind of let the rest of it go. I think our point on the transmission adder is that given that potential range of size of portfolio that are still clean energy plan portfolios, it could be a 7 gigawatt portfolio, a 14 gigawatt portfolio, that applying a $1 per megawatt adder burdens those portfolios with very different transmission costs. You'll end up with twice as much transmission costs in the high renewable portfolio and half the transmission costs in the sort of 7 gigawatt one, and that's not an accurate representation of the actual transmission costs. And the result of that potentially is a bias towards gas heavy portfolios and away from renewable portfolios. That's the potential consequence and why it mattered to staff. I mean, it is just a modeling construct. And I think that's the company's stance. We're just trying to get close from a modeling perspective and not get too far in the weeds. And I understand that, but I do think there's the potential to create a bias when you treat the adder that way, as if all of the transmission costs were variable when they're not.
I guess that's the point. If we're creating a bias and we're not accurately representing costs because we're, you know, I mean, I think in those two plans, the transmission costs were about the same, right? The 70, in the actual table, they were about the same.
In the
model, they would be very different. So we're creating something we're using a model that's creating a bias. It's misrepresenting the cost, and then we're going to use it as a basis for what the gap is in the rider. I just don't know. I'm trying to find the usefulness of these checkpoint cases, and I can't come up with it.
So again, the rider and the checkpoint cases are not like the difference in the transmission costs isn't what goes into the CPR. It's the cost of an incremental generating asset. So those are comparing a literally unconstrained emissions case versus a clean energy plan case. And then the transmission adder is being applied to all the cases. So that's kind of not going to get you a delta at all. It's all going to come out in the wash. But regardless, the transmission costs aren't the costs that get captured in the CPR. That's just an incremental generating unit. Say I need one more wind plant to get me to 2030 goals. I won't know that if I haven't run an unconstrained case. And then it would be that one, whatever wind plant that goes to the CPR. The transmission adder is I don't even know, because I don't think the company did those. I don't know the transmission costs or what to think about the transmission piece of those checkpoint cases, because the company didn't run those as phase one or part of their transmission modeling. The only transmission modeling they did was around the clean energy plan cases. So I mean, I'll think about that more, Commissioner, to think about what might have come out, but it's hard to know if we don't have any analytical modeling suggesting what those transmission costs or portfolio might look like for those checkpoint cases.
Okay, very well. If we were to not do those two cases, and we were to run a couple of alternative cases that might give us a little more information. I heard you say that an RTO case, it would be hard to identify what the inputs would be in that, and you're sort of questioning whether it would change anything in our portfolio or our costs just because you don't capture the inter-hour benefits or something.
Yeah, I mean, to the extent that what, you know, the point of the ERP, right, is to select the portfolio of generating assets that the commission wants to approve based on the phase 2 RFP process, right? That's about generating assets. It's not about avoided transmission in the future. And it's even a little less about dispatch, right? It's about picking specific assets to make sure that we are meeting our loads and resources, reliability, you know, have enough capacity on the system to meet the requirements, and that there's enough energy on the system to meet the emissions goals, and that the system has enough flexibility to sort of, operate reliably. You know, those questions aren't really so much RTO questions. RTO is about more, the RTO in particular, as opposed to the imbalance service, in my mind, is more about the integrated transmission planning, and better coordination on dispatching with their neighbors, and that sort of coordination. It's the company is still going to need to meet its resource adequacy constraints, right? So it's going to have
we'd go in with a 0.1 LOLE either way, is
right.
what basically you're saying.
Exactly.
Okay.
No, exactly.
And then I heard you had your runs from 15 to 18 that are kind of your wish list, and I heard sort of an additional one of taking out all PTC, ITC benefit and seeing what happens in that case.
Yeah.
Okay.
I hope that doesn't happen, but it may be helpful to have that view.
Yeah. I appreciate it. Thanks. That's all the questions I had.
Thank you, Commissioner.
Thank you, Commissioner Plan. Hey, Ms. O'Neill. Several parties have raised concerns that current rates may not result in outcomes that are in the public interest in terms of calculating and fairly allocating the costs and benefits of integrating these large new loads into the system. To the extent that's true, are you concerned about the company signing 15-year contracts with these large new load customers that may lock in existing customer class approaches prior to the resolution of the January 31st, 2026 advice letter filing, especially since no party or this commission is going to be reviewing those contracts prior to execution? So thoughts, concerns?
Yeah, so I will start with the ever popular caveat that I am not a lawyer. But I don't think there's ever a guarantee that our tariffs don't change. There's nothing in them that says this is a fixed price tariff that will be the same forever. So my expectation would be that customers understand when they take service under a tariff that tariff may change in the future. The only fixed price arrangement.
I'm asking a different question. I'm asking, to the extent we create a new category or a new large load customer class, if they sign a 15-year contract prior to this commission doing that, presumably they wouldn't have to go in that class if the company signed a 15-year contract.
I don't know that that's true. I mean, I'm not sure that there's a guarantee that a rate class would never be disaggregated into two different rate classes. I don't think there's a guarantee. Again, I'm not a lawyer, but I don't think our tariffs say if you qualify for one tariff and we reconfigure our rate classes in the future, you automatically get grandfathered onto an existing one. I will say that I share your concern. I guess I would say that in my view, that's a risk for any customer. And if the company is signing long-term 10, 15-year contracts with its customers, that the company and the customer should understand that that's a risk, that tariffs may change over time. The structure of tariffs may change over time. The terms and conditions under which people take service change. And that if the company is signing 10-year contracts, that depending on the terms and conditions of those contracts, that they may be taking on some risk. Those are not contracts the commission is approving the company, and therefore the company has risk. So they are different from the economic development rate customer, which had statutory requirements on what that looked like. These are normal regulated tariff customers. I share your concern. Don't get me wrong. I think it is a concern, and I think it will be a very interesting advice letter proceeding where we argue about a number of these things. And I think it would be good to clarify with the company where the risk sits and what is the expectations.
On transmission, Mr. Eiley testified that transmission investment in the original direct testimony base case was $13.5 billion through 2031, while the low case transmission spending was $12.8 billion, suggesting that almost 95% of the transmission capital spending was independent of large new load growth. At the same time, a series of public service company witnesses acknowledged that there was no detailed line-by-line capital spending plan that formed the basis for much of this transmission investment in either the base or low case scenarios. Given the lack of detail, just curious if you understand the basis for the company's finding that the low case without 1,895 megawatts of large new load requires the same new transmission in essence as the base case.
Yeah, so I guess I would say a couple things. So one is that I do think that there is a lack of information, analytics, support for general insights on what's driving transmission. That is one of the hopes and one of the reasons we recommended a stakeholder process as part of this. Clearly, the hope is to get to actual CPCN, transmission CPCNs to support these portfolios. But I think that part of the intent of that was also to have some of this discussion. What is driving this? What is driving the need for both the sort of deliverability projects, bringing load into the Denver metro area, and the, I don't love the term, but proactive projects, the more of CPP type loop projects. So we have a better handle on what those drivers are and what the locational benefits are. How do we potentially avoid costs if possible? I don't think that there's been a robust analytical structure to try to address some of those insights around transmission planning. That's aspirational. I can't guarantee that stakeholder group is going to be able to address all those questions, but that is definitely part of staff's intent with that is to examine some of those questions. That said, I do think the company, at least now a couple of years, has been more consistent in saying that there is a substantial amount of transmission upgrades needed to move power into the Denver metro area. Exactly which projects that is and how much that cost is, I do believe is still an open question, but I think that they have been consistent saying that there are some substantial fixed costs around transmission deliverability that will be needed as we retire things within the Denver metro and build a lot outside of it. Large costs.
I would just say, so I mean, I think it's a central issue. Maybe in this case, Mr. Eiley argued that the base case was somewhat better for residential customers as compared to the low case. But that finding assumes that 95% of the transmission investment is still needed, even in the absence of a large new customer load. If you make different assumptions about the percentage of new transmission that's needed, that finding reverses itself in the low case is better for residential customers. So any thoughts about how we deal with it in this case?
So I guess I'm not entirely so this case is about, right, it's creating an analytical structure to evaluate bids in the phase 2 and hopefully to lay the analytical foundations for future transmission CPCNs.
And figure out the load forecast.
And figure out the load forecast and to be responsive to it. So, I mean, I still think that the biggest innovation and most important thing is that framework process of trying to keep the investments in step with the load and making sure that we are not getting ahead of where our commitments need to be. And I realize there's been a lot of questions about that process, but I do want to make sure that that's clear because I feel like it somehow gets a little lost in the weeds that that is the point, is to try to pull back on that as much as possible to keep those things in lockstep and not get ahead of ourselves. Anyway, so maybe ask your question one more time and let me make sure I'm understanding what you're trying to get at.
I'm just saying, if you allocate some larger portion of the transmission investment to if you assume that some larger portion of the transmission investment is somehow fairly allocated to the new load, the lower load case looks better than the base case. So so just curious if you have any comments on that.
No, I mean, it's a balance, right, of making sure that we are attracting. I mean, I don't have any reason to disagree with the company that having the new large loads show up and contribute something has the potential to be a benefit to the rest of the system. I think the way that it is done matters, right? And so your question is, how do we make sure that we are creating a structure where we're going to capture that potential? It's not going to happen by magic. We have to think very clearly about what structure we create to make sure that those benefits flow to the whole system, not just to one rate class. And totally agree with that.
All right, 2 more questions. As we struggle with these transmission issues, one path forward may be to encourage, either through tax policy or electric rates, large new loads to locate outside the Denver metro area, perhaps on the 345 kV system. It seems like that approach could significantly reduce congestion into and within the metro area, use our existing transmission system more efficiently, lower transmission-related curtailment, and maybe put economic development where the state may prefer. Any thoughts on that, or any advice on how to better understand this prior to the advice letter filing?
Yeah, so appreciate the question. I think 2 things. So one is that I do expect that to be part of that advice letter of understanding of, are there zones for these new loads? Does this tariff change depending on where, load is physically located? Is that just picked up in the, interconnection costs, which are sort of a typical transmission general service specific, customer specific cost, and how we're best doing that, I think is a good question for that advice letter. But to your point or question, how do we set ourselves up with the analytical framework and some basis to try to answer those questions before we're doing it in the middle of the advice letter filing? I mean, I think that's a directive to the company to make it clear that you're interested in understanding that from an analytical perspective. And again, it was my hope that would be some of what that our transmission stakeholder group would at least discuss. What is the possible way to do that, to try to get some of that, analytical framework and understanding.
Thanks. Last question. In the CEP delivery plan, component 1, stage 2, the commission approved contract language that allowed for up to a 15% increase in the event of supply chain and other events that occurred after contract signing. Do you recall that?
I do.
Can we pull up what has been marked as hearing exhibit 2909. And just let me represent, this is the contract language that came out of, and go down to 8.2. 20.3. Let me just represent, this is the contract language the commission approved in that CEP delivery plan. Any thoughts about, in the event the commission chose to adopt a conforming contract approach, putting similar language as this in the model contract, like we did in component 1, stage 2 of the CEP delivery plan? It would address change of law risk, it addressed tariff risks, and address tax credit risk.
So, yeah, I guess a couple things. I would have to review this language to remember it in detail. I guess a couple thoughts. So one is, similar to what I talked to Commissioner Gilman about, I do think that we continue to feel like all projects are not situated the same. And so where they're sitting with respect to tariff changes or even PTC, ITC changes isn't the same, and setting up a process where even across the board on a particular resource type, you're treating everybody the same, that may not accurately reflect the actual cost to individual projects. And particularly as we've seen tariffs roll out that vary substantially country to country, I think the expectation is even more that different projects will be situated differently. I think at the time when we did the CEP delivery plan, for better or worse, the expectation I think had been that tariffs would be more uniform and sort of across the board, and that has not turned out to be the way that it is. So we do have a concern about treating everybody the same, and in part it feels like that ends up being a ratchet, right? That everybody is going to ask for the same cost increase. The whole portfolio is going to get ratcheted up by whatever the potential is. And it's hard for me to see where the downward pressure comes in. So I'm not sure I love the across the board sort of representation here. And I guess the other question I have is, when we did the CEP delivery plan, there were other potential processes that had been floated to address some of these changes, and we simply didn't have time. And there wasn't process in place to do that review through, I think, what had been proposed as an independent auditor. We do, sitting here today, have more time. And so whether it's revising some of this language to be more project specific or creating a different process, feels like there is, we don't even have bids in yet. There is time to do a little bit more detailed look at how this could be accomplished in the most cost-effective way. And so I just would encourage folks to think about that, about whether there's a different process and a little bit more review around this to make sure that we are doing it in a way that is most protective of ratepayers.
You think we could do it in a notice and comment process, or we can start that way, and if we need a hearing, I guess we can schedule a half-day thing or something? Thoughts?
Yeah, potentially. Agree, Chairman. I think, again, giving folks time to review this and, think about whether there's a way to sort of avoid my ratchet concern, I think it would be well worth creating a little process around that.
Thank you, Ms. O'Neill. That's all I had. Mr. Cox, redirect, and then go to Mr. Irons.
Ms. O'Neill, first I'd like to start talking about the scenarios. I think we covered that with just about everyone. But if we could pull up hearing exhibit 2606, attachment SGJD 10. And on staff scenarios 7 and 8, you talked through that with Mr. Larson, particularly around why there wasn't a linear constraint. Do you recall that?
I do.
And was that also how the company proposed those scenarios in its direct case?
Yes, that's correct. I mean, scenarios 7 and 8 are essentially identical to what the company proposed in its both direct and rebuttal. It's only scenarios 5 and 6 that were, again, sort of similar to their direct proposal, slightly different from their rebuttal proposal. proposal.
Then you talked with Commissioner Gilman about the accelerated emissions and the use of the 86 by 30 and 90 by 33. How do these emissions constraints compare to the accelerated emissions proposals from other parties, including the company?
I think they're, I think a little bit more robust in terms of providing a little bit more detail about exactly sort of how these would be constructed. Again, having the intent to create that bookend, look at what accelerated emissions would look like, and maybe just a little, one or two steps back from that in terms of saying we're going to meet the 2033 objective, but then also then sort of not having the constraint after that is just kind of one step back. So I think the intent is to say what's the most accelerated we could get, and sort of similar to the other sort of variants on the preferred plan. It's like, and then what's the marginal impact of that? How do we, if we pulled back just a little bit from that, how much difference would that make, to try to get more understanding into how much cost and difference in portfolio results from, you know, a marginal reduction in sort of the accelerated nature of that scenario.
And you talked a little bit about with Commissioners Gilman and Plant potential PTC scenario option. Can you clarify whether staff sees a PTC scenario as needed if the PTCs are removed under federal law prior to modeling?
Yeah, so if we know that the PTCs have been removed prior to bids being received, then I don't think we need that scenario, right? Then we would have certainty, and everybody, I would expect all the bidders to incorporate that into their bids, and you know that wouldn't be needed as a variant. I think it would only be needed in the case that it is still unclear as to what the federal guidance or federal statutes would be. So as we sit here today, it's unclear where that's going to land. So I think what staff is suggesting is that if there continues to be uncertainty, then it could be a helpful scenario to model a variant of, you know, removing the production and investment tax credits.
So is there anything else you'd like to add about staff's proposal on the portfolio scenarios?
Yeah, I think maybe just one overarching comment, which is that, you know, I think staff generally was quite aligned with the company in terms of the principles of what the scenarios were intended to do, which is, you know, to be circumspect and not use so much analytics that we can't get to the 120-day report in a reasonable amount of time, and to also create, you know, reasonably different views of the world that actually provide information to the commission. I think where we differed with the company was in the concept of the solution sets, that staff did not see unique, interesting, different results from all of the solution sets that the company proposed. And so you'll see we have sort of one solution set around the company ownership that we agreed on, and the rest of it, I think we were, you know, felt like we could be more efficient with our analytical capability if we move away from that solution set concept and address more, you know, individual, you know, scenarios. And I think the other thing is, you know, the scenarios we had were very much not intended to be advocacy positions. We're not advocating for lower company ownership or for lower new gas. We're trying to make sure the commission has the information it needs to understand the trade-offs that are being made. What is the cost of the company ownership constraint? How much more would it or wouldn't it cost if there was a lower gas constraint? It's not that we're advocating for any one of those scenarios, just trying to create a complete analytical picture of the options in front of the commission.
Now moving on to the transmission adder. You talked about this a little bit with Mr. Larson, particularly the impacts of a higher adder amount. Do you recall that?
I do.
So why, in your view, is the adder amount important?
So staff views it as important because we're concerned that it creates a bias within the modeling towards resources that are higher ELCC resources without actually reflecting a real economic dynamic. So it by treating the transmission costs as varying with nameplate capacity, the portfolios that are higher in those firm ELCC resources, dispatchable gas and storage, those portfolios in the modeling will be burdened with much lower transmission costs than the portfolios that are more renewable based. And I think that's what we saw. Commissioner Blank mentioned the sort of the 7,000 megawatt scenario portfolio versus the 14,000 megawatt portfolio. That 7,000 megawatt one has more gas and less wind and solar, and it would be burdened with half of the transmission costs that the 14,000 megawatt high renewable case would, when the company's own modeling suggests almost exactly the same transmission cost. And staff is concerned that in the modeling will create a bias for the model to select more gas and storage resources as opposed to wind and solar when that's not actually reflecting a cost that can be avoided. And that's a bias in the model. We want the model to be as accurate as we can be. No model is perfect, but we want to avoid biases if possible.
And then in staff's proposal, would you say that the bias is removed?
I think that the bias is removed in staff's proposal. None of these proposals are perfect. In fact, I think, ultimately staff would agree with the UCA that it would be nice to have much more detailed transmission modeling that connects specific projects with actual transmission lines and upgrade costs. Sitting here today, we don't have the analytics to do that in place. And so staff was trying to propose something that was a little bit of a compromise and more reflective of, the actual costs that the portfolios would be burdened with. So recognizing that it is not perfect, but we, continue to believe that it creates less bias in the modeling than the company's proposal does.
If we could pull up what's been marked as hearing exhibit 2610. Thank you. Ms. O'Neill, are you familiar with this document?
I am.
And can you describe what we're looking at here?
Yeah, so the company did a total of 8 transmission scenarios. So these are in their transmission modeling, these are not in Compass modelings. As we talked through with Mr. Martz, the company created sort of 4 different portfolios, all that meet the sort of loads and resources need. And they did that for the base load and then the low load. So it makes a total of 8 transmission scenarios and evaluated what transmission upgrades would be needed to support each of those portfolios. And that's what's shown in that second column there. So all those numbers, as was discussed with Mr. Martz, vary sort of between 1.9 and $2.2 billion. It's a pretty tight range of transmission costs, even when the capacity ranges from the low of 3.6 gigawatts up to the 14. Those transmission costs don't change. And then the table on the right sort of shows if the commission were to approve the company's transmission adder, the results of that is, to burden those high baseload capacity resources with, transmission costs up to $3.4 billion for that second case, and to burden the small portfolios with much smaller transmission costs. So like, that low load case shown on as labeled as row 7 had $0.8 billion of transmission costs associated with it. And staff is concerned that that's just not an accurate reflection of what the company's own modeling suggested in terms of transmission costs. The last column there in that table is what staff's proposal would do, which is to treat that, a good fraction of those transmission costs is fixed, and then only a small portion is variable. and that those transmission costs are much closer to the costs modeled by the company in its transmission modeling.
We could move to page 2. And this may help illustrate that comparison a little better. But can you talk us through this graph?
Sure. So this graph is graphing the size of the portfolio by nameplate capacity across that x-axis, and then the y-axis is the transmission costs. So the big blue dots are plotting public services transmission modeling, showing based on size of portfolio what the predicted transmission costs are estimated were. The orange line is plotting what public services transmission adder would do. So you can see, it's linear, but with a pretty big slope. So small portfolios have relatively low transmission costs. High portfolios have relatively high transmission costs. And then the green line is plotting staff's proposal, which is, again, to treat most of those transmission costs as fixed and a small amount as variable. And you can see that that matches the company's transmission modeling, those big blue dots, a lot closer than the company's model. And again, staff is concerned, A, that it's analytically not supported, that sort of the company's transmission adder proposal does not match its own modeling. But the reason we care is because we're concerned that it creates a bias in the model towards smaller portfolios by nameplate capacity, which ultimately means more gas, more storage, less wind and solar, and that's a problem if it's not actually accurately reflecting the actual cost of the transmission.
Staff would move to omit hearing exhibit 2610.
Any objection?
No objection.
So moved.
That is all the questions I have for you, Ms. O'Neill. Thank you.
Thank you.
Thank you, Ms. O'Neill. You may be excused. Is Mr. Iden out there? Can you hold up your right hand, sir? You swear to tell the truth, the whole truth, and nothing but the truth?
I do.
Put your hand down. Is anybody with you or communicating with you in any way?
No, my child is upstairs, so you might hear some noise in the background. I'll try to limit that.
We have cats and dogs running around in the background, so if that changes, will you let us know?
Yes.
Back to you, Mr. Caruso.
Thank you. Good afternoon, Mr. Iden.
Good afternoon.
Could you please state and spell your name for the record?
Andy Iden, A-N-D-Y, last name E-I-D-E-N.
And did you cause to be filed answer testimony in this proceeding on behalf of WRA and Sweep, which was pre-marked as hearing exhibit 1301 and attachments?
Yes.
Thank you. With that, Mr. Iden is available for commissioner questions.
Commissioner Gowen.
Thanks. Thanks, Mr. Iden. I'll try and make it snappy. I cut him in half already. I'm trying. Okay. You recommend in your answer testimony that the commission direct the company to file a clean transition tariff that would allow large customers to procure and/or sponsor clean energy projects. Do you recall that?
Yes.
Would you see the potential for that to be part of the large load tariff filing that has been much discussed and anticipated in January 26, or would that necessarily have to be a different effort?
No, I think it could be rolled into that. I also see some acknowledgement of it seems like a voluntary basis for the commercial principles that Mr. Bailey put forth and the companies put forth. I think under the last stipulation there to recommend renewable and other flexible load, flexible interconnection agreements. So possibly could be under the interim. I know there's much discussion about that and whether or not the 15-year lock-in applies before the tariff is proposed, but I think the clean transition tariff could certainly be discussed during that January advice filing and related hearings.
Okay. Yeah, and you mentioned this, but you also discussed requiring the company to fast track a flexible connection and complementary tariff options. And I was just curious, do you have a reason to believe or a sense as to how many of the large loads that would be applicable for? As they're largely being kind of described as wanting power 24/7, that being a key priority for them. So just curious, what gives you confidence that that would be an offering that is, at least somewhat acceptable to the market?
Yeah, I think in my discussions with people watching the market for large load, I think it's true that when you ask an individual large load customer, do they prefer that or would they be amenable to that? I think the answer is largely going to be probably not, or no, not at this time, thank you, because they prefer a firm connection when possible. That's why my recommendation sort of puts towards the commission to establish, fair and consistent rules for all large loads seeking to interconnect, because that would allow level playing field, in which case those large load customers who have capability that they've potentially been exploring through R&D and other means to actually push it towards the market. So it's a little bit trying to draw that out, if that makes sense.
Okay. And then you expressed concerns about the company's transmission line extension policy and distribution line extension policy with regard to if large loads are paying their fair share of the cost needed to serve them. Does that sound accurate?
Yes.
And I was just curious if you saw both of those as potentially being properly able to be handled in a large load tariff filing that we've already discussed, or if those are separate efforts from that.
No, I think that could also be, subject to potentially making that a large endeavor. I also would note the request by the company for a permanent CPCN, what do you call it, sort of exemption for when customers are paying 100% of those interconnection costs or facility upgrades. I think it's about the definition was my point. Where does the line extension end and network upgrades begin? I think the previous discussion kind of highlights uncertainties and questions around the transmission cost allocation that the company and other utilities often will do in their cost of service studies, and how that is attributable to a certain customer class or not. So I think certainly if you're investigating a tariff or a creation of a new customer class or tariff that encompasses large loads over 100 megawatts, you could and possibly should be including the line extension updates.
Okay. And then is it your stance in your testimony or now that large loads should be responsible for paying their full marginal cost that they cause to the system, or some other varying level?
Yeah, I think I do agree. I think in my testimony, I attempted to show that going back and forth between the reference or the base case forecast and the low forecast, that sort of presentation by the company that the base case has lower impacts on rates. My point in the testimony was to highlight that that's assuming that in a given scenario that the load does materialize, that there's risk of building to that specification and then the load not materializing, which is where my testimony shows, I think, a 7 to 24% rate increase in that scenario. So generally, I agree with the principles that they've put forth, that the having more, quote, skin in the game from the large loads is beneficial. As to what that exact amount is, I do agree that if load does materialize, it can be a way to reduce average per unit costs. And so you want to have that balance. 100% of paying 100% of the marginal costs, you are talking more about something akin to a behind the meter. People are talking about, can we put large clean firm, or like whether it's nuclear or geothermal, behind the meter. And then in that case, it's more of is there any benefit potentially to the other customers? So I don't want to insinuate that there's no potential benefit, but that the proper risks need to be properly mitigated. So I think the 75%, I'll just note, I think, that's a good starting point for discussion, but in the company's testimony, they sort of point to, I think, Indiana, which has an 80%, and Ohio, which has an 85%. And I'm aware of other states which are looking at 80 and 90% potential minimum demand charges there. So I think some cost sharing there, I think there's flexibility that can be had, but it should be accompanied by a rigorous analysis of those actual network expansion costs, and considering, I think, the greenhouse gas goals of the state. So does it make that achieving that mission further out more costly.
Okay. Shifting to BE real quick, I think your testimony indicates that the company assumed an all-electric heat pump installations would be paired with supplemental electric resistance heating strips of 10 kilowatts or more.
Yes.
Whereas in the clean heat plan proceeding, we had testimony from SWEEP that air source heat pump systems are likely to require between 3 and 8 kilowatts of supplemental heat, as well as we've heard from a heat pump implementer that 2/3 of their installations in the Front Range are going without electric resistance backup. And so I'm just curious, kind of given these conflicting visions of the future and of what these installations will look like and what impact, especially in peaking conditions, they'll have on the electric system. I was curious, what accurate data is really available out there to better understand, first of all, actual installation of systems and like what is the most predominant, and then what, if any, more granular kind of load information do we have to really understand which of these is the more accurate scenario and in what sort of proportion?
Yeah, I think a couple of sources. I'm aware of a recent, I think, PNNL study publishing some field validation from the Cold Climate Heat Pump Challenge between, I think, northern US states and Canadian installations of about, I think, 22 heat pumps that meet that specification, and looking at the various run times of the auxiliary heat functions, and showing how, even in the coldest hours, in the coldest hours of the range, which I believe went down to -10 Fahrenheit, I think 25% of the time in those coldest hours was auxiliary heat called upon. And so I think there's more data going to be coming available. I'm aware of a few other heat pump specific end-use load metering studies, but not from the same climate zone as Colorado. So the Northwest has some examples with Bonneville Power and the Northwest Energy Efficiency Alliance that could be instructive, I think, to just the diversity of load profile. I think that's one of my other concerns, is that I'm not certain on this because it was difficult to track the ways that the company built up the load profiles, I think both in the DSP and the JTS here, about that assumption. My hunch is, and my suspicion is, that it's taking that static assumption and applying it to all heat pumps. I think it's a 7 kilowatt impact from their modeling in the DSP, 7 kilowatts at -2 degrees. So I think on that note, I would also point out that in the company's own metered data, as they filed with the DSP docket, I believe they had 114 homes with all electric heat pumps, and they've got rid of basically their gas backup, and they presented that as the additional information filing for that docket under the household and energy data. Here, I forget the hearing exhibit number, but that showed, no more than 7 kilowatts at a whole home meter level for a cold snap in 2024. And I think that corroborates to me when I look at Elephant Energy's submittal, or sorry, the customer Elephant Energy, which I cited in my testimony under the Clean Heat Plan, where they were saying, not only is there a number of these, 2/3 in that case, a number of homes going in without that backup heat, but also of the ones that did have it, that the heat pumps were able to maintain the set point during those, I believe, down to -22 degrees instances in 2022 winter. So those are some sources I'm aware of and thinking about. I think we'll need I think there's a need to better tie those field validated data points to the energy modeling that both the company is doing and that others might be doing. I think the company points out in their rebuttal testimony that they, are using an engineering model that looks at various factors and that it's sufficient. And I think going forward, finding ways to pair a modeling approach. I don't disagree with a modeling approach as long as it reflects, field validated experience.
Okay, thanks. Now just a question on demand response, and that's about it for me. So you talk in your testimony about other forms of demand response that the company could be modeling, especially some, from some of their prior studies. as well as its actual treatment in the model, essentially as a resource rather than a load modifier. Is that fair?
Yes.
Okay, so help me understand just a little bit better why, in your view, it's more appropriate to model it as a load modifier rather than a resource, which is then applied in ELCC, especially given the company's arguments about it being essentially an energy limited resource, and that, I think influencing their ELCN decisions on how to model it.
Yeah, so I think on that front, I'd have to scan to that section for the particulars, but I believe my recommendation was based on the ELCCs of the current DR suite, which is reflective of, I think, mostly summer and limited duration dispatch resources. So sort of your typical AC program or thermostat setback where 1 to 4 hours and limited calls per year, not wanting to disturb customer comfort. And so I think in particular, looking at something like water heating or other flexible loads that can be dispatched more around the clock. I think their use of the 100-hour, I believe it was 100-hour ISOC approximation for sort of some of the new megawatts, even that, if you look at 100 hours per year versus basically a water heating demand program that could operate every day, I think those are some of the reasons I made that recommendation. Coupled with, I think in winter in particular, I think, as I mentioned around the ADER, the VPP type of resource, it appears that, they might not, or that the approach right now does not accurately reflect, in my opinion, possible combinations of resources that could improve overall ELCC, such as can be expected under their rollout of the VPP program.
Okay. And I think those are my only questions. Thanks so much.
Thank you.
Commissioner Plant?
Yeah, thanks a lot. Good afternoon, Mr. Iden.
Good afternoon.
Just a couple questions real quick to sort of follow up on some of the things you discussed with Commissioner Gilman. You discussed a couple of things in your answer testimony. I was wondering if you could expand on first with regard to managed charging. You criticized the way in which PSCo is modeling their managed charging. I wonder, do you agree that they're currently at a 10% managed charging level, or do you think they're measuring their their existing managed charging capability incorrectly?
I did see that response, and I haven't had a chance to sort of corroborate that with other filings and to be up to speed. So I'd be inclined to accept what the company said there in terms of if I had looked at the wrong start year for their percentage of current enrollments.
So recognizing that there are a number of utilities with rates of managed charging, including Xcel in Minnesota, that are much higher. What are the things? I think what you're suggesting in your different modeling is more of an S curve. It's a higher adoption. So far, what we've seen in Xcel is not a very high adoption, if we're truly only at 10% at this point. So what are the things that the company can do to accelerate that level of adoption and increase, the ways in which managed charging is actually happening on the ground so that it can reflect that kind of a modeling that you're proposing?
Yeah, that's a good question. Well, before I get to the active managed charging, I would just say I believe there was a lot of discussion around how much of that managed charging potential was from a programmatic approach versus a time of use approach. So I think looking at other jurisdictions too, like California and others, Arizona and so forth, who have multiple time of use EV options, and sometimes a default time of use opt out or type of approach could be used to scale that program more quickly. And in that vein, I think generally having like a super off-peak type of rate, something that speaks to different customers' needs versus a one-size-fits-all EV time of use rate would be potentially beneficial to encourage enrollment. As far as the managed charging approach, I think there's a lot of research about customer experience, like having point of point of sale type offerings, or basically working with dealerships and others to offer incentives for home charging that is kind of pre-enrolled or sort of pre-discounted with the conditions that they enroll in a managed charging program. Other approaches I think would be offering financial incentives for the charger, like a level 2 charging purchase. So something with smart charging capability, having different financing options for customers that maybe even include an on-bill tariff option to pay that back, and sort of allow, generally when I think of those type of things, I try to think of what is what is an all-electric customer, how are they going to optimize their performance? So looking at all of those technologies independently, you don't get to reduce cost of delivery, but if you're bundling your marketing of a program with a solar installation to look at their future electrification needs, for example, I think that's generally missed opportunity in the industry. I don't have that feedback is not particular to Excel in Colorado, but those are some ideas off the top of my head. If you have any other questions, I could kind of go into it a little more.
No, that's great. I appreciate it.
I guess one
Yeah.
thing that did come to mind that I wanted to mention was the other types of locational management that you can have based on distribution level dispatch, I think is something that the company has indicated they're moving towards. So I think stacking the distribution value, there's a lot of, I think, companies and aggregators out there who will offer that service and manage to avoid even something like a service panel upgrade behind the meter, as well as like impacts on local service transformers and things like that, local distribution lines. So making that proposition, I think both recognizing the company's role and then how they can work with behind the meter providers to minimize costs for the end-to-end customer experience is a good step.
Perfect segue. You also had, and you talked about this with Commissioner Gilman, some criticisms of the ELCC approach and the values that are being attributed both to the solar and the ADERs in their model. And to go to the, I get the solar one, but going to the ADERs, is there a good model for attributing a more appropriate ELCC to ADERs? I think there's like basically, as I mentioned, I think to Mr. Pollack, there was the Integrated Resource Planning Best Practices report that came out at the end of last year, and it talked about the approach that you're proposing, which is just basic load reduction, and an ELCC approach. What I'm wondering is there a good mechanism for applying ELCC to ADERs, and would that be based on specific technologies, or is it based on the programmatic sort of thing? We saw that they're applying ISOC to some of their resources. They're applying, I think the Renewable Battery Connect has basically a battery emulation or proxy. But then we have all these other technologies that are coming through the VPP, where you've got a aggregator programmatic sort of an approach. Is it better? Is there a good system out there for applying an ELCC, and would it be on technology or on program?
Yeah, I think I recommended, I believe, and I saw the company had rebuttal testimony on that point, sort of indicating that of the energy limited resources, a 4-hour battery, that's the current ADER approximation, is sort of the most generous, and therefore they don't think that that's needed. They recognize that over time they can evolve towards better ADER and generics, approximation. But I would say my intention there with raising that was not to like switch to a different energy limited resource like water heating or solar individually, but to look at them as a bundle. And so I think there are probably proxies right now that I did point out in my testimony that the company seems to do this for the utility scale wind and solar and battery to look at the diversity benefit of those things, but doesn't carry that forward to the ADER or distribution connected resources, which I think would show similar. There are obviously certain combinations that may not do that. I think the example was if you look at a 4-hour battery plus demand response, that may not have the same additive, incremental benefits as something like solar plus storage, where you get an energy and a capacity or a flexible resource. So I think the minimum I would recommend is sort of going towards the solar plus storage hybrid model, which could add ELCC benefit compared to standalone for those resources. But I would also say that including energy efficiency, managed charging, and other distribution behind the meter connected resources to the ADER would be ideal in the long run. And to the programmatic versus technological side, I think you would want to model it, if you're going to go the ELCC route, as close as possible to, I would base it on the technologies and the commensurate sort of dispatch rules. If they're not known yet, I think that's a question mark, but at minimum, trying to get a proxy of what are similar supply side resources looking like with a hybrid profile like that in the ELCC modeling. And then working towards setting up something more reflective of the actual VPP resources that the company might start seeing through its procurement efforts.
Are there any states that come to mind that have taken this approach and applied it applied it well in their resource planning?
That's a good question. I'm actually not familiar with how California is doing that, but I would imagine I know they have looked at ELCC updates, looking at VPP resources, but I don't have the results on the top of my mind. But ComEd, for example, in Chicago is looking at pushing through a VPP tariff, and they've sort of gone back and forth on solar plus storage or allowing other DERs in there. So I think it is jurisdiction by jurisdiction, how it's treated. But I think a progress towards more flexible dispatch and, allowing more resources to be parameterized within a model, I think that's going to provide the most flexibility, because these will change. I mean, as I think this is a proxy modeling exercise, and then as you get into the bids, you want to model the actual resources. But yeah, I wish it was more of a example of an easy state to point to. But I know I'm involved in a number of cases where people are actively looking at it. So I encourage sort of moving towards, at minimum, the near-term hybrid resource approximation, and then advancing more towards, I think advancing more towards a discrete characterization of the VPP buildup. I know Brattle has, for example, done a number of production cost runs where they look at, water heaters, thermostats, EV charging, and look at that compared to gas plant build out, and find significant cost savings. And one thing I also didn't include in the testimony, but RMI, Rocky Mountain Institute, has also done a modeling exercise for Colorado, specific to Colorado's energy system, looking at a similar VPP characterization to offset system need.
Great. And one last question. I think that, PSCO has argued in their rebuttal that these issues are more appropriately hashed out in the DSP VPP proceeding, and we're certainly going to do that. But are there any aspects of this decision that you would say, in order to not put ourselves in a box, if we wanted to be able to incorporate the kinds of things that we're going to be able to hash out in that DSP proceeding, are there any things that we should be, really cognizant of including or not including, or leaving as a sort of a blank spot as we're, preparing for the inputs from that proceeding?
Yeah, so I think on the transmission side here, I think there's evidence in the record where it suggests the company didn't look at distribution deferral when they cited the sort of up to 1,500 megawatts of ADER in the transmission build-out scenarios. And so I think there might be a gap on both sides where you sort of are not looking at potential, even though the load was sort of reduced generally in the Denver metro constraint area, looking at discrete distribution offset like capital expenditures that could be offset through strategic deployment was kind of missing from the JTS perspective. And then if you turn around on the other side, I believe a similar story would play out, where it's more of like we have distribution investment needs, but then in the future we'll have a AVPP tariff and procurements. And so I think, looking at again to the winter here, I think it was 2 to 3 gigawatts of solar that is receiving a 0 ELCC in the wintertime, and how that also shapes up on the distribution grid, where that is spatially located, and how all of that solar could be bundled into, actively managed VPP aggregations. I think that is still an area to explore. And so I would hope, there's room to model that within the JTS to reflect in the RFP phase 1. I know you expressed interest in that previously in the hearings last week, I think. Or maybe it was the week before. I've been tuning into a few of these, but not as many as you all. So I know that that's an interest, and I think the obvious answer is that if it's an all source RFP where there's ability for people to bid that in, I think that's obviously you might get what you get and be able to analyze it, but reflecting, I think, in addition to the sort of JTS, I think transmission adders and reflective of locational considerations, I think finding some way to co-optimize across the distribution and transmission investment paradigms or horizons rather, could yield, significant cost savings opportunity. And I think that the investments on both sides are large enough in this round that, waiting for essentially the next round to attempt that is going to miss a significant chunk of investment opportunity.
Great. Thank you very much. Appreciate it. That's all I have, Mr. Chairman.
Yeah. I have no questions for Mr. Iden, Mr. Barrasso. Since it's only commission questions, hopefully limited redirect.
Yes, thank you, Chair. Just 1 or 2 questions for you, Mr. Iden. Do you recall having a discussion with Commissioner Gilman on the 2026 large load tariff?
Yes.
And based on your professional experience, is there anything more that you'd like to say regarding risks associated with large loads that might be subject to that tariff?
Yeah, I think paying attention to the terms of the minimum demand charge, sort of not just accepting a proposal, but understanding how that relates to the cost risk under different scenarios, like are being contemplated through the, I think it was the number of portfolios there you were talking about with Witness O'Neill. Understanding how the planning will tie actually how those assumptions will carry over to the rate case, and those class cost allocation like mechanisms will be important because they don't always align. I think there's an intention that they do, but I think especially when historical cost allocation mechanisms relate to your capacity and energy, but as we see increasing penetration of renewables is going to put more value on, say, the fast ramping capability and different things like that. And I think there's a general recognition, in the industry that large loads can potentially have impact on those ramping needs. There's a NERC incident report, or sort of not a report, but an incident review, I think, of a instance in PJM where some lightning caused some large load, like I think 1,500 megawatts, to trip offline and stay offline for an extended period. And that type of thing is causing concern in different markets who are dealing with integrating these large loads. So understanding all of the various cost drivers that may have to happen to accommodate and integrate those loads, I think would be important upfront versus waiting for a rate case, because then it can be very time consuming and difficult to get into those level of detail. And I would also just outline the opportunity that exists for especially certain classes, or I guess customer types of the large load customers, to have their own, climate reduction goals, and trying to seek creative ways to partner with them and leverage their interest that's what kind of mentioning back to the clean transition tariff with Google and Fervo Energy in the Nevada energy case, represents an exciting and interesting development and opportunity. So lots of observers are looking at the 2040 horizon and saying it's going to be very costly and difficult to get to 100% decarbonized. I mean, maybe not 2040, but outwards, depending on your state's goals. And so rather than letting those play on their own market timelines, like taking advantage of this case to infuse some more near-term, investments in those resources would help the market evolve as a general whole. I think that's it. Other than that, the tracking mechanisms, I would just reinforce sort of the importance of good tracking mechanisms on collecting the initial load requests and then how different sectors or I guess data center types are evolving and ramping, especially with respect to the co-located versus hyperscalers. And then keeping an eye on these emerging AI data centers for differences in load pattern.
Great, thank you. And last question here, switching gears, you also had a discussion on the BE forecast and specifically the assumptions on backup heating. Is there any more that you'd like to share regarding your recommendation and testimony to assume a 3 kilowatt electric resistance strip as the backup heating?
No, I think I'll just reiterate something that I mentioned in that discussion was that I think it will be important to take account of the actual behavior of customers, not only with respect to the operation of the heat pump in the field, but other, maybe those customers are going to be more likely to undergo whole home upgrades where they install more insulation and upgrade their windows and other things, which would likely have an impact on the heat gain and heat retention and the sizing and operation of those heat pumps, as well as other, like for example, when we were discussing earlier, the ELCCs of batteries and solar, or the lack of modeling of winter-based demand response. I think those other whole home flexible load approaches to an all-electric future, I think that'll be critical to keep in mind and not just look at the worst case scenario of a single device or technology type and then extrapolate that to all customers.
Thank you very much, Mr. Iden. Chair, I have no further questions.
Mr. Iden, you may be excused. Let's take a break till 2:50, and then I think Mr. Lucas, you had some questions for Mr. Lucas, Commissioner Goman? Or
I have
do we
a few, yeah, I can keep it very brief.
Yeah, if you could, that'd be great. And then Mr. Pierce and Monson, Ms. Kutzer.
Just popping on camera in case you need me for any of these. I think we also had on our list that Commissioner Plant had questions for Mr. Turner.
Oh, okay. Okay. So we'll do Lucas. Is that true, Commissioner Plant?
Yeah, I had Lucas and Turner.
Okay. So we'll come back and we'll do Lucas and Turner. Mr. Dittman?
Thank you, Chair. So I had mentioned yesterday, I believe, that we have availability issues for Mr. Mendisco. And so I was wondering whether we could take him maybe after the next set of witnesses.
Yes.
Available tomorrow.
So we'll do, let's see, we'll do Lucas, Turner, and then why don't we do Mr. Mendisco first after the break? You want to do is
Yeah, I think he's on, so we could do that.
Okay. And let me just see. It was just Pueblo who had 10 minutes for him. All right. So let's come back at 2:50 and we'll put you on, Mr. Mendisco. Thanks. I'm gonna just swear you in while we're waiting for Commissioner Goman. Mr. Mendisco, can you hold up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
You can put your hand down. Is anybody with you or communicating with you in any way?
No.
If that changes, will you let us know?
Yes.
Mr. Rickman.
Thank you so much. Good afternoon, Mr. Mendisco. Can you please state your name and spell it for the record?
My name is Matthew Mendisco. First name is spelled Mathew. Last name is Mendisco.
And Mr. Mendisco, by whom are you employed and what is your title?
I'm employed by the town of Hayden. I am the town manager.
And did you cause to be filed in this proceeding answer testimony, which is labeled Hearing Exhibit 1801 and its attachments?
Yes.
If I asked you on the stand today those same questions, would you give those same answers?
Yes.
Thank you, Mr. Mendisco. Ms. He is now available for cross-examination.
Ms. Consilia, I think I got 10 minutes.
Correct. Thank you, Mr. Chairman. Mr. Mendisco, my name is Frances Consilia. We've not met before, is that right?
Correct.
And I represent the city of Pueblo, Pueblo County, and Pueblo Economic Development Corporation. I have questions in a few areas for you. First, I'm going to ask you about some of your calculations, which I don't understand. And then I'm going to inquire about some of the just transition payments you're asking for. And if you're successful, would you support Pueblo getting similar payments? And then third, I'm going to sort of challenge you that the town of Hayden is in worse shape than the city of Pueblo and the county of Pueblo, as we all have different concerns, but I understand why you made some of the statements you did. So let me ask you, as I understand it, the community you live in has a commitment to clean energy. Do you have a 100% renewable energy goal?
The town of Hayden specifically does not have any renewable energy goals in a policy. We are part of the Routt County Climate Action Collaborative, and there are some, that's a combination of all the Routt County governments through an IGA, and we do have some clean energy goals that are associated with the Routt County Climate Action Plan.
Thank you. And it's my understanding that on that basis, you would object to having a new natural gas plant in your community.
We specifically, the town of Hayden, we did not list any objections. However, we did advocate for a geothermal plant as opposed to natural gas or any other kind of usage.
Okay.
That would be fossil fuel.
And that's something that could be bid into this resource plan, correct?
I assume so, yes.
Okay.
I mean, by Excel, I don't work for them, but I would assume so.
All right. And your testimony seems to indicate surprise that the clean energy plan of 2019 was going to require the closure of Comanche, Hayden 1 and 2, and Craig. Is that a fair assessment of your testimony?
The accelerated closure, yes.
Okay. And Dylan Roberts was your representative in 2019. He's now your state senator. He was one of the primary sponsors of Senate Bill 236, which is what we call the Clean Energy Bill.
Okay.
Okay. And have you discussed with Mr. or Senator Dylan Roberts your displeasure with having to close the coal plants as early as Senate Bill 236 is requiring?
We did have, once that bill was introduced, we did have discussions about its introduction. And we did discuss that the accelerated closure was going to require, new adjustments to economic plans, et cetera. So, and that hopefully in the future, he would be accounting for those things in bills and other things to help just transition communities.
Now, I understand that Hayden was not a participant in the 2021 Clean Energy Plan. Have you had an opportunity to go back and look at any of the testimony that was filed in that case?
I have not reviewed the testimonies
Okay.
since that time.
Holly Velasquez testified in that case on behalf of this company, and she indicated that she'd had a number of conversations with representatives of Hayden and Routt County. Did she have any conversations with you about this early closure?
If you read my testimony prior to the 2021 Energy Resource Plan, Xcel Energy did reach out 6 months prior to the announcement of the accelerated closure.
Okay.
And they had conversations not just with us, but other community members as well. And they had proposed different, things that could happen at Hayden Station. And I discussed that in my testimony.
Now, Ms. Velasquez, as well as Keith Hay from the Energy Office, stated in their testimony in the 2021 case that only Pueblo had voter-approved projects that were relying on revenue from the coal facilities that would be entitled to the benefit under the statute. I take it from your testimony, you believe that the town of Hayden, or is it Routt County, had voter-approved projects?
I'm not sure I understand the question.
The statute says that we are working through that the utility is supposed to have a plan to pay community assistance to a local government or school district, the voters of which have approved projects, the costs of which are expected to be paid from property taxes. And Mr. Hay and Ms. Velasquez said that Hayden did not have such voter-approved projects. Is that wrong?
It is.
Okay. Did you ever have an opportunity to look at the testimony of Garrison Ortiz in the 2021 case?
I have not read it.
Okay. I will tell you that in that case, Pueblo County presented a resolution that went to the voters that indicated that these various 1A projects were going to be paid for by revenues from Comanche. Did you have anything similar to that the voters adopted?
The Hayden School District passed a bond issue in 2018. I believe it's 2018. It was presented in 2017, but authorized in 2018. I believe that's part of my testimony. That was based on Xcel Energy Hayden Station property taxes. So that's the project I'm referring to that Xcel got wrong.
Okay, but was there anything that the voters were aware of that indicated that that school bond issue was going to be paid for with revenues from Hayden?
Yeah, I mean, the property taxes that were currently being paid was based on, that's what the financial schedule of the payback of that bond issue, which was over $20 million, was for, and was based on.
All right. Now, I don't understand how you calculate the payments that you think you are entitled to from Hayden 1 and 2, because the company indicates they think it's about 1.246 million for Hayden 1 and 1.474 million for Hayden 2. You have a number that's almost double that, correct? And let's set aside whether we're talking about 6 or 10 years. Let's talk about an annual basis, okay? So what's the number, and can you explain to me how you calculated it?
Our calculations are based on the Routt County Assessor's reporting of what Xcel Energy pays, and I say Xcel Energy, public service company, but Hayden Station specifically, what they pay in property taxes per year. Those are payments that come to Routt County that are received and or anticipated, right, based on assessed value. So that's where those calculations come from.
What is your understanding of how the assessor calculates, or let me step back. Do you think that your county assessor calculates the taxes that are due from public service for Hayden 1 and 2?
No, I believe that would be the treasurer of the county. But what I'm saying is that that's the public information that comes from the county. And that public information is what my numbers were based on.
And I noticed that in none of your testimony did you attach an actual tax bill to public service. Is there a reason for that?
Not specifically. We were relying the numbers that went into our economist report came from the county directly. It wasn't intentional. Be happy to submit the report that we've got from the county. I believe it was attached. That information was attached to our economic development report that was done by our economic development specialist.
I couldn't find a tax bill. That's just why I was asking.
Okay.
Let me discuss with you on page 32 of your report, your figure MM1, your economic development projects that you're requesting that the commission order public service to make payments to you.
Okay.
So the $22.7 million for debt relief, what is that for? What will it pay off bonds that are in existence?
What that would.
Thank you.
Yeah. That would pay off several things. That would pay off existing debt that is on the books currently, not just for the school district, which is the large majority of that 22 million. Obviously, I discussed their bond issue was, in the 20s when it was passed in 2018. It would also detail our fire district, who has some lease payments for equipment, et cetera. It would also position the town to be able to possibly pay off debt that we currently have that is voter approved, that would position us in the future to be able to grow at the level of which we would have to grow, assuming a transition.
Okay. And if the commission were to order public service to pay this $22.7 million, do you think it would be fair that Pueblo would get a similar amount to pay off its debt?
I think anything that would be fair that the commission would order, based on whatever the community's interests are or whatever they've put forward, I believe that would be fair.
And then let's look at the larger items because we don't have too much time. You're asking for $50 million for water and wastewater treatment expansion. Is that related in any way to the coal plants, or that's just something you believe you need for economic development?
They're both connected. So Hayden's 2,100 people, and the only place that we're going to be able to make up assessed value for growth is in the town of Hayden, because that's where Hayden Station is, but not in Steamboat, not, in other places in Route County. And to grow at that size, we will have to expand both of our water and wastewater treatment plants. So that's what will help us offset, at the very end of the day, the assessed value that will be lost from Hayden Station. At that amount of growth, our water and wastewater treatment plants won't be able to handle the capacity of which that growth will be needed. And that's why we made that request.
Okay. And most of these items here on your table or your figure MM1, since they are city-owned, they would not generate tax revenue to the city, correct?
The RCEDP, that's not city-owned. The RTA would be for a future regional transportation authority. But the water wastewater treatment plant, the county solar project, you'd be correct. They would be jointly owned by us and Route County, and they would not generate property taxes.
And does Pueblo some years ago adopted a 0.5-cent sales tax to set up an economic development fund.
Okay.
Does Hayden have anything like that?
We do not.
And let me look at exhibit. Let me see here what I've got. if you could call up 1215. I want to chat with you about, I guess this sounds sort of crass, Mr. Mendesco, who suffered most, Pueblo or Hayden, or are we all in this together? Are you familiar with this Bureau of Economic Analysts, which is, I've got an economic profile for Pueblo and one for Hayden. It's called the Fairfax, that's used by the Department of Commerce. Are you familiar with this tool?
I have not looked at it.
Okay. Well, let me ask you, it says that in 2023, Pueblo had a per capita personal income of $48,891. And then if you can scroll to the third page or the fourth page where we look at one more through the next page, Stephanie. It's blank. I'm sorry, the next page 6. Well, I guess it's 7. Routt County's got a per capita personal income of 131,507. I mean, that's 3 times what Pueblo's got, right?
3 times. I haven't done the math here, but it is higher.
But yeah. And Pueblo's got a high amount of transfer taxes, which is another indication of a poverty level.
I'm not sure what the indication of that would be.
All right. Well, you make the claim at several points in your answer testimony that you are entitled to as much as Pueblo, and you want 10 years of payments plus more. Is that correct?
We did request that we be treated the same.
Okay.
10 years seems fair.
And do you understand that Pueblo had expected Comanche 3 to exist until 2070, and it was going to get about $625 million from Comanche 3?
I didn't know the 2070. I didn't know that exact timeline.
Okay. And so what is your position with respect to how the various, we've got 3 coal communities who are suffering. Craig, Hayden, and Pueblo. How do you think that the commission should treat them on a similar basis, at least with the criteria that's being used?
I feel the commission should treat each community, look at the issues they'll be facing and make decisions to whatever that community deems appropriate, and look at them uniquely, because not every community is the same. As you have pointed out, they face unique challenges, such as our fire district. Without the property taxes of Xcel Energy, that's 54% of their entire budget. They'll have to shut down. No fire district. Like your wages, same thing. Very difficult. So I think the commission should look at these respectively and, prioritize those communities' specific requests the way that they have made them. I don't believe they should treat us better than you or worse. We should all be treated fairly.
Thank you. I have no further questions.
Thank you. Commissioner, I don't have any questions. Commissioner Bowman, questions for Mr. Mendisco?
I don't have any questions.
Commissioner Plant?
No, I don't.
Mr. Dittman, redirect.
Thank you, Your Honor. Just a few quick questions. Mr. Mendisco, Ms. Consiglio was speaking with you about figure MM1 in your testimony. And we could pull that up real quick. It's hearing exhibit 1801 on page 32. The projects that are reflected in this chart, is Hayden or Routt County requesting money specifically for these purposes, or was there another purpose for showing these projects?
The purpose of showing these projects is because they align with our economic development plans on what will have to be executed, and they were prioritized based on that revised economic plan from our master plan and from the county's master plan, respectively. The airport these two things are listed in there because the airport is in the town of Hayden. And so it's within our municipal boundary. And so that's why these specific things, RCEDP stands for Route County Economic Development Partnership. So that's for continued economic development. As I answered, we do not have a dedicated fund for that. We're all just paying into it. And so that's what that's for. Regional Transportation Authority, we don't have regional transportation at all here, basically. There's a small bus service that's paid by Steamboat directly. So again, these are all action items that were called out in our master plan.
So to be clear, you're not asking Xcel Energy to fund airport expansion, are you, in your testimony?
No. What I'm saying is that this specific amount of money possibly could help. The airport is probably the single biggest economic driver for the town of Hayden because it's within there. So it's all part of the master plan, but it's not specifically, that could be used, if that was awarded, that could possibly be used for wastewater expansion to the airport for that expansion, for example, because we provide all of the water, sewer, police, fire, everything to that airport.
And so is this $89 million figure that you have in your testimony, does it represent the overall level of economic expansion necessary, or is it something else?
It is vast. I don't want to say vastly short of what would be needed to grow 3 times the size of the town of Hayden. And if you look in my testimony, it talks about 80 in order to make up for the difference in commercial space. And Hayden is a town of 2,100 people. And so in order to make up for the amount of space, it would be like 891,000 square feet of commercial space. This is a drop in the bucket compared to what that would actually entail to be able to grow in 6 years' time. It's almost impossible. So when we pulled this list together, we were saying, well, based on, what Moffat County just recently agreed to with Tri-State and other things, what would be fair at least to get us off? And then the 10 years was really an equitable, thing. We just don't want to be treated differently.
All right, thank you, Your Honor. No further questions.
Thank you, Mr. Mendisco. You may be excused. Appreciate it. Let's go to Mr. Lucas. There you are. Can you put up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
Yes, I do.
Put your hand down. Is anybody with you or communicating with you in any way?
No.
If that changes, will you let us know?
Yes.
Commissioner Goman.
Good afternoon, Mr. Lucas.
Good afternoon.
First question is actually regarding just transition payments and adders. So in your answer testimony, you argue that we should treat just transition payments as largely sunk cost and remove the proposed adders. Does that sound familiar?
Generally, yes.
Okay. And you argue that the commission should not approve a process that could ultimately increase the total cost that ratepayers must bear. So, to my understanding, by encouraging development, particularly in just transition communities where we've already committed to replacement tax payments, we could replace those with actual tax payments and ideally result in lower costs to all ratepayers. But help me understand, there's a lot of testimony here, so I was trying to follow exactly the scenario you were laying out, but I didn't get there. Help me understand the scenario that you're concerned about where we could see increased total cost for ratepayers given the situation.
Yeah, thank you for that question. I think the easiest place to sort of piece together where I sort of close this argument out, I think is on page 19 of my answer testimony, which is exhibit 2200. And I went through an analysis there, basically saying that the settlement agreement has agreed in financial terms to provide a certain amount of money to the counties in a replacement for the tax payments that they would have gotten from these facilities. And I went through an analysis that looked at if you were to allow some of the adders to put in place, and they ended up selecting bids that were more expensive than bids that would not have been selected with those adders, what would have actually happened over the life of those projects? Because there's a difference between modeling the cost of the project and the actual cost of the project. And I think that was discussed earlier as well. And so the tax payments are a real cost that are going to be recovered from customers. My analysis that sort of closes on page 19 compares the potential incremental cost of a bid that is selected through the modeling mechanism with the actual payments that customers will have to pay over a 25-year lifetime of that project for different project sizes. And what I found is there is a mismatch between the value that the model ascribes to these additional projects and the limits on the tax payment that the universal settlement is obligating customers to pay. And so what this table 2 shows is the payments that you would get from a property tax perspective.
Sorry, maybe you can pull it up.
Yeah.
Are you able to pull it up?
It was page 19 and 2200. Yep, there we are. So this was the end of the calculation. And what I looked at, and I used a hypothetical example of a project that is $1.99 more expensive per megawatt hour, but qualifies for the $2 per megawatt hour credit. And what I sort of said in a very simplified way is if you had two identical projects, one that was qualifying for this modeling credit and one that did not, Encompass would select the one that has a net lower cost. So the one that was $1.99 more expensive but got a $2 credit would appear to the model to be slightly less expensive. And a very simplified example, but all else equal, the model would then select that slightly less expensive project in the modeling run, and that would be the one that would be chosen in advance to the portfolio and potentially into the RFP. But that's not actually, that credit is not a real credit that affects the cost of the contract that may be signed for that project. So in this instance, if you had a project that was $1.99 per megawatt hour more expensive, and the model selected it because the existence of these just transition credits, then over the 25-year lifespan of that project, you would actually be paying, customers would be paying more for that project. And what I did here is a calculation that sort of determined that on a per megawatt basis and found that the added costs, because you selected a project that is in actuality more expensive, notwithstanding the credit, which is just a modeling credit, could result in payments that were higher from the rate base. And so my argument on this point was, yes, it's a good idea. I agree with you fully to try to spur investment in these communities, to try to offset that payment of property taxes with actual property taxes from real projects. But the one has to be very cautious that you don't accidentally commit the rate base to paying more for that project than what was agreed to in the terms of the settlement. And this is sort of the final step in that calculation that showed, based on a given project size and the parameters, and this is a worst case scenario, admittedly, but these are the types of extra expenses that could be the result of allowing these credits to be, sort of unlimited and not constrained to the actual income tax offset that they would produce.
Okay. So yeah, so what would be the best way to remedy this, in providing some benefit, but remedy this potential?
Yeah, and I think what my recommendation on this matter is actually to limit the effective per megawatt hour credit of a project to what it would actually offset in property taxes. And that's going to be specific to the project size, because the tax credit is nonlinear, or the tax amount is nonlinear, and specific to the location, because there's different amounts of tax payment obligations for each location. But those are known numbers. And one could go through the process and lay out, very similar to the chart that I had on the previous, that you're still looking at here, and figure out what would the offset benefit be on a per megawatt hour basis for different project sizes in different locations. And then in the model, you would limit where the company has a $2 potential, you would limit it to a number that you calculate as part of that process. So it is variable depending on the size of the project and the location, but those are knowable numbers, or at least a very good estimate based on future tax property assessments.
Okay, got it. And we can take this down for now. Thank you so much for pulling it up. I have a couple just questions for you on the RA study and reliability rubric, and then I think I'll be done with you. So with regard to the reliability rubric, did you listen to my conversation with Mr. Landrum sometime last week regarding the application of the company's reliability rubric after development of the portfolios that were based on the RA study?
I was on for part of some of that discussion, part of the discussion with Mr. Ming. I'll be honest, I was driving from here to Philly and watching my son play in a soccer tournament that afternoon. So I was perhaps multitasking a little bit, but I did hear some elements of it and some of the other similar discussions with other witnesses.
Okay. So and understand from what you've, in your answer testimony, you expressed concern that we're essentially could be adding capacity at a cost for essentially a vanishingly small amount of unserved energy with the company's plan here, potentially going well beyond the 0.1 LOLE planning standard. And so I wanted to just understand any impressions you had, or if your position changed, if the explanations from Mr. Ming and Mr. Landrum made any kind of difference in your stance regarding the use of the reliability rubric and the potential for it to add significant amount of cost.
Yeah, thanks for the question. And I think that, I mean, firstly, it's a fascinating discussion, and it's a real challenging issue. It's a challenging issue for the company. It's a challenging issue for you as commissioners. And what you're ultimately trying to do is make sure that you're putting together or allowing the company to put together a portfolio that appropriately balances the risk of unserved energy with the cost of the portfolio. I sort of likened it to an insurance policy, and there's different types of insurance. You can spend more on insurance and have a lower risk of having an unexpected bill, but those are more expensive on a day-to-day basis. So I'm sympathetic and understand Mr. Langren's position that, you don't want to have a portfolio that under normal weather circumstances is unable to serve load. And that's the first step in their process. And Encompass uses weather normalized information, standard sort of expected situation on the grid. And yes, you should be able to meet all the load in those scenarios. Where I think we differ is what happens next. And in the reliability rubric, they substitute out that sort of typical meteorological weather, typical load patterns, and they put in extreme load and extreme weather conditions that result in very low renewables at times when there's high load. And then they test the portfolio against that. So I remember Mr. Langdon saying, because it is a sort of central analysis, that it's using normal weather conditions, that you don't want to have anything at the tail end that you can't serve. But then its situation changes. When you load in those more extreme forecasts and you load in the extreme weather conditions, you're no longer modeling normal weather conditions. And the question about whether chasing every single megawatt hour of unserved load makes sense directly implicates the question of how reliable of a system are you planning to? How much insurance are you going to purchase to make sure those last few megawatt hours are actually served? And I went through in my example and calculated that you could have what I think is a very poor outcome of needing to build an entire combustion turbine to serve 55 megawatts for half an hour. And I don't think that that's a reasonable final step in that process, particularly when there are other alternatives out there. So yes, I do understand that Encompass in its native form with native load, you should be able to serve all of it. But the reliability rubric, I'm afraid, has the chance of pushing that much higher. And ultimately, my recommendation is that the company provide you, the commission, with more information around some of those parameters, that you start to dig into these trade-offs, understand, just because it was a recent event, it's unclear how historically likely or unlikely that was. I mean, 1 in 10 years, you have an event every 10 years that is going to be really stressing the system. So I think that there is more information that is needed for the commission to make a reasonable and informed choice on this. The other thing I would say on this writ large, having just gone through a 3-hour outage on Friday when a thunderstorm rolled through our area, the vast majority of customer outages, which is what customers see and feel, come from outages on the distribution system. They come from trees blowing into lines. They come from failures. They come from people running into poles in their neighborhood. They come from animals who are crossing the wires. I seem to remember a report that it was something well north of 99% of customer minutes are actually the result of stuff that happens on the distribution grid. And so having a bulk power system that can serve 100% of hours, 100% of the load in 100% of the time does not mean that customers are going to experience no outages. That simply is not the case. The vast majority of outages come from issues on the distribution system, to which there are very different sets of procedures and protocols that utilities face to minimize those. So yes, we definitely want to have a reliable system that you can expect to meet these 1 in 10 year type rubrics, but doing so is not going to guarantee that you have no customer outages, particularly when those are driven by outages on the distribution system.
Okay. And probably just one final question from me. So your criticisms involved around there being the kind of no cost effectiveness or cost benefit, especially as you get to the extremely marginal situation, as well as no accounting or attention paid to how widespread or long the outages or the unserved energy what was anticipated to be. And I'm just curious, in your recommendation that there's kind of just more transparency around this as we go in the reliability rubric, do you think that serves to, I wouldn't say it solves, right? Transparency doesn't on its own solve anything, but do you think that provides enough basis for kind of actionable decisions by the commission with regard to both the cost and kind of the duration and extent issues, or do you think additional process or information would be needed outside of that?
Yeah, that's a good question. And I think something I remember, Mr. Lanham or Mr. Ming saying is, well, the industry doesn't consider economics in these calculations. And from my experience, I think that's generally correct. There are a few cases that I have seen where a more economic focused planning reserve margin is produced. And it's doing this exact balancing. It's looking at the value of lost load and the cost of carrying additional capacity to meet that, and it provides sort of an economic optimum. I believe I have a reference in my testimony on that as well. But I will say that the utility industry has evolved in the way it thinks about these issues. Well before my time in the industry, every utility had a 15% planning margin just because that's what everybody had used for decades. And then utilities started getting a little bit more sophisticated about it. When Renewable started to come into the fold, they had capacity accreditation that was based on maybe performance on a summer afternoon. But it was static and it wasn't really calculating the impact of the grid. And then we started to see ELCCs being used, but they were only done for one technology at a time. And now we're starting to see the ELCC interaction between wind and solar and batteries. So all of these things are happening where the utilities, the commissions are getting more sophisticated in their analyses. And there are sort of some cutting edge reports that are saying you really need to take that next step and you need to start thinking not just about the 1 in 10 year, but the depth and the duration of these outages, because it is materially different if you drop 2 gigawatts for 5 hours as compared to dropping 50 megawatts for a half hour. Those are different results, even if they both produce a result that is technically 1 in 10 year. So I think that the industry is evolving. I think having additional analyses done, comparing the sort of tail end of these incremental, outputs from the model with an actual economic number. And if you run through a calculation and you're seeing, hey, building this last CT is going to cost you $300 or $400 or $500 a kilowatt hour. I think public service has got a lot of smart people who are going to figure out ways to solve that problem at a much lower cost. And so I do think that the commission will be well served by having some additional economic analyses that maybe does a little bit more. I think it was, I'm sorry, I can't remember if it was E3 or a different group that Mr. Ming represents. He said they consider this, but ultimately did not do it because, again, it's sort of not what's being done. But I don't think there's any reason why that next step can't be taken. And I think that Colorado is a good place to do that because it is so unique in the way it's going through this transition. And some of these challenges associated with the sort of tail end of building new solar and wind and batteries once you already have a lot on the system. So I think that would be helpful from the economic perspective. I think applying the reliability rubric to some of the generic portfolios, as I also recommended earlier in the process, preferably as part of this first phase. That obviously hasn't happened, but I think I recommended that prior to the phase 2, just to understand because it may be the case that all the portfolios that come out of the basic Encompass modeling are well suited and handle these challenging conditions. Or it may be the case that they all fail and every one of them has to build a $500 million combustion turbine plant. I think that's an interesting and important information for the commission to know, particularly given there's no balancing of economics on what that last unit of energy is actually worth it for customers.
Thank you. Those are my only questions, Mr. Lucas. Thanks so much.
Absolutely. Thank you.
Thank you, Commissioner Gilman, Commissioner Plant.
Thank you. Good afternoon, Mr. Lucas.
Good afternoon.
I'm going to kind of pick up on where you left off there with Commissioner Gilman and the value of lost load and how we might incorporate this into the process. If I understand correctly, well, you gave an example in your testimony where you showed, a PRM that produced, power in this shape over here, and then a higher PRM that was way over here, and then you find that place in between where you minimize the unserved energy at perhaps a higher PRM than you started, but a much lower PRM. So it's kind of a stress test of the PRM to find that optimal point. Is that something that you suggest should be done following the LOLE Encompass model, which creates that PRM? And then you would then apply sort of an incremental increase in PRM to try and find out how that, exactly how would that process work?
Yeah, that's a good question. And, it's a little bit of a challenge because these are different approaches. I don't know if Encompass produces this exact same type of result. I believe that the consulting group that does this uses a different tool. And one of the things I complimented the company on, and we'll say again, is the fact that they're moving more of these related analyses to the same model that is using the same data sets and the same assumptions is a positive step. So I would be a little bit hesitant to say, okay, now we're going to break that apart again, and we're going to do something that requires completely different models. I think in any instance, it's a useful exercise as an overlay. Just like the reliability rubric that the company is proposing is not the core way that they're getting to the first pass, but it sort of is an extra check. I think doing some sort of this economic threshold analyses is a good second check. And if you sort of put these together using the company's approach and you do the reliability rubric, so you run your base load, your baseline scenario in Encompass, and then you do an extreme situation and you sort of increment through the recap model to make sure everything checks, you could do a calculation as part of that second step that says, well, let's run this through the sort of incremental last unit and let's figure out how expensive it's going to be to build the last unit of capacity that the model says needs to eliminate this. And let's compare what that is on a value of lost load basis. And if it turns out that the model is chasing a resource that is, 5 or 10 or 20x, then I think there's a real question to be had as to whether or not building that last unit is worth, sorry, I've got some feedback there, is worth that feedback. I think that may have been your dog barking. Is worth getting that feedback. And again, I'm very sensitive to this, and I understand the company's position. They clearly don't want to present a portfolio too that's going to have high risk of losing load. At the same time, they obviously have an incentive to build assets since they're able to make a return of and a return on their assets. So the challenge is finding that right balance. And the value of lost load is a metric, albeit imperfect and wide ranging, but it does provide some sort of contour and direction around this. And if you do a calculation where your marginal resource to close out that last 50 megawatts is $500,000 a megawatt hour, and you have a bunch of studies that say the value of lost load that is actively being used in markets today is on the order of $25 to $30 to $50,000 a megawatt hour, that is, I think, a useful data point that you as a commission could say, okay, this is the trade-off. Is it worth making that trade-off or not? But right now, the data is not in the docket where you can really have that information. So I think it would be useful for those additional types of runs to be done to supplement this and then present it all together and say, here's the trade-offs, this is where you start to run in these edge cases, and these are the decisions that one would need to make to move forward.
So yeah, that was the next question I was going to ask you, is what is a reasonable, how do you arrive at the value of lost load? You know, I would think that depends on who's losing it. And I'm not sure exactly how you come up with that.
It does. And in my testimony, I think I have a little bit of a discussion this on page 79. I do have several examples of reports that have been done recently that have looked at this exact issue. You're right. It does depend on who it is, and not only on who it is, but at some levels at an individual basis. You know, a person who has medically necessary equipment, their value of lost load is effectively infinite, because if they need that equipment to keep running, then they need to make sure that they have something in place that will do that. Now, fortunately, there's other solutions that exist today from technology's perspective that doesn't require one to build a combustion turbine plant to serve those units of energy. One could have, you know, a home backup system that would help through that in the instances that the company's system is down. But there are a number of estimates, and they do range from, you know, call it $5,000 to $60,000. And yes, I get that that's a wide value. And I'm not saying that one number is exactly right and all other numbers are wrong.
They're all less than 300,000.
Exactly. If it's 5 to 60 is still way below 300 or 400 or 500,000. And I think that's the type of information that could be useful.
And are you, as you're describing this, I think what you're saying is run your Encompass model, run your RA model, but also run a model that does an economic analysis to basically determine what the value of that last little bit is, or what the price of that last little bit is. Is what you're proposing that then you would increase from a 0.1 LOLE, you'd increase to something else, or are you saying that you could find more economic mechanisms to achieve that 0.1 LOLE?
That's a good question. It's probably the latter. And again, it goes to the question of whether the 0.1 LOLE, which yes, it has been the traditional way the utility has done it, but increasingly utilities are supplementing even that analysis with the amount of energy, the unserved energy, the depth and the duration of the outages that I mentioned. And so there may be a different metric that if you had a 0.12 LOLE, but you're comfortable with the amount of unserved energy that comes out of that, and you're comfortable with the economic trade-off, that's exactly what this whole ballgame is about. It's figuring out that trade-off. There's no hard and fast rule that says you must attain a 0.1 LOE regardless of cost. You know, because at the end of the day, the cost is a very, very important factor, as we've been discussing. And I do think when you start to chase some of those really high values, you know, you will find customers who are willing to go further up the cost curve, and you're going to pick up more customers who are willing to modify their load in response. I don't remember what the exact number is for the interruptible, the ISOC tariff, but it's substantially lower in terms of the value. And they're asking customers to interrupt for, in some instances, I think, you know, 60 or 40 or 80 hours a year, and paying more for those who have even more flexibility, who are willing to interrupt on shorter notices. So the company's already established some degree of sort of supply curve for these curtailments. And they're stopping at a level that is way, way, way lower than what we're talking about here. So I do think that there is sort of, you know, economic opportunity to either develop additional programs or additional tariffs, or even, and this happened in California a number of years ago, during a really intense crisis before California got a bunch of batteries on their system, which has now largely rendered these issues moot. They sent out a general text to the entire population via their emergency alert system, basically saying, can you please reduce your energy use? We're really struggling right now to keep the grid up. And the response to that was dramatic. Now, I'm not saying that's, you know, the right planning exercise, or that you rely on that happening time and time again. But, you know, on a one-off or a very rare occasion, some outside the box thinking on how you can get the population to make very small changes that in aggregate can add up to, you know, the 50 or 100 or 150 megawatts that you need for a limited amount of time, are probably out there and more cost effective than building an entire generating system to handle a very small amount of lost load.
Appreciate it. Thank you very much. That's all.
Thank you for the questions.
I don't have anything additional. Ms. Kutzer, redirect.
Just a single redirect. Mr. Lucas, you were talking with both Commissioner Gilman and Commissioner Plant about some of the other studies that are out there about the value of lost load. Is one of those studies the Astrape study for the ERCOT service territory?
Yes, I believe that is one that I referenced in my testimony.
And we've provided a link to that study in your testimony, correct?
That is correct. There's a couple that are in there. I think one for Alberta as well, and a few others. These are all sort of on page 79 and 80 of my testimony.
Great. No further questions. Thank you.
Thank you.
Thank you, Mr. Lucas. You may be excused.
Have a good afternoon.
You too. Mr. Turner, are you out there?
I am. Good afternoon.
Nice to see you again, sir. Can you hold up your hand, right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
Put your hand down. Is anybody with you or communicating with you in any way?
No.
If that changes, will you let us know?
I will.
Back to you, Ms. Kitzer.
Good afternoon, Mr. Turner. How are you?
Good afternoon. Doing well, thanks.
Could you please state and spell your name for the record?
Brian Turner, BRIANTURNER.
And by whom are you employed and in what capacity?
Advanced Energy United. I am the Director of Regulatory Policy in the Western States.
And did you cause to be filed what's been pre-marked as Hearing Exhibit 2201, your answer testimony, and Hearing Exhibit 2205, your cross-answer testimony in this proceeding?
Yes.
If I asked you the same questions in these pre-filed testimonies today, would you have the same answers?
Yes.
The witness is available for commission questions.
Commissioner Gilman.
I don't have any questions. Thank you.
Commissioner Plant.
Thank you. Good afternoon, Mr. Turner. I just have a real quick question, and you probably heard me talking to Mr. Hayden about this as well, but you bring up the issue of the valuing of distributed resources, the way that the upcoming VPP proceeding is going to feed into this one. And the issue around ELCCs being attributed to the DERs. And what I wanted to get a little bit more clarity from you on are a couple of things. Number one, how should we think about those ELCCs? Are there good examples of applying these ELCCs either in aggregate or by program or by technology into an IRP of this sort? And how, I think that the company responded that this is better addressed in the DSP VPP proceeding, which we're going to be taking up later on this year. And how should we be thinking about that proceeding as we draft the the order in this proceeding and this proceeding as we approach these issues in that proceeding? I guess is kind of those are my questions for you. I'll just throw it out there.
All right. I think I'll take them in a different order, but starting with the question of where should the majority of these issues be decided, and I think that I join other witnesses in suggesting that most of the issues relevant to the VPP specifically belong in the VPP DSP case. I make that distinction. I want to distinguish between the aggregated DERs as VPP versus front of the meter type dispatchable distributed generation kind of case, which is not what I was speaking to more broadly. So the VPP, I think, is best explored in the DSP proceeding, where you can really get at the benefits and costs of those resources. The gist of my testimony was that the work that the company put forward in this proceeding to represent those costs and benefits was flawed on both sides of the ledger, not considering the full benefits and perhaps overestimating the costs. And so it wasn't giving us a good indication of how those resources should be valued in an overall portfolio. Regarding ELCC, I remember in your exchange with Mr. Iden that you were asking, is the proxy method appropriate, or should program details determine how ELCC should be quantified? I think my testimony comes down more on the side of program details, that you can specify what an aggregation of various resources can perform, and that's going to impact your resource adequacy calculation in the ELCC there.
Are there characteristics, as we're looking at that VPP and the way that it's structured for aggregators, are there characteristics of an aggregation that we should be identifying ahead of time so that we can use those characteristics to inform that ELCC?
I don't think I'm prepared to provide, the technical details. I mean, I would say the energy limitation, how the energy limitation is represented in the modeling, the dispatch duration, and structure of dispatch. For instance, the structure dispatch isn't the right term. In my original answer testimony, I referenced a report by the Energy Systems Integration Group that talked about how the dispatch structure of VPP, whether the full amount is dispatched for 2 hours or the full amount spread over 4 hours, or whether the full amount is used to cut the shoulders at the beginning and the end of a period of expected unserved load, will affect the unserved load expectation and the total hours that are unserved, thereby impacting your resource adequacy metrics. So that's what I mean by resource dispatch structure. How are you using the resource? Those are 3, I think.
Okay. Well, I appreciate it. Thank you very much. Sorry to keep you on the hook for this short session, but I did want to get your input on those.
No problem. Appreciate the opportunity.
Ms. Kutzer, hopefully not much redirect.
Just one quick cleanup question. So you just talked with Commissioner Plant about using the VPP docket to derive the values of those VPP specific resources, including ELCCs. Do you remember that exchange just a moment ago?
Yes.
And is your position...
Sorry, go ahead with your clarification.
I was just going to confirm that some parties in this case have suggested that the company make corrections to avoided cost calculations, including the avoided distribution value and the avoided transmission adders in this case. Is your opinion that it's the right proceeding here to make those corrections if there are errors in the company's calculation?
I would again distinguish between distributed dispatchable generation and VPP. I think that the value of avoided generation, transmission, distribution for the VPP should be decided in that case.
Okay, no further questions. Thank you.
Can I make the one further clarification in the question that you just asked me?
Of course.
Regarding ELCC value and whether that should be determined in the DSP case, I would not support that. That needs to go along with the broader reliability modeling in the ERP or JTS in this case.
Great. Thank you, Mr. Turner.
Thank you, Mr. Turner. You may be excused. Thanks for joining us. I think there was no questions for Mr. Wilson. Is that correct, Ms. Kutzer?
I think we have questions from the Energy Office on my list, and on my list we also have Mr. Pierce next before Mr. Wilson, I believe.
Okay. I thought, Mr. Bonas, you waived your cross of Mr. Wilson.
That's correct, Chair. Thanks.
I missed that. Apologies.
And I think none of the commissioners had questions for Mr. Wilson, so I think Mr. Wilson's excused. Is that correct, Commissioners Gilman and Plant? So I think Mr. Wilson's excused. And if we can bring up Mr. Pierce.
Yeah, I'm trying to get on. Hold on just a moment. There we go. He should be. There we go.
There you are, sir.
Good afternoon.
Can you hold up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
Put your hand down. Is anybody with you or communicating with you in any way?
No.
If that changes, will you let us know?
Will do.
Back to you, Ms. Kutzer.
Good afternoon, Mr. Pierce.
Good afternoon.
Could you please state and spell your name for the record?
John Pierce, JOHN PIERCE.
And by whom are you employed and in what capacity?
Kilpatrick, Townsend, and Stockton, a law firm, as a partner.
And have you caused to be pre-filed in this proceeding what's been marked as hearing exhibit 2202, your answer testimony, and hearing exhibit 2207, your sir rebuttal testimony?
I have.
And if I asked you the same questions that are in those pre-filed testimonies today, would your answers be the same?
They would be.
Thank you, Mr. Pierce. The witness stands available for cross-examination.
Mr. Eisenberg, I have 15 minutes for you.
Good afternoon, Mr. Pierce.
Hi, good afternoon.
For the record, Sam Eisenberg, I represent public service in this matter. Mr. Pierce, you were not actually involved in the negotiations for any of the projects, the IPP projects selected in the Public Service 2021 ERP and CEP. Is that right?
I was not.
Pull up your answer testimony, which is hearing exhibit 2202. Go to page 12.
Give me a moment.
Um,
Oh, there you go. All right.
Yeah, it should show up on the screen for you. There's a list here of several documents you reviewed in preparing your answer testimony. Did you see that?
I would have seen that, yes.
Yes. And that list, it doesn't list the company's highly confidential filings in support of the Clean Energy Plan Delivery Plan. Did you review any of those filings?
I don't believe I did, no.
It doesn't list the company's highly confidential PPA status updates that were filed in the same docket for the 2021 ERP and CEP. Did you review any of those?
I did not.
Did you review any actual PSCO PPAs that were signed coming out of the 2021 ERP and CEP?
No.
And did you review any red line edits for those PPAs during the course of their negotiations, either red lines by IPPs or red lines by public service?
I did not.
Okay. I'd like to talk with you. We can take this down for now. I'd like to talk to you for a few minutes about your testimony regarding the conforming bid policy. And I just want to clarify COSA's position in this proceeding, if we could. Is it COSA's position that bidders should be able to submit red lines to the model PPAs?
I don't believe that's not my understanding. The idea is that I think there's some confusion as I interpret it. You're asking, as I recall, or the public services is that there be these are the conforming terms. This is what they want you to do. Any comments on that are not red lines, but if you're going to expect people, bidders, people who respond to the RFP to forego any marking up of those documents in favor of just agreeing to them, however qualified in the beginning, and then redline them later seems to be a bit confusing and outside of the process I'm used to.
So I'm just trying to clarify COSA's position in this case, not the company's position. Is it COSA's position that bidders should be allowed to submit red lines along with their bids?
We're dealing with specific particular issues within the documents, not with red lines, specific red lines. We don't represent any one seller or any one IPP. It's a consortium.
Right. Yeah, I understand. I understand that, Mr. Pierce. I'm just trying to understand yes or no. Is it COSA's position that when a bidder in the upcoming RFP submits a bid, should they be allowed to submit red lines to the model PPA or not?
That wasn't a question that I believe was before me, and that it is stated as that.
So COSA's okay with a conforming bid policy where there's no red lines to the contract, so long as we get the terms that are listed in spelled on your testimony or in your attachment to your Surball testimony. Is that COSA's position?
Those are advisory. I mean, they're meant to be taken as a reflection of the association, but no individual RFP, not reflective of any one party that would do so, that would participate in the RFP.
Yeah, and I'm really just asking about Costa's position here, not any potential bidder. Let me help you out. I think Costa's position is that Costa's opposed to conforming bid policy. Is that right?
That's correct.
Okay. The company would then model each bid based on the red lines that are submitted if there's no conforming bid policy. Is that right?
That'd be correct.
And the company, is it Costa's position that the company would have no ability to reject bids prior to computer modeling based on the red lines?
That's not a question that's been addressed to me previously.
Do you know Costa's position on that?
I do not. I would defer to their counsel.
Well, unfortunately, I can't ask questions of counsel. I can only ask questions of the witnesses that Costa puts forward. And then after selection, the company and the IPP would negotiate the entire contract under Costa's position. Is that right?
Correct.
Let's talk a little bit about some of the specific terms. Do you listen to your counsel, Costa's counsel's cross-examination of Mr. Bornhofen?
I did to substantial portions of it, yes.
You may recall, counsel pointed out that in your answer testimony, I don't think we have to pull it up. It's on page 14 of line hearing exhibit 2202. The COSA isn't endorsing any specific terms that you did not discuss in your testimony. You recall that?
Give me just a moment while I confirm what you're.
Sure, we can pull it
A
up.
lot of information.
It's
You're speaking about environmental attributes?
No, this is page 14. Just looking at lines 13 to 16. It's just you're saying you're not endorsing sections of the contract just by virtue of the fact that you didn't discuss them. You recall this part of your testimony?
That's correct. That'd be correct.
Does that include terms relating to the rates for capacity and energy in the contract?
You repeat that, please?
Yeah, so the terms relating to the rates for capacity and energy in the PPAs, those would still be open for red lines and for negotiation under COSA's view. Is that right?
I would think so. Those are subject to change during the interval from issuance of an RFP to the negotiation of a PPA.
So COSA would let me ask another question. COSA's position would also be that terms related to performance requirements, other than those described in your testimony, the other terms related to performance requirements, those would still be open for red lines.
Yes.
For negotiation.
Correct.
Same with terms relating to tax benefit qualification. Those would be open to red lines.
Tax specific, pardon me. Repeat that again, please.
Yeah, sorry, terms relating to tax benefit qualification, those would be open for red lines and
Yes,
negotiation.
that's because it's a very much as you would know, it's a movable target at the moment.
Yeah, so basically everything's up for negotiation of red line under COSA's position.
Yes, I mean, look, these are all of these types of agreements are highly bespoke, highly negotiated. The most successful ones are like that. The ones that are not well negotiated or where various terms are imposed and so on, typically don't necessarily reflect the best aspects of a negotiated deal or a transaction, and they usually result in issues.
All right. I think it's clear that the company and the IPP trade organizations are, somewhat far apart still on this set of issues in this case. Yeah, I'd just like to discuss maybe a path forward with you really quickly before my last 5 minutes here. The public service puts forward red line language into the model PPAs reflecting Mr. Bornhofen's exhibit JLB2 along with its SOP. Could COSA commit to also putting forward its own red lines to the model PPAs?
Again, that COSA doesn't represent any one entity, and trying to get three dozen plus entities to all agree and in some common meaning or form or acceptance or differentiating terms in a single red line would be outside the scope. It'd be very difficult to do, and again, would not reflect any one of their members. It's simply just not possible.
So it would be possible for COSA to come up with red lines. You're just saying you wouldn't be able to approve them as an entity because of COSA's governance structure. Is that fair?
It's membership structure, it's governance structure, the resources and other things that are available to do so, yes.
Okay. Well, if just PSGO filed red lines, COSA be able to respond to those red lines within 2 weeks in a response SOP?
I think that'd be very difficult. Again, it's the number of members, trying to get them all to respond in kind in a timely way would probably be very, very difficult. And again, would not reflect what the association, it's not trying to reflect any one perspective. It's trying to reflect the general views of its members.
So you were able to put together a table in your rebuttal testimony that responded to Mr. Bornhoffen's table with some, shall we say, critiques of Mr. Bornhoffen's positions on various terms. You recall that?
I do.
Do those represent COSA's position?
I believe so.
And there were a few items where you were unable to get COSA member input. You recall this? There was a dispute about confidentiality that's been resolved, but you stated you weren't able to get full member input in the time allowed.
I did not, and I think there were intervals there where, yes, there were things that were confidential that I did not have sight of.
But now that document was made public now, I guess a couple of weeks ago, prior to the start of the hearing, COSA would have time to seek member input, come up with a more defined position on those terms prior to the SOP.
And I think if that's the case, that's reflected in this exhibit 2205 and my rebuttals.
Thanks very much for your time, Mr. Pierce.
Thank you,
Mr. Chair.
Commissioner Gellman.
I don't have any questions. Thanks.
Commissioner Plant.
I don't have any questions either.
Mr. Pierce, given that we're looking to acquire thousands of megawatts in this process from dozens, maybe many dozens of projects, assume this commission shares some of the company's concerns about giving individual developers and projects the ability to propose their own specific contract terms. It seems like that could significantly delay and complicate the negotiation and review process. And as you may be familiar with, it took 2 years and we're still just starting to sign contracts from the prior process, and lots of reasons for that. But wouldn't it be fairer, quicker, and simpler to just have every project bid to the same model PPA structure?
Well, yeah, I think that's a matter of perspective. I think you end up with one, you're going to end up with probably fewer bids than you might expect. And what's happening to the industry at the moment, from my observation, is it's getting pretty economically stratified between those who are kind of Class A developers and those who fall below that in terms of their economic ability to perform. And and to get financing to support the projects that you would want to see them bid into, or the RFPs you'd want to see them into. Conforming terms tend to make it harder for a lot of these entities to find the financing, to the ability to not negotiate specific terms that may be important to them relative to what the RFP may require, can be very meaningful to those people in their economic success and their willingness to bid.
But isn't the goal to get the cheapest resources, the cheapest and best resources online as quickly and as fairly as we can? It's not to maximize the number of bids, is it?
With more bids comes the more likelihood of a successful project, I would wager. And then you're also talking about a circumstance of the PPIs, or probably the IPPs are each have very self-defined parameters and financing needs, and they differ from a very large entity I won't name to the more smaller ones that you would know. And they're just going to finance differently and respond differently to this these RFPs or required terms if that's what's required. And I would think that you're going to end up with fewer bids and then less to work with and probably higher prices as a result of that. The market is such that, those who have conforming, panels, have all these other things, have the balance sheet, are going to be aware of the economics in the market and what other people are working with. And they're going to bid around that and perhaps bid high. You may not get the economic results out of that or the pricing you might want.
If we did go down the conforming bid and contract approach, do you have any advice on what kind of process we could use to get to a fair contract that would be as best as possible? So say the company proposes something in the coming weeks, what would follow-on process look like in your view?
Well, what we've seen elsewhere is you make your first cut and first evaluation on those based on balance sheet, ability to perform.
No, I'm asking a different question. I'm asking, say we decide we want to do a conforming contract model contract, and the company puts out some proposal of detailed contract language in the coming weeks. What would the process be like from there to get to a model contract that would work for COSA?
I don't know that I've got a good answer for that. It really depends on what the process I've seen are not these. We've seen efforts at conforming bid documents that have largely failed or been unsuccessful. The results were not yielded from that particular process. The processes I've seen that work are what I was starting to describe, which is, you have your first cut at these that are based on particular parameters, and you continuously narrow that down into something where you've got perhaps the number of bids and the number of qualified bidors that you want. And then you negotiate those contracts into final form and near final form if you're able to take it that far. But I've not seen a conforming bid process that necessarily yields these things, the adequate results that you may be after.
Doesn't that process you're outlining give the company a ton of discretion?
Yes, but I think they're exercising that discretion through this conforming bid process early on, if that's what I would describe it as that way. You have to give your counterparties the discretion to respond in a way that they think they can support and perform. And this may not do that.
That's all I have. Ms. Kutzer, redirect.
Thank you, Mr. Chair. Thank you, Mr. Pierce. Just a few brief redirect questions. I'll kind of go in the order that you got them. Do you recall when Counsel for Public Service, Mr. Eisenberg, was asking you about the documents that you reviewed to prepare your testimony?
Yes.
Were you retained by COSA in the previous electric resource plan case?
I was not.
And so you did not execute a highly confidential non-disclosure agreement in that proceeding, did you?
No.
And because of that, you do not have access to any highly confidential documents that were filed in that prior proceeding, correct?
Correct.
Okay, and let me just look at my notes here for one moment. You touched upon this with both Counsel for Public Service and with Chair Blank, but could you elaborate on the reasons that you did not submit a red line contract on behalf of COSA as a part of your answer testimony?
Again, representing the association and its members, no single actor or member of COSA, and providing such a red line would have probably it would not have been reflective of the broader views of the membership or in fact of my views of the model contracts or pardon me, the documents that I read.
And is part of the reason for that because when you are reviewing a potential contract on behalf of a client, you review the whole of the contract and not specific terms?
Correct. And that's the way typically contracts operate. No one single term dominates the entire contract. And they have to be read as a whole to really to have the value and understanding of how they're going to perform or be executed.
And Mr. Pierce, I want to spend just a moment, we don't need to pull it up, but on your rebuttal response and some of the remaining items that you identified in your attachment. Is it fair to say that the liquidated damages provision in Section 12 of the model contract are still extremely problematic in your opinion?
Yes, they are. I think the emphasis on early damages and as opposed to reporting and recovery and dealing with those early on are damaging. Typically what you would see is, fairly large LDs in the latter part of the contract where these things actually have impact or meaning on the buyer and on the seller and the performance of the contract.
And when you say that, you're speaking of the early construction milestone liquidated damages and in your opinion on those provisions, correct?
That's correct.
Would you also say that the lack of adequate change in law language is another major remaining issue?
Yes. Yeah. I mean, a change in law is obviously it's a big issue with both sides, but the risk of that has to be negotiated. It can't be simply planted on one side or the other. And usually there's a process involved with change of law that would allow both sides to understand the impacts of it given time, and then negotiate some equitable solution to the issue, but not simply just to have one side or the other wear the entire risk of that.
One last question, Mr. Pierce. As you contemplate the company's model contract, even as potentially modified by Mr. Bornhoffen's rebuttal, do you think that model contract reflects a typical contract that's available across the industry as a good example?
No, we're doing stuff in other jurisdictions, very large solar and battery projects right now, that are very different than this, and these are very highly negotiated without required terms. Every aspect of the agreement is up for negotiation, other than perhaps scale, size, certain technical matters, which that's the purpose of the contract.
And I lied. One last question. Mr. Pierce, have you represented both IPP and utility parties in contract negotiations?
I have.
Great. No further questions, Mr. Chair. Thank you very much.
Thank you, Mr. Pierce. You may be excused.
Thank you.
Thank you. I think that's it for the COSA CIEA. Mr. Detsky, Mr. Monson, can you hold up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
You can put your hand down, sir. Is anybody with you or communicating with you in any way?
No, they are not.
If that changes, will you let us know?
I will.
With that, I have 20 minutes for Public Service Company. Mr. Larson.
Thank you, Mr. Chair. Good afternoon, Mr. Monson.
Good afternoon.
For the record, I'm Matt Larson. I represent Public Service. You're familiar with what was the tri-party framework, now called the quad-party framework. Is that right?
Yes, I am.
And I'd like to pull up the modified SJD 9, which has been marked as hearing exhibit 144. Mr. Monson, are you able to see that?
Yes, if you could make it a little bigger, that would be helpful. Great, thanks.
And if you had an opportunity to review this document?
Yes, I have.
And have you had an opportunity to review the changes to SJD 9 that are reflected in hearing exhibit 144?
If the changes are the changes that were discussed this morning, but going from the tri-party agreement to the quad-party agreement, I've had a chance to look at those.
And does the CIA support those changes and support the quad-party framework?
Yes, CIA does.
Thank you. We can take that down. I want to change gears. So we agree on quite a bit in this proceeding between Public Service and CIA, but one of the open issues is the conforming bid policy, which you addressed in your testimony, correct?
Yes.
And CIA opposes the conforming bid policy?
It does.
Okay, thank you. And you also offered testimony with respect to compensation for foregone PTCs, isn't that true?
Yes, I did.
And are you aware that Public Service has taken the position that it'll compensate for foregone PTCs in the event that a conforming bid policy is approved? Are you familiar with that change in the company's position?
My understanding is that the company has agreed to provide a form of compensation for foregone PTCs, but there is some, I think, potential confusion regarding the level of that compensation with regard to tax gross ups.
And does that change CIA's position on a conforming bid policy?
CIA submitted two policy-related changes to the model PPA. And then that's a big part of the conforming big policy. And one of those changes that we submitted related to compensation for PTCs under curtailment. The other policy-related issue that we raised had to do with change in law.
Are those the only two issues the CIA has with respect to conforming bid policy? So put another way, if the company and CIA were able to resolve those two issues, would CIA agree to a conforming bid policy?
No, not at all.
Okay. So I want to pose a hypothetical to you, and let's assume a 500 megawatt wind generator. Okay. Two different ones, but it's the same project, and they're bid two different ways. You follow me so far?
Yes.
And one of those projects is required to post security and forfeit that security if the project ultimately doesn't achieve commercial operation, and one essentially gets a free walkaway. You follow me so far?
I think I'm following your hypothetical so far.
And so the projects are exactly the same, and that's the only difference. One has a free walkaway, one has to post security and forfeit that security if it's not delivered. And you'd agree with me, these projects might be priced differently, wouldn't you?
I thought that the assumption was that they would be priced the same, that the only difference was the ability to walk away.
Well, let's assume that you'd agree with me that there's less risk to the developer where there's a free walkaway than where you have to post security and forfeit that security, would you not?
The project that has the ability to walk away without paying a penalty or losing security would have less risk. That's true.
It would have less risk to the developer, but potentially more risk to customers that are depending on that project. Isn't that true?
It would have less risk to the developer, certainly.
What about the customers that are depending on that project to be delivered? There's more risk to those customers. Isn't that true?
Assuming that there's a deep bid pool, and assuming that the commission adopts CIA's proposed shortlist process, then there would likely be other projects that could step in and provide basically the same benefits as the project that steps away.
But if there was no project that could step in when the other project walks away, then there's more risk to customers, isn't that true?
Yeah, but usually it's my understanding that solicitations are oversubscribed by between 5 and 10 times the requested demand. And so that would be a real surprising result.
What if the project went away very close to the commercial operation date that the company was depending on, customers were depending on? You don't think that increases the risk to customers, to public service, that project's not going to be delivered for the project with the free walkaway?
I believe that it would be public service's responsibility to try to negotiate a project that's in the best interests of its customers. And to the degree it couldn't do that with a project that has the ability to walk away, it always has the opportunity to try to find another project early on in the process.
So your testimony is essentially we should allow any red lines to any contract, and if they can't deliver, then it becomes public service's problem, and public service should solve it. Isn't that right?
No, that's not what I said at all. I believe my testimony is pretty clear that I believe that specific limited red lines should be allowed to the model PPA, that there's certain terms that should not be changeable through a red line process.
So CIA is willing to agree to some kind of limited conforming bid policy? Is that your testimony?
I believe my testimony is that CIA would be comfortable with having certain terms and conditions not changeable. Those terms and conditions would be things such as, for example, price, online date, point of interconnection, term of the tenor of the agreement, but that bidders could provide red line to the model PPA, specific red line to the model PPA, not something such as to be determined during discussion, and that those would be provided as a part of the bid, and that public service would be able to review those during the initial evaluation of bids during the end of phase 1 or beginning of phase 2, however you want to characterize it.
And if in the situation where public service didn't agree to one of the red lines, should public service be able to reject that bid or disqualify that bid? Or should public service be forced to take the bid and model the bid?
I believe that public service would model the bid in the bid evaluation, consistent with the proposal that the bidder made.
So you could have public service. So coming back to kind of the example of the 500 megawatt wind project that's, got two commercially different terms, and maybe it's got different pricing based on the commercial terms and the red lines that were provided. Public service should just model both of those projects and let them compete against one another. Is that your testimony?
I don't think I understand your question. Could you repeat it?
I can. Yeah, I can rephrase to make it more clear. So bidders should be able to provide any kind of red line that they want to, and then public service should just model them through Encompass and pick the portfolio that is selected by Encompass on specific projects. Is that right? And it doesn't matter that the commercial terms underneath the different projects are deviate from one another.
Again, I don't think I already indicated that a certain limited amount of red line should be allowed associated with the bids that project developers would make, but that there would be certain terms that would not be changeable.
So with respect to the terms that would be changeable, you would agree with me, would you not, that it could create issues with respect to the comparability of those bids? They're not, you can't compare them apples to apples, isn't that true?
The evaluation of the bid prior to the 120-day, I'm sorry, the evaluation of the bids would be based on the proposals that the bidders make. And so that's what should be evaluated.
So if you had let's say a wind project let's say it's a $25 megawatt hour wind project with a free walkaway. Then you have a $30 a megawatt hour wind project that has to post security. Do you think those bids are comparable to one another from a risk perspective to customers?
I don't know.
Are you familiar with Rule 3616A in the Commission's ERP rules?
Objection
No, I'm
calls for a
not.
legal answer.
I'm not asking for a legal answer. I asked him if he knew what has seen the rule.
Oh.
Can we actually, why don't we just call it up? I think it's been entered into, or administrative notice was taken of it. Could we call up the Commission's rules and go to Rule 3616A?
Do you know
I
what
believe
exhibit that number?
I think it's 412. I'm like 85% confident in that number.
Yes, that's it.
And can we go to 3616 on page 136? Mr. Monson, can you see that Rule 3616A there?
Could you make it slightly larger, please?
I believe that we
Okay,
can.
I think I can see it now.
I'll give you a moment to read that and let me know when you're done. So this rule says that one of the reasons that we provide model contracts as part of the ERP is to enhance bid comparability. Isn't that true?
I was still reading, but I'll take your word for that.
Okay. Last couple questions on this. Were you listening when Mr. Pierce testified on behalf of COSA?
I was.
Okay. So if I want to talk about the same path forward that Mr. Eisenberg talked about with Mr. Pierce. So if Public Service puts forward a red line reflecting the changes from Mr. Bornhoffen's attachment, JLB2 and its SOP, can CIA commit to putting forward its own red line language as part of its statement of position?
I don't think that CIA would be able to do that for basically the same reason that Mr. Pierce indicated, that CIA represents a trade association and not a specific bidder, or that would be a counterparty to that contract.
All right. Thank you, Mr. Monson. I don't have anything further.
Commissioner Gumman.
Hi, Mr. Monson.
Hello.
I really just have one question for you, and it's regards to compensable curtailments and the differentiation in the tax gross up in what the way Public Service has proposed doing it, essentially giving kind of the average a gross up based on the average tax rate across the board and not actually changing the curtailment order based upon the actual value of the tax. Does that ring a bell for you?
I wasn't listening into the hearing. I'm sorry. I have sort of heard this secondhand, but that's about all I've heard.
Okay. Yeah, it's my understanding the current practice is that they actually rank in the dispatch stack by the actual cost or curtail, which includes the tax gross up based on the actual tax rate as described by whoever the owner of the unit is. And their proposal, so this would lead to the same units generally being first in the order to curtail and so on and so on. And they're proposing instead to use an average tax rate and no longer curtail in that specific order and essentially just provide everyone this sort of averaged generic tax gross up.
And that would be both for federal and state tax?
I guess so. I
Yeah.
think. I don't know if I know that.
I mean, I'm assuming everyone has the same federal tax, marginal tax rate. So that sort of makes sense to me.
So I just wanted to understand if you had any general kind of thoughts or feedback on that change. They had described it as sort of somewhat unfair wear and tear for those who are first in the order in getting curtailed more. So I just wanted to understand from your perspective if there are arguments for one method versus the other.
Well, so it is a bit of a tricky issue. Having different, a whole bunch of different generators, having just very, very slightly different costs of curtailment because although they probably all have similar federal tax rates, they might have slightly different state tax rates. And as a result of that, there would be different amounts they would end up different places in the dispatch stack. I think that is true. I think the challenge though is that if you are a bidder with a significantly, higher marginal tax rate than other bidders, and you're going to be in this kind of average price curtailment or compensation group and curtailment group, then you would have to somehow try to reflect that potential loss of revenue in your bid. This is certainly far better than getting no compensation at all, but there would still be, a bidder trying to figure out how much they think they're going to be curtailed and try to reflect that potential loss of revenue in their bid, and being in a situation where they don't really have a great sense of what that level of curtailment would be. It's a small effect, but it's probably a real effect. So those are kind of the trade-offs as I see it. I think it's probably a small effect, to be quite honest. But those are the trade-offs. Does that answer your question?
Yeah, just trying to get perspective on it, better understand what's going on and what the pros and cons are here.
Sure. Okay.
Awesome. That's my only question. Thank you.
Okay, happy to help.
Commissioner Plant?
I don't have any questions. Thanks.
Thanks, Commissioner Plant. Mr. Monson, I'm just going to ask the same question I asked Mr. Pierce. Given that we're looking to acquire thousands of megawatts in this process, that's likely going to require hundreds of bids. Assume this commission shares many of the company's concerns about giving individual developers the ability to propose their own project-specific contract terms regarding security, credit support, liquidated damages, notice and cure, default, termination, force majeure, etc. Wouldn't it be fairer, quicker, and simpler to just have every project bid to the same model PPA terms on these issues?
It's a real tricky issue, as I think you discussed with Mr. Pierce. In the last ERP proceeding, things went remarkably slowly, and they're still going on. And CIA recognizes that. And that was why we made a number of proposals in my testimony to try to speed up the process, recognizing that you don't want to be in the same situation 2 years from now that you're in the prior solicitation. That being said, I'm not 100% sure that the the types of red lines that are going to be proposed are going to be the real, the real cause of potential delay. From what I understand in the last solicitation, it wasn't just there was a lot of red line that was in fact encouraged by public service in its solicitation documents. And there were, I think, slow turns on contract revisions, contract changes. And so there was a number of issues that came up in that last solicitation. And so one of them, which I think I've addressed in my testimony, is that certain bidders put in place, they said, we'll discuss this when we, TBD on this provision. And we recognize that's a loser of a position. It's a bad idea to be able to allow that. And therefore, we think that by tightening up what bidders can put in as a red line, to have to be specific, to have to be clear about what proposals they have, that would speed the process up. But so I think that it would be it's probably not the best place to try to find economies on time.
But it's not just that. I mean, I don't even get how the company models two bids with different prices and different, force majeure, liquidated damage, notice and cure, default. I mean, how do they trade off between price and terms? It's just without apples to apples comparison, how do you even compare prices?
Yeah, I haven't been involved in the type of bid evaluation, so I couldn't really respond to that.
Assume this commission wanted to get a conforming model contract regarding all these terms we just discussed, which every bidder had to comply. Can you give me any advice about how we could get to a fair and balanced contract on these terms?
I believe that in my testimony, I suggested that if you're going to go down that road, then there should be sort of a separate phase or discussion associated with that's separate from this. Unfortunately, you've got a timeline that you're trying to operate under and a lot of potential resource need that's got to be met. But if you're going to try to hammer out something that parties can agree to, and parties meaning trying to get bidders involved in those discussions, there's going to have to be something separate than this proceeding where you've got trade associations trying to, recognizing that we can't really represent individual bidders.
Any, so say the company did file something in a couple weeks and the IPPs had 3 weeks to respond with comments to help us try and get to market. With some notice and comment process, say in the next month or two. Any thoughts on something like that?
That would be very, very difficult, I think. You would have to bring in a whole set of entities into the process that haven't necessarily been following along all that closely and try to get comments from them. And 2 to 3 weeks seems like it's just would be pretty tough to wrangle that large group of entities together because CIA can't make those recommendations. We can't make that recommendation as COSA, Mr. Pierce indicated.
So what's the alternative? The company files its model contract, the commission takes this record and tries to find the middle ground and then put that out to comment by all the parties in this case and then take it from there. Is that I mean, how move forward? And what we did last time didn't work really at all.
And I understand that. And that's why, again, we've been trying to, narrow down what are the types of things that can be offered by bidders in response. So, for example, we said certain number of projects under a specific bid fee, limit that. And it's a hard question. I agree with you that it's a difficult issue, but I have this feeling, and again, Mr. Pierce has been much more involved in the weeds on these model PPAs than I have. But I would be concerned that there may well be, strong bidders that decide to go find an opportunity somewhere else. And that probably is not to the benefit of ratepayers.
All right.
It's a lousy answer, I know, but it's
well, I'm not happy.
Yeah, I understand.
Mr. Detsky, redirect.
Thank you, Mr. Chair. Mr. Monson, you were asked some questions by Mr. Larson about comparability and apples to apples comparison with red lines. Do you recall that question?
Yes.
And is it hard to do apples to apples utility ownership bids versus power purchase agreement bids?
Well, if it's just a single utility that's making those proposals, it's but I think I'm not understanding your question.
When a utility makes a bid for its own project versus a PPA project, are there significant differences in how those projects can be compared apples to apples?
Yes, absolutely.
And when you were being asked about the conforming bid policy and you were trying to explain the nuances of CIA's position, can you explain the difference between CIA saying you have to bid to the RFP, but you can redline the model PPA?
Yes. So I mean, there's been this confusion in my mind about what the so-called conforming bid policy is. There's a model PPA is one part of the RFP, but there's a whole bunch of other parts of the RFP as well that bidders have to respond to. And CIEA has been clear, I hope, in my testimony and in our papers, that responding to the RFP, we believe that that's what the bidders have to do. And if they don't respond to the RFP as written, then public service has the opportunity to either rule them as non-conforming and send them off, or try to get them to change. But so bidders have to conform to the provisions of the RFP. The place that we're concerned about is with one portion of the RFP, which is the model PPA. And since that different companies have such different views of what's acceptable or unacceptable in that model PPA, we couldn't try to come up with red line or with changes to the model PPA as a trade organization.
And there was a discussion with Mr. Larson about whether public service could reject a bid. Did you testify that public service could reject a bid that seek to make changes to the RFP terms like pricing, etc.?
I indicated that if a bidder bids pricing and online date and point of interconnection and then tries to make a change during, say, contract negotiations, then public service would have the opportunity to go on to another bidder, and under CIA's proposal to have a short list of projects, then they would have readily available other projects that they could move to quickly.
The chairman asked you some questions about first about the delay in the CEP and how long it took to get things resolved. Did you testify regarding the major delay in PPA negotiations being the need for the delivery plan and repricing in the CEP?
That was a very big issue, in that we were in a truly, not unprecedented, but a very, very high inflationary period. And coupling that with the long period of time between when the bids were submitted and when negotiations were happening, that was a big issue. Yes.
And is that one reason why CIEA proposed its shortlist and best and final offer process, was to bring more certainty to that part of the process?
Right. So, unfortunately, in the quad party framework, the short list and best and final offer were not a part of that. But we think that that's a really important point, just recognizing that if it's going to be a year between the time that a bidder submits its bid and when they're going to be ordering equipment and such, a lot of things can happen. And we think that it's an unfortunate but true fact that things change over a year. And if your project is unviable because things have changed that are beyond your control, then that doesn't help anybody. And therefore, that's why we proposed this best and final offer process for bidders, not just in the preferred portfolio, but for everyone on the short list. And the reason we said we wanted everyone on the short list to provide their best and final offer is that that would create a competitive tension between the lucky bidders that are on the preferred portfolio and the other bidders that are just outside of that, but are still good, strong projects. That would control, it would provide a tension for parties to reprice realistically.
And just to the chairman's last question or last point about how do you evaluate where two bids are priced similarly but have different red lines? Did we also suggest about that shortlist time being a place to where the company could make choices based on different red lines?
Exactly. That's right. One of the things that I believe happened in the last solicitation was that there was a whole lot of discussion prior to selection of portfolios regarding red lines. And we think that that's a bad idea to have that discussion before the development of a short list. That does not in any way mean that public service can't review those red lines. And then once the commission adopts the preferred portfolio with the short list, with the other projects that would entail the entire short list, then public service can look and see, okay, which of these projects have unreasonable or have more onerous or less onerous red lines, and then pick the projects that they believe they should negotiate with first.
And last question, last two questions, Mr. Monson. Are you a expert in PPA redline negotiation?
That's not something that I spend any time on.
Did CIA have an expert in PPA redlining in this case?
No, we didn't.
Okay. Thank you, Mr. Munson. That's all I have as far as redirect. But Mr. Chairman, I do have one extra matter to discuss.
All right. Can I excuse Mr. Monson?
Yes.
Mr. Monson, you may be excused. Thank you for joining us, sir.
Thank you.
Mr. Detsky.
Thank you, Mr. Chair. At the outset, or in one of his first questions, Mr. Larson said something to the effect of that the company's withdrawal of the compensable curtailment position was conditioned upon acceptance of the conforming bid policy. That was not my understanding of Mr. Bornhofen's testimony, that they withdrew the claim and they didn't attach any conditions to it except for their claim about the federal marginal tax rate averaging that Commissioner Gilman asked Mr. Monson with. And so I would think that I think my request is that Mr. Larson's references to that be stricken from the record as not reflective of the company's testimony and position.
No, I don't think a motion to strike is appropriate, but it would be helpful to the record if the company would clarify its position. I agree with Mr. Detsky's characterization of Mr. Bornhofen's testimony, but I didn't hear you reverse that in your cross. But Mr. Larson, can the company clarify its position?
Yeah, my intention in posing the question to Mr. Monson was not to change the company's position. The company is going to withdraw its proposal to not compensate for foregone PTCs so long as the commission approves that change.
Ah,
Thank
thanks.
you. That's helpful.
Yeah, thank you.
Appreciate it.
Mr. Chair, while I'm on, we're going to waive Mr. Sanger for Interwest, and we may be the only cross-examination there. Sorry to jump ahead of you.
Yeah, just let me check, Commissioner Plant, Commissioner Gomez, are you all right going till 6 or 6:30 tonight? We still have, I think 7 hours of, cross left, and, I don't think we have anybody to go beyond tomorrow. So are you guys, willing to keep going?
I am, and I don't have anything for Sanger if you're
Okay.
interested.
I don't either.
I'm just gonna ask her the same, question, Ms. Whitman.
Oh, thank you, Chair Blank. Given that it's about 5 o'clock, I am curious as to whether you believe we will get to Wade Buchanan this evening, given that we've got about an hour or so of testimony left. If not, then he's on standby. I'm going to cut him loose.
You can cut him loose.
All right, and we will plan to have him available tomorrow morning.
Thank you.
Thank you very much.
Yep.
There, right now. My day is in the, but I'm sorry guys, but I got like 700 pages to do next week. So we'll do the rest of it from the tape. That's okay.
All right, thanks, Ms. Weisenthal.
All right, my hands are tied.
Mr. Sanger, can you hold up your right hand and come off mute? Do you swear to tell the truth, the whole truth, and nothing but the truth?
Yes, I do. Thank you.
You put your hand down. Is anybody with you or communicating with you in any way?
Not other than yourself, sir.
And if that changes, you'll let us know.
Yes.
Mr. Leger, if you can do this quick.
Thank you. Could you please state and spell your name for the record?
Yes, Irion Sanger. That's IRION SANGER.
And did you cause to be filed what has been entered into the record as exhibits 500 and 502 as your answer and cross-answer testimonies?
Yes.
Mr. Sanger is available for questions.
Just one question, which is the same one I asked the other IPP witnesses regarding security, credit support, LDs, notice and cure, default, termination, force majeure, all that. Do you think we can get to a conforming a model contract? And would you be willing to live with that? Any concerns, thoughts, guidance?
Yeah, so I heard there's a number of questions embedded in that. And one of those is this assumption that you need to have a pure apples to apples sort of comparison with a pro forma conforming contract. And what I'm hearing is that there's a view that might provide some difficulty in analyzing the results. So you get these different results. But what I see being recommended by the various independent power producer organizations is what is generally done in RFPs throughout the western part of the United States, which is that somebody submits a bid with a price attached to that bid based on the contract terms that they would obligate themselves to. So the utilities are very skilled at getting the different prices and evaluating ones that have different force majeure provisions, different security requirements. So the process that is being proposed in opposition to the conforming bid policy is fairly standard. That's what RFPs typically do. So trying to require everyone to submit a bid tied to a specific PPA form is unusual and unnecessary to be able to have the utility evaluate the different terms and conditions that come out of that RFP.
Are there form PPAs in this record? Do you know? Or form RFPs that sort of document that view of the world?
We have all the RFPs that we cite to. They're based on that form of analysis. I don't know if the RFPs themselves are in the record, but we can provide that information.
Yeah, I guess that would be helpful. What's the downside to making common terms on all those issues, and just then you get apples to apples bid, and it's easier to replicate. You don't spend 2 years trying to sort through this. It doesn't give a ton of discretion to the company. It's just, here's the terms. We all agree it's market. And I get there may be concerns where the utility is at now. What's the downside to just doing that? It seems to take a lot of risk, timing, discretion, fairness out of it. So why shouldn't we just do that? I mean, that seemed to be how. Well, go ahead.
So what you are addressing is a legitimate concern when you don't have something where you have fixed contract terms. And I talk about this in my testimony, where it can make a process a little bit longer, right? The things that you've articulated are legitimate concerns when people can edit the power purchase agreements in the bidding process. In my experience, that's always what is done. So having a locked-in conforming bid policy is very unusual. I think the risk is that you just get one apple out at the end, right? And the utility might not need just one apple. They might want something that's a little bit different or that provides a different type of value. I think that one place that a commission can go that can straddle this is you can identify what provisions that you can modify and what provisions you can't modify. And I think that one aspect that I think anybody's going to take from this whole process, let's assume you do not adopt a conforming bid policy, I think everyone's going to take away from this is that the utility here, public service company, wants to use a particular contract form. The commission, or at least the chair, has articulated a strong preference for there to be consistency in the contract forms and potentially adopting a conforming bid policy. If that's the case, then what bidders should be taking away from that, if you do not adopt a conforming bid policy, is this is the contract form that is desired by public service company. And people should be making adjustments that are not wholesale, complete redlining of it. And that's generally what you don't see that in other RFPs. And every other RFP that I'm involved in, the utility has its preferred contract. There's some litigation over the contract terms, and the regulatory commissions will decide some of those. They'll say, this is okay, this is not okay, but the vast majority they'll leave out for people to discuss. But bidders are going to start with that contract form. People aren't going to come into this RFP and say, I want to bring in the tri-state PPA, or I want to bring in the Pacificor PPA. What we're not talking about that level of change. What we're talking about is somebody making an adjustment saying, okay, the way our business works, we want to deliver at an 80% availability guarantee rather than a 90%, and we're willing to take an adjustment over here on the other part of the contract. So I think you can adopt a non-conforming bid policy, and a way to do that is for you to, a way for you to do that would be for you to go through and reject proposals or make some rulings on some of the key issues that are at stake here, so that there's fewer things that can be adjusted, and you can limit that. But I don't see how public service company is any different than the other utilities out there that have RFPs. And I think that they should be capable of balancing the RFP process and reviewing these bids. And as people have explained before, you are very likely to exclude low cost, lower risk resources. We're in a time in the United States when the United States is not a good market to invest your money in renewable energy. There are people that are looking outside of the country. Colorado is competing with the rest of the country, and there's a lot of contractual provisions in this contract which are far outside of the market. So you may not be getting the lowest cost, least risky bids if you force people to submit their bids to this particular contract form.
Last question. I hear that. Any advice about how to get to a more market set of terms and guidance?
Assuming you adopt or assuming you do not adopt a conforming bid policy?
Assuming we move strongly in that direction.
If you move strongly in the direction of a conforming bid policy, I think that what you have is I would adopt all the proposals by the various independent power producer organizations. And that would it would get rid of the low-hanging fruit. I do negotiations for contract negotiations all the time. That's one of the things that I do. And there's a lot of give and take in terms of what provision you're going to want someone to draft. So a dynamic that you've been talking about in terms of the trade associations coming up with their model PPA. One thing that's difficult with that is that one bidder might like a force majeure provision that's similar to what the company wants. Another bidder may not, but that bidder that likes their force majeure provision might have something else that they don't like, right? So it's really difficult to have a wide group of people with different business models come up with one particular form. But what I think you're hearing is that these are the provisions that are at most risk and most problematic. So if you're going to adopt a conforming bid approach, for each of the items that have been raised as a concern, either adopt the proposal that the Independent Power Producer Association has raised, adopt their position, or at least say that's a negotiable term. If you're not going to take my recommendation, that's the way I would suggest you go.
All right, Mr. Leger, redirect.
I have no redirect. Thank you.
Thank you, Mr. Sanger. Appreciate you.
Thanks.
Where are we? I guess the next witness I have is Ms. Miller. Is that right? Ms. Miller, can you hold up your right hand? Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
If you can put your hand down. Is anybody communicating or with you in any way?
No.
That changes, will you let us know?
Yes.
Mr. Gerhardt.
Ms. Miller's testimony is already in the record, so she is available for cross-examination.
Ms. Consilia, I have 25 minutes for you.
Thank you. Thank you, Mr. Chair. Excuse me, Ms. Miller, let me cough a minute. I don't think we've met before. My name is Frances Consilia, and I represent in this proceeding the City of Pueblo, the County of Pueblo, and Pueblo Economic Development Corporation. So good evening, and thank you for your flexibility in waiting for all of this.
Thank you.
You filed only cross-answer testimony in this case, correct?
Yes.
And you essentially have about 3 positions. Your first position is that the settlement agreement entered into in the 2021 CEP proceeding prohibits the addition of modeling credits or the CCFD approach, the carbon futures, correct?
I wouldn't say that I said the settlement agreement prohibited those things, but rather they seek to the reopening issues that were resolved in the settlement.
Okay. And so your position is that the settlement did not include those 2 items, and therefore it's improper to consider them in this just transition solicitation, correct?
Those 2 items seek to address issues that were addressed in the settlement agreement. And so this would be introducing new ways of resolving issues.
Okay. And then your third, or depending on how we're counting, argument is that my cross-examination of a vote solar witness waived the ability of my current clients to ask to have bonus credits considered or the CCFD, correct?
I wouldn't characterize my testimony like that. I believe that I stated there were some inconsistencies between parties who were on the settlement agreement and what is currently being proposed in this proceeding that was a result of the settlement agreement.
But you specifically referenced a cross-examination that I did of a vote solar witness as being an implied waiver of rights.
Your Honor, I'm going to object. The misstates the witness's testimony. The witness's testimony never uses the word waiver and never claims that there was a waiver of rights.
Can you rephrase, Ms. Consilia?
Well, Ms. Miller, what is your position with respect to the cross-examination that I did and how it bound my clients to a position?
Again, I don't believe that my testimony was seeking to bind any parties. I mean, we entered into the same settlement agreement, and I do think that that is what we collectively are bound to, the settlement agreement and the terms that we had agreed to. And so I was simply using the record to demonstrate what the conversation had been about around some key issues, including how we would incentivize resources to be located in communities and how we would have resources compete against each other, and using the transcript and other pieces of the record to illustrate that those issues were resolved. We had debate around them, and now some parties and the company are seeking to relitigate certain pieces of the settlement agreement.
Okay. And were you involved in the CEP proceeding? The 2021 case? Okay. So how much time did you spend putting together your cross-answer testimony and the exhibits?
I don't have an estimate in offhand.
A week?
Again, I don't have an estimate.
Now, how did you, and were you acting on behalf of NRDC or the Sierra Club or the two entities together when you put together your cross-answer testimony?
We are intervening together as the Conservation Coalition, and that is the testimony.
Okay. And is there a process whereby the Sierra Club and NRDC vet your testimony and then approve it?
I certainly have review between different staff members, and yeah.
And I believe you testified that had these terms, meaning the coal community bonus credits and the CCFD, been included in the settlement, that the Conservation Coalition would not have signed on to the non-unanimous settlement. Is that correct?
Correct.
And how did you arrive at that conclusion? Did you talk to supervisors or board members at NRDC or Conservation Sierra Club?
As the bonus credits and the CFFD are being proposed, we are opposed to them. And it's a bit of a hypothetical, but with our current opposition to it, we would have been likely opposed in the settlement.
Now, the purpose of the payment in lieu of taxes netted out for any investments in the 2021 settlement was to drive investments into the coal communities, correct?
Yes.
And your belief or position is that by not including a bonus credit component in that settlement agreement, it cannot now be added into this modeling proposal.
My position is that the settlement agreement offered very specific mechanism by which we would seek to incentivize resources to be located in coal communities. That is the offset of the property taxes and the community assistance payments. So that is a very specific mechanism. The bonus credits were never contemplated. They were never discussed or proposed in the settlement conversations or the settlement agreement or what was approved by the PUC. And yet it's an entirely different mechanism by which you would incentivize resources to be located in the coal communities. So it's reopening the issue that we believe was resolved in the settlement agreement and approved by the PUC.
And were you involved in the settlement negotiations or that case with Tri-State recently, their clean energy plan?
We are intervening in that proceeding as well, yes.
And were you personally involved in that proceeding?
Yes, I have been.
Okay. And in fact, the Conservation Coalition had no objection to bonus credits in that settlement agreement, correct?
I don't know if
I'm gonna object. The question assumes facts, not in evidence, and the tri-state settlement doesn't include bonus credits like the credits here, so it's assuming facts that don't exist.
If you could rephrase, Ms. Kinsey.
Are there any provisions for bonus credits in the settlement agreement with Tri-State?
Not that I'm recalling right now, but I would need to review that.
Okay. Is the Conservation Coalition objecting to bonus credits for coal communities? Is it a position of principle or policy?
There's the principle about the settlement agreement. It wasn't in the settlement agreement, and that's reopening that. And as I stated in my testimony, I think it's unfair to reopen certain provisions that some parties want to see now and not others. But primarily, we have three reasons for opposing the bonus credits. One, there's no evidence that they're needed to achieve the stated outcomes and that what we had agreed to in the settlement is insufficient. The second is that they're completely arbitrary numbers. There's been no quantitative study on the amounts or why those amounts would be necessary or why they were selected. The company has testified that they were done with scratch work, and we haven't seen any of that analysis. And then third, there's no analysis done on the impact of them. So the costs could be quite high, but we don't actually know because there hasn't been any modeling in phase one, and the company has said that they won't do it in phase two. So it's pushing the model to select more expensive resources that will come at a cost to customers. And we don't even have evidence that that is necessary or what it will result in.
You state in your testimony that in proceeding 24A-0442E, did Pueblo County's attorney imply that Piesco's ratepayers should not have to pay more money for just transition than what was included in the settlement agreement? Do you recall that?
Yes.
And so the implication that you claim is based on your interpretation of cross-examination in that proceeding, correct?
Yes.
Have you ever heard of anyone taking a position that a lawyer's cross-examination can imply a limitation on a settlement term?
As we were discussing at the beginning of this conversation, it was not my intent, nor do I think I said anywhere in my testimony that it would limit Pueblo's position. I was simply illustrating what the conversation had been around how we arrived at the tax offset, and I cited company testimony and other places as well. So I was drawing from the record to illustrate the decisions that were made at the time that created this proceeding.
Well, you quote from my cross-examination for about 2 pages, and you do use the word imply, correct?
Yes.
Okay. Now, in the 2021 proceeding, I was representing only Pueblo County, correct?
I will take your word for that.
Okay. And in this proceeding, I'm representing the city, the county, and Pueblo Economic Development Corporation, correct?
I understand.
So is it your position that when I was the lawyer for the county, I could in cross-examination imply that certain elements were going to be excluded from the settlement agreement?
I'm sorry, could you restate or repeat that last part?
So is it your testimony that I, as the attorney for Pueblo County, could imply that these bonus credits could not be included in this solicitation?
typically how cross-examination works is that you can cross.
Are you a lawyer?
Parties.
I know. Are you a lawyer, Ms. Miller?
I know.
Okay. So let's not talk. I don't need a lecture on cross-examination. So let me ask you again, if your testimony.
Your Honor, I'm gonna object. That's really not, that kind of editorializing, that's simply not appropriate. If Ms. Consilli has questions, she can ask questions, but those are not appropriate statements to be making.
I will move on, Your Honor.
Appreciate
Your
it.
statement was pretty clear. So how could I, as the lawyer for Pueblo County, impliedly limit what the city could ask for, whom I was not representing?
Your Honor, I'm going to object once again that Ms. Consilli is repeatedly mischaracterizing the witness's testimony, which never claimed Pueblo had waived legal rights. Instead, the witness pointed out inconsistencies between positions taken in the last case and positions taken in this case. So Ms. Consilli is welcome to ask the witness questions about her actual testimony, but not about things that the witness didn't testify to.
Let's pull up hearing exhibit 802, please. Page 15. And the question there that is in your testimony is, in proceeding number 21A-0441E, did Pueblo County oppose? Oh, I'm sorry, down at 11. In proceeding number 21A-141E, did Pueblo County's attorney imply that Piesco's ratepayers should not have to pay more money for just transition than what was included in the settlement agreement? And your answer is yes, and then you quote from the transcript, correct?
Yes.
So did that implication of ratepayers not having to pay more money than what was in the settlement agreement, did that also bind the city whom I was not representing at the time?
Again, I'm struggling with the word bind. That's not what I have put forward. I simply was looking at the record between what Pueblo County had agreed to in the settlement agreement and conversations that happened around very specific mechanisms for a just transition, and interpreted that as a disagreement with a witness who was asking for more provisions on just transition. And others might interpret that differently, but I think the record speaks for itself. I'm happy to walk through what I cited, but I believe you're presenting Pueblo County's opposition to the ask from Vote Solar for additional provisions on the just transition pieces.
Well, one of the things that Vote Solar asked for, and Ms. Carisco had never been to Pueblo, was my recollection, but one of the things that they were recommending is that there be an economic development fund set up, and Pueblo already had one. Do you recall reading that in the transcript?
Yes.
Okay. So did you listen to the testimony of Mr. Mendisco from Hayden earlier this afternoon?
I caught some of it.
Okay. And did you catch the part about how desperate that community is, and they're concerned about the loss of the coal jobs and how they just cannot develop other commercial businesses that are going to replace the tax base of the jobs?
I understand the general concerns from the community.
And if in fact bidding on these projects, well, let me step back. If in fact the lack of bonus credits is going to reduce the chances of these projects being built in coal communities, would you still oppose them?
As they have been proposed, we urge the commission to reject them. We haven't seen evidence that they're needed, and so I would like to see that analysis. I think it would be interesting and important to have that analysis of whether or not the mechanism that we had agreed to in the settlement agreement for offsetting tax payments is sufficient or not. I don't have reason to believe that it's not, and I haven't seen anything from the company. And these numbers that the company is presenting are, as I mentioned, completely arbitrary. So I think having some analysis would be very helpful.
If I can have you call up from my exhibit box here. Exhibit 1223 and hearing exhibit 1224. Let me ask you, Ms. Miller, are you aware that Public Service had laid out to a large group of stakeholder the concept of these just transition bonus credits?
Sorry, could you repeat the question?
Were you aware as to whether or not Public Service laid out last year the possibility of these bonus credits being included in this just transition solicitation?
I don't recall the stakeholdering that went into it.
Okay. What's in front of you is hearing exhibit 1223. And if you can scroll down, please. This is an email from Mr. Piscucci to a number of people, including Mr. Gerhardt. Do you see that?
I see the email.
Okay. And if we can pull up hearing exhibit 1224. Do you see this now? If we go through page 1 is just transition benefits modeling, and that was at $3 a megawatt hour, correct? You see that?
See where it says that, yes.
Okay, and can we go down to page 2, please? Which is the workforce commitment, page 3. So, assuming that I'm correct, that Mr. Gerhardt and the Conservation Coalition got a copy of this exhibit and did not object to this potential bid credit, can we say that
Your
Mr.
Honor,
Gerhardt
I'm going to object. The question assumes facts, not an evidence. She's asking the witness about whether I received a copy of this and whether I objected. And for one, I can tell you that we did oppose this when Public Service alerted us to it, but it's not obviously not appropriate to ask the witness about whether I, as an attorney, received this document and my position on this document. So
I just want to ask Ms. Miller if she believes that you impliedly had no objection to this.
Can you yeah, go ahead, Ms. Miller.
I don't know what the conversations were around that. I would just point out that I don't think that that is how you change a settlement agreement through email conversations. I know various other parties have opposed these issues. There were recommended changes. I don't know the full count of who was on the settlement agreement or not, but we were on the settlement and we don't support the bonus credits.
I have no further questions.
Thank you, Ms. Consilia. Commissioner Goman, questions for Ms. Miller?
I think Mr. Larson wants to go.
Oh.
Yeah, Mr. Chair, I believe we had moved some time around in the final cross. I think we only have 5 or 10 minutes.
I missed that. Mr. Larson.
Apologies. It'll be brief. Good evening, Ms. Miller.
Hello.
It's nice to see you again. I'm Matt Larson on behalf of Public Service.
Good to see you.
And I want to talk a little bit actually about the bonus credits, and then I also want to talk about CFFD, carbon-free future development. So in your cross-answer testimony, hearing exhibit 802, you call the just transition bonus credits, this is a quote, an entirely different mechanism for incentivizing resources in certain communities, end quote, than approaches in the updated settlement agreement, correct?
Yes.
And the updated settlement agreement, which Conservation Coalition supported, includes payments in lieu of property taxes for just transition communities. Isn't that true?
Yes.
And you all support that approach. Isn't that true?
Yes.
And when you say entirely different, you're not insinuating that the bonus credits take the place of the payments, are you?
No, my understanding is that there would still be payments. Yes.
So any replacement generation in the community can offset those community assistance payments under the settlement. Isn't that true?
Yes.
And if just transition bonus credits happen to drive a resource into a community, that same offset would apply. Isn't that true?
Yes, the offset would still apply.
And that the offset applies regardless of whether the bonus credit is the dispositive factor in driving the resource into the community or if it's not. Isn't that true?
Yes.
So the bonus credits are additive to the term in a settlement agreement. Isn't that true?
Yes, they are an additional mechanism to drive investment in a community.
But they don't obviate the other mechanism that's in the settlement agreement in any way. Isn't that true?
That's my understanding.
Flipping over to carbon-free future development, and also in your cross answer, you take the position that the carbon-free future development approach, or CFFD, conflicts with the requirement that the JTS be an all-source competitive solicitation. Isn't that true?
Yes.
And are you familiar? I don't know if you've been watching all of this hearing. It's been lengthy, but are you familiar with the JTS Phase 2 framework that the company has worked on with staff and CIA and now Colorado Energy Office?
Conceptually, not in all the details.
And the JTS base RFP is an all-source solicitation. Isn't that true?
Yes.
And the JTS supplemental RFP is an all-source solicitation. Isn't that true?
Yes.
So there are two all-source solicitations in this JTS. Isn't that true?
Yes.
And the CFFD rolling approach that the company has proposed operates completely outside of those all-source solicitations. Isn't that true?
Yes.
Thank you, Mr. Chair. Thank you, Ms. Miller. Nothing further.
Thank you, Mr. Larson. Commissioner Gelman.
I don't have any questions. Thanks.
Commissioner Plant. Oh,
Sorry, I don't have any questions either. Thanks.
nor do I. Mr. Gerhardt, redirect.
Sure, just a few questions. So on the CFFD, you're asked a few questions about that by Mr. Larson. Do you recall that?
Yes.
Can you explain your concern about how you think the CFFD is inconsistent with the language in the settlement about all source solicitations?
Sure. So my understanding of the proposed fund is that it would fund certain types of technologies and not others. So other resources wouldn't be able to compete against the specified technologies. So it is not all source. It's for a limited set of technologies, which are also speculative, pretty risky at this point, and pretty expensive. So I think it's a big risk to customers.
And Mr. Larson asked you questions about the JTS bonus credits being proposed in this case, whether they are additive and separate from the modeling property tax offset approach in the last ERP settlement. Do you recall those questions?
Yes.
Okay. And is part of your concern the fact that they are additive and separate, that there's been no showing made by the company that the property tax offset approach in the settlement is insufficient?
Precisely, yes.
Okay. And so if there were a portfolio that didn't include the new JTS bonus credits, it would still include the mechanism from the prior settlement to incentivize resources in coal communities.
yes, it would still allow for the property tax offset to reduce the total cost for the company to incentivize the resource to locate in those communities.
Okay. And one last question, Ms. Miller. So what are you recommending the commission decide with respect to the JTS bonus credits proposed here?
Our primary recommendation is to reject them. As we've discussed, there's no evidence that there's needed. The money dollar amounts that are dedicated for them are arbitrary, and we haven't had any analysis on what impact it will have for cost or resources. At a minimum, we'd like to see them modeled with portfolios without them, so that we can know what are some of those impacts to rates and resources and cost.
Thank you. I have no further questions, Mr. Chair.
Ms. Miller, thanks for joining us. You may be excused. I think we'll do one more witness, Mr. Jameson Valdez, and then we'll call it a night. Mr. Leger.
Apologies. I hope this doesn't take more than a minute, but going over my notes in your discussion with our witness, Irene Sanger, would you like to put into the record all of the RFPs cited in his answer testimony? Or, I mean, to guide your decision on this, they're likely very voluminous, so I don't know if they're really that useful to you, and they are already all linked within Exhibit 500. But we'd be happy to do whatever way you'd like us to do that.
I think the links are enough. So thank you.
Thank you.
Mr. Hyatt, Mr. Valdez, can you hold up your right hand? And take it. Yeah, there you go. Do you swear to tell the truth, the whole truth, and nothing but the truth?
I do.
You can put your hand down. Is anybody with you or communicating with you in any way?
No, sir.
If that changes, will you let us know?
I will, yes.
All right. Back to council.
Thank you, Mr. Chair. Good evening, Mr. Valdez. Can you please state and spell your name for the record?
Yes, my name is Jameson Valdez, Jamison Valdez.
Are you testifying on behalf of the Environmental Justice Coalition?
Yes, I am.
Who are you employed by and in what capacity?
I'm employed by Roots to Resilience as the executive director.
And is Roots to Resilience one of the nonprofit organizations in the Environmental Justice Coalition?
Yes, it is.
Great. Mr. Valdez's pre-filed testimony has already been admitted into evidence, and he's available for cross-examination.
Ms. Kinsella, it's 5:38 and you got 20 minutes.
Okay, well, hopefully I'll make it shorter than that because I know everybody's anxious to leave. It's been a very long day. Hello, Mr. Valdez. How are you doing today? We haven't seen each other for a while.
I'm good, thanks. How are you doing?
We are all tired. We've been doing this since 7:30 this morning, Mr. Valdez. I hope you haven't been waiting for us that long.
I definitely have been checking in very often.
I want to discuss with you, Mr. Valdez, your very passionate objection to new natural gas plant in Pueblo, or even the possibility of discussing advanced nuclear. So that's what we're going to talk about a little. And then have you've attached the Pueblo Innovative Energy Solutions Advisory Committee report to your testimony, and I'd also attached it to Mr. Shaw's testimony. I'm assuming you have read it?
I have, yes.
Okay. And did you read any of the presentations that Public Service posted on their website about the things that were considered?
I don't think so, no.
Okay. Now you object to the approach that was taken in the PISAC report, is that correct?
Yes.
Okay. Let's talk about first who was involved in the PISAC report. And we just trying to get here to make sure my memory is. Mr. Jeff Shaw, who proffered this as part of his testimony, he was involved. Did you think Mr. Shaw was not an adequate representative for the community being involved?
I point out in my testimony that the PISAC committee represented mostly business interests in Pueblo, including, I include Mr. Shaw as a business interest since he represents Pueblo Economic Development Corporation.
And Corinne Kohler was a co-chair. Do you regard her as a business representative?
I'm not familiar with
Okay.
her.
You're not aware that she was on city council and she's been active in historic preservation?
I was not.
Okay. And Jerry Bella from the regional manager for the International Electrical Association, he was a representative on the committee. Did you object to Mr. Bella's involvement?
I don't believe I objected to anyone's involvement. What I objected to was the lack of involvement from certain voices of the community.
You believe, though, that the committee was primarily business interests, correct?
I would say, yeah, that's pretty accurate.
And Mr. Bella, as a member in leadership of the IBEW, that's not representative of the business interest, do you think?
Yeah, I would say yes. The IBEW is represents workers. I mean, and oftentimes the workers represent the corporation for which they work, as well as the union.
Do you believe that Sarah Blackhurst, who's head of Action Colorado, is a representative of the business interests?
Yes.
And why is that?
Because I don't know her very well, but what I do know of her has all been as the CEO of various organizations or corporations.
And Russell DeSalvo, who's head of the Pueblo Puebloplex, do you regard him as being a business interest?
To some degree, definitely not environmental justice voice community.
And Patty Herjavec, who was until recently head of Pueblo Community College, do you regard her as also being a business interest?
Yes, insofar as education is a type of business.
And Dennis Mays, the former district court judge from Pueblo, who now serves on the District 60 school board, do you regard Judge Mays as being a representative of the business interests?
Not necessarily. Again, I said mostly.
Okay. And what about Dr. Matei, who at that time was president of CSU Pueblo? Is he a representative of the business interests?
I'm not familiar with him, but again, I said mostly.
Okay. And Dwayne Nava, who is head of the Pueblo Chamber of Commerce, do you regard Dwayne as a representative of the business interests?
As a head of the Chamber of Commerce, absolutely.
Okay. And what about Chris Weissman, who's a former county commissioner?
My understanding is that Chris, former Commissioner Wiseman, was also a businessman prior to being county commissioner.
Well, he was executive director of the state fair, correct? Is that a business interest?
I would say yes.
Okay.
Definitely focused on commerce.
Now, one of the things that the PISAC committee did was there was community outreach. There were meetings at church. There were focus groups. Did you attend any of those?
Go ahead, Jack, Mr. Chair. This question assumes facts, not in evidence.
You can restate, Ms. Kinsuya.
Are you aware of whether or not the PISAC committee had outreach to various community members?
Yes.
And what is your understanding what that outreach was?
There was at least one focus group, and from what I read in the PISAC report, there were and I know there were a couple of open house events, and I know from the PISAC report that there were also some I don't remember what other type of outreach right now, to be honest. I guess all I'm aware of is the focus group I participated in and the two open houses I attended.
And do you object, Mr. Valdez, to the report or the lack of involvement of somebody from what you call the environmental justice community?
Yes.
I'm sorry, do you object to both of those things, or?
I'm sorry, can you repeat the question?
Sure, it was a confusing question. I asked it in multiple parts. I apologize. Did you object to any of the substance in the report?
I did, yes.
And what was that?
The analysis of what energy generation resources would be best for our community.
Now, back in 2021, Pueblo County had a nuclear town hall. Do you remember that?
I do.
And did you attend that?
No, to my understanding, it was invitation only.
All right. How did you hear about it?
I heard about it after the fact by a friend of mine who attended it.
Okay. And I'm sorry, I didn't mean to interrupt you.
A friend of mine who attended it by invitation.
Okay. And did you, now shortly after that, in fact, in January of 2022, Chris Wiseman put together an energy committee to discuss the kinds of energy that would be replacing Comanche. You recall that?
I do.
And you were asked to be a member of that committee, correct?
Correct.
And that committee only had 2 meetings, is that correct?
To the best of my recollection, yes.
And Chris Weissman hired a professional facilitator to run the meeting. Recall that?
I think so, yes.
And there was no agreement on format or purpose, and so the committee was disbanded after 2 meetings. Is that correct?
Yes, that's what I remember.
And isn't one of the reasons it was disbanded, Mr. Valdez, is because you refused to even discuss the possibility of having advanced nuclear or a new natural gas plant in the community?
No.
So what is your understanding about why it was disbanded?
Just like you just said, there was no agreement on the agenda, the purpose, the direction of the committee.
Okay. So even though former Commissioner Wiseman was hoping to dedicate the following year, the committee disbanded after 2 meetings, correct?
Objection,
Correct.
Mr. Chair. Again, this question assumes facts, not evidence about Mr. Wiseman's intention. This committee.
You could rephrase, Ms. Concelia.
Well, let me actually get an exhibit up. If we can go to my exhibit box and pull up exhibit 1222. This is an article from the Chieftain that's dated November 5th, 2021. It says Pueblo County Commissioner to evaluate Comanche plant replacements through Energy Board. Did you read this article about the time in November?
I don't remember this article. It doesn't look familiar.
Well, Mr. Weissman says here, we're going to be looking at every energy source that possible from what we're doing here in Pueblo County on solar, and he lays out some other things. Is that your understanding what he was trying to do with his energy committee?
Objection, Mr. Chair. Ms. Concelia has not laid a proper foundation for this exhibit. Mr. Valdez has not reviewed it. She's not moved it into evidence. I think it's improper to be asking substantive questions at this point about this exhibit.
Overruled. I think she's in the process of trying to lay a foundation, and if she moves to admit it, we'll see where we're at. So keep going, Ms. Concelia.
Thank you. If you can scroll down a bit, it says, we're going to be looking at every energy source possible. And then he mentions green hydrogen. Was that your understanding of what the committee was to look at when it commenced its meetings the following year?
Yes.
Okay.
Basic terms, yes.
If we go down a little further, Mr. Weissman, then Commissioner, said he absolutely plans on involving those who oppose nuclear energy as well as who consider it a viable option on the energy board. And so you were asked to participate because Mr. Weissman knew you opposed nuclear energy, correct?
I'm not sure exactly why he asked me to. He never gave a reason.
At any time in those committee meetings, did you accuse former workers or current workers of public service of being murderers?
No.
Did you accuse public service workers, including people who worked at the plant, of being colonialists?
No.
So what is your understanding of why the committee shut down after only 2 meetings?
I think I answered that already because there was a lack of agreement on the direction of the committee, the agenda of the committee, the purpose, etc.
All right, you can take that down. So other than there was no member from the environmental community, or I'm sorry, the environmental justice community on that committee of PISAC, what are the other things that you object to in the PISAC report?
Well, first of all, as far as the composition of the committee, it wasn't just environmental justice groups that I testified that were absent from the community. It was also experts on public health and, oddly enough, energy. I think that's exactly how I put it.
Okay. So looking through the PISAC report, you think that there was no expertise on energy in there?
And by that, I mean energy generation, transmission, the process.
So did you use the website and look at any of the presentations that were made?
I did look at the website. I don't remember if I looked at any presentations.
Okay. If we could now look at hearing exhibit 1214. Mr. Valdez, I will represent to you that what I've done here is taken all of the presentations off of the public service website and put them into one PDF and wanted to go through a few things with you. If we go to, give me just a moment, I'm going to pull up my version so I can go through it more quickly. Do you remember looking at the first presentation that was done?
I don't remember which presentations I did or didn't look at this point. It's been a long time since.
Well, let's look at page 52. There was a discussion of introduction to effective load carrying capability. Do you see that?
Yeah.
Would you agree with me that this is a sort of first step in understanding energy generation?
Not real sure. I don't know what I'm looking at, to be honest. I don't know
Okay.
what any of.
Let's look at page 66. There was a presentation about energy generation and energy storage, and if we look at the next few pages, scroll down, please, there were definitions provided to the group. And then there was, we scroll down again, initial technology screening. Isn't this the sort of thing that provides people with a background in energy generation?
I object, Mr. Chair. Similar to my prior objection for this exhibit, Ms. Consilia has not laid a proper foundation. It's a 326-page exhibit, apparently, which Mr. Valdez has said he's not sure if he was at these presentations. And by asking substantive questions without actually laying a foundation or asking for admission of the exhibit, I think it's an improper use of an exhibit again.
Well, it's my understanding that what Mr. Valdez has said is that nobody on that there were no presentations that would educate the committee to understand different kinds of energy generation. And this has been on a publicly available website. He said he's looked at some of it.
Not say that. That's not what I said.
The objections overruled, and this it sounds like this is being offered as evidence of a presentation, not for the accuracy of the substance of the presentation. So you can keep going, Ms. Consilia.
So let's look at page 72.
You can go through all these different pages. What I'll say is I've had a lot of presentations on different various types of energy too. I wouldn't say that makes me an expert on the matter.
Okay. And do you understand that a number of people who presented to the committee were experts on energy generation?
I do, but they were not members of the committee. My objection was that there were no members of the committee who are experts in energy or public health or environmental justice.
All right. Now, can we agree that the community has been changing in terms of its support for 100% renewable energy?
I don't know that I would agree with that, no.
Well, when you were with the Sierra Club, how long were you with the Colorado chapter of the Sierra Club, sir?
Altogether, about 5 years.
Okay. And during what period of time was that?
2015 through roughly late 2019.
Okay. And was that a paid position or were you a volunteer?
I'm strictly a volunteer.
Okay. And in about 2017, you, Mr. Valdez, were instrumental, along with Terry Hart, of getting both the city and the county to pass a resolution of 100% renewable energy, correct?
I don't remember if Terry Hart was a part of that effort, but I was.
Okay, well, if you want to take credit for it, that's fine. And since that time, the county has repealed that resolution and adopted an all clean energy vision, correct?
Objection, Mr. Chair. Ms. Consilia is testifying, assuming facts, not in evidence. There's nothing in this record about the local government action she's referring to.
I'm just asking if he knows, Your Honor.
Yeah, overruled, but we are getting close to the 20 minutes, Ms. Consilia, but the objection's overruled and the witness can answer.
County adopted the same resolution that the city adopted in 2017, but the county did it in 2018. In 2021, yes, the county did go back in and change the renewable energy resolution to a quote, clean energy resolution.
And last year, the city repealed its 100% renewable energy resolution completely, correct?
I think that was earlier this year, but yeah, I agree that they would build it.
And one of the reasons that the mayor led that effort was because she concluded it was just too expensive.
Yeah, so that was her opinion, but yes.
Okay. Now, are you aware that part of what the PISAC committee did was there was a poll conducted to determine support in the community for different kinds of energy resources?
I am.
Yes?
Yes.
I'm sorry, okay. And it was the Keating Company that did that poll, correct?
Yes.
And it's referenced actually in the PISAC report. And it indicated that 65% of the community, once they understood jobs and tax base, were supportive of advanced nuclear, correct?
Correct.
And did you look at the presentations that were done to the PISAC committee from the Keating report? Did you actually look at that detail?
I may have, I don't remember the details of it.
Okay. Mr. Chairman, what I would like to do is to move the introduction of this exhibit, and I would have no further questions of Mr. Valdez.
Mr. Hyatt?
I will renew the objection I made earlier. Mr. Valdez explained that he wasn't aware. If he saw his presentations, but not even seen the entire 326-page exhibit. I don't know actually what's in that exhibit. I just think there's no foundation to move that into evidence.
Ms. Cantia, do you have a response?
Well, Mr. Valdez has indicated that he did look at some of the presentations on the website. They've been publicly available. This is the data and information that the PISAC committee used to issue its final report. And I think it's relevant to give the commissioners a sense of the in-depth analysis and the work that was done by this committee.
I guess, Mr. Hyatt, I take your point about the lack of a foundation, but I think the commissioners and the parties can attach the weight it deserves, especially given how it was brought before us. So I'll overrule and allow this to be admitted into evidence. But Commissioner Gilman, any questions for Mr. Valdez?
No, I don't have any questions. Thanks.
Commissioner Plant?
I don't have any questions either.
Nor do I. Mr. Hyatt, redirect?
I'm going to save us time. I have no redirect for Mr. Valdez.
Okay. Mr. Valdez, you may be excused.
Thank you.
Thanks. I guess let's call it a night. Any final matters, Mr. Larson?
I just want to confirm, is a 7:30 start time tomorrow, Mr. Chair?
That seems a little too early. How about 8?
Okay. 8? We can do 8.
Commissioner Gilman, Commissioner Plant, would you be willing to do 8?
Sure.
I agree. It's an improvement over 7:30.
All right. Anything else before we break for the night? We'll start with Mr. Buchanan, Ms. Villard, and keep going from there. So see everybody at 8 a.m. tomorrow. Thanks and have a good night.